Alright friends, so let's start with a new chapter that is called as income from salaries. This is the first official head that we have to study. This is the, as per the order, this is the first head under income tax law. So, when we discuss the basic concepts, I've told you that if an income forms part of scope of total income, the next thing that you have to do is you have to take those exempted income from the scope and remove it. Hope you remember. From the scope of total income, what you need to do is you need to take the exempted incomes and you need to remove it. Then the next thing to do is you need to bifurcate the income in the scope of total income to different heads. So the first head is income from salary. So friends, you tell me when an income will be assessed under the head salaries. If an income is on account of employer-employee relationship, then that income have to be assessed under the head salaries. If you have been receiving an income on account of employer-employee relationship, then you have to bifurcate that particular income mandatorily under the head salaries. So we can write that point first. So income taxable under salary head if it is due to employer employee relationship. So whatever income that you are receiving on account of employer employee relationship have to be assessed under the head salary. In salary, the charging section is section 15. In salary, charging section is section 15. After 15, we have section 16, that is deductions. Alright, then charging section says if you are receiving an income on account of employer-employee relationship, that income have to be assessed under the head salaries. Now, there are a few things that you should consider. Number one, say I am a working partner of a partnership firm. Please listen, I am a working partner of a partnership firm and I am receiving remuneration from the partnership firm. Is that remuneration taxable under the head salaries? The answer is no. Why? Even though I am a working partner, even though I am getting a remuneration from the partnership firm, I am not the employee of that partnership firm. Even though the payment which I am receiving can be called a salary, I am not an employee of my own partnership firm, I am one of the owners. So there is employer-employee relationship missing. So what to do? If you are receiving a remuneration from a partnership firm, that have to be assessed under PGBP under section 28. When we discuss PGBP, that will be covered under section 28. So what they are saying is, if you are receiving a remuneration from a partnership firm, being a working partner, that remuneration is never accessible under the head salaries. It will be assessed under PGBP. Why? Because there is no employer-employee relationship. Now next thing, say I am a director of a company and I am receiving remuneration from the company. Is it taxable under the head salaries? Not always, that's what I can say. All directors are not the employees of a companies. If you are an employee director, like a whole-time director or a managing director, then that income will be accessible under the head salaries, otherwise not. Say for example, an independent director is never an employee of company. So all the remuneration given to an independent director will be never assessed under the head salaries. So for assessing an income under the head salaries, employer-employee relationship is mandatory. Now, next point is, when is a salary, what is the year of taxation of salary? What is the year of taxation? What do you mean by year of taxation? In which year salary has to be taxed? The act says either on due or receipt, whichever is earlier. So the taxation of salary is on the basis of due or receipt, whichever is earlier. Say this year, if my salary is getting due, then definitely irrespective of its receipt, that salary is taxable in this year itself. If I am getting complete advance of salary, next month's complete next year's salary or next 2 months salary as an advance this month, then definitely it is taxable in the year of receipt itself. Are you all with me? So salary will be taxed in a year either due basis or receipt basis, whichever happens earlier, whichever happens first. then definitely it will be taxable. Then there is a concept called surrender of salary. Surrender of salary. So friends, the point is, once salary is due, listen, once salary is due, then irrespective of the fact that you are collecting the salary or not, you are supposed to pay taxes. Say for example, salary is due and you are saying, I don't want my salary. You are saying to the employer that you take my salary. I don't want my salary. Or you give that salary, give my salary to some charity work. You give my salary to some poor people for some charity work. Utilize it. Doesn't matter. Once it is due, you are supposed to pay taxes, irrespective of whether you are directly receiving it or not. Are you with me? For that, there is an exception. There is a concept called surrender of salary. That's what we are about to discuss. Listen, if employees surrenders their salary to central government in accordance with voluntary surrender of salaries. Voluntary surrender of salaries. Voluntary surrender of salaries. Then salary so surrendered. Then salary so surrendered shall not be taxable. Shall not be taxable. This is the only exception to the salary due where it is not taxable case. So listen, you are surrendering your salary in accordance with voluntary surrender of salaries. Voluntary surrender of salaries act. There is one word missing here. Voluntary surrender of salaries act. Okay. Act. Then the salary so surrendered shall not be taxable. There is an act called Voluntary Surrender of Salary Exemption from Taxation 1961 Act. If you are voluntarily surrendering your salary to the central government according to the Voluntary Surrender of Salaries Act, then there is no income tax implication for you. Otherwise, it will be always taxable once it is due. Are you with me? Whether you are foregoing your salary. What do you mean by foregoing your salary? You are saying to your employer that I don't want my salary. It is due. Thereafter you are saying I don't want my salary. If at the time of employment itself you are saying I don't want any salary, then it is altogether different. Are you with me? Say for example, your employer promised 1 lakh rupees per month as salary. After a month, after completing that 1 month, you are saying I don't want salary. Then it is already due and you are supposed to pay the taxes. Initially itself you are saying I don't want any salary. You give all my salary to someone else. I don't want any salary. Then employer is not giving you any salary. It is not due. Then it is altogether different. Once it is due and you are foregoing, that doesn't relieve you from income tax implication. You must pay the taxes for the salary due. I hope it is clear. Now, next point. So, next point, friends, salary. Let's discuss the elements of salary. What do you mean by elements or components of salary? Salary means basic, then bonus, DA, then perquisites, allowances, TA, etc., etc. Yes or no? So what they are saying is the first component of salary we will consider allowances first. Then we will discuss about other components as well. So let's start with the first component of salary, that is called as allowances. So we can write components of salary. Components of salary. Under that, the first element is allowances. Allowances. Allowances can be splitted into three. We can split allowances into three. Fully exempted allowances, partly taxable allowances, fully taxable allowances. Fully exempted allowances, Then number 2, partly taxable allowances, or we can say partly exempted allowances as well. Both are right. Partly exempted means partly taxable. Partly taxable means partly exempted. So both are right. Or finally, fully taxable allowances. And there is a shortcut to study this. You study fully exempted and partly taxable. All other allowances are fully taxable. You study fully exempted and partly taxable. All others are fully taxable. It is as easy as that. Now let's understand what are the fully exempted allowances first. These are small items. There are only few items under fully exempted allowances. Number 1, under fully exempted allowances, number 1, allowances. Allowances to High Court judges. You're paying any allowances to High Court judges, it is fully exempted in the hands of the judge. Number 2, allowances paid by UN, United Nations. Say you are an employee of United Nations and they are paying you some allowances. That is fully exempted. You don't need to pay any taxes in India. So United Nations have nodal offices in India or project offices in India. So you are one of the employees who is working as a part of that particular project office and they are paying you some allowance, fully exempted. You don't need to show it as your taxable salary. You can claim full exemption. Point number 3, compensatory allowances. Compensatory allowances received by judge. Judges are in receipt of compensatory allowances because they need to conduct commissions, they need to go travel, etc. So for that they are receiving compensatory allowances, fully exempted. But by whatever judges, district judge, high court judge, supreme court judge, whatever judge you are, doesn't matter if you are receipt of compensatory allowances, fully exempted. Point number 4, sumptuary allowances. Sumptuary allowances to High Court or Supreme Court judges. To High Court or Supreme Court judges. What do you mean by sumptuary allowances? It is like allowance paid to certain persons who are in honorary post. What is honorary post? Say for example, Prime Minister, Chief Justice. So those persons who are getting sumptuary allowances. Allowance where you are in a honorable post, you will get this particular special allowance. Though this sumptuary allowance is fully exempted in the hands of both Supreme Court and High Court judges. Then next one, 5th one, allowances granted to government employees. Government employees outside India. Hope you remember this, 10 subsection 7, which we have discussed in the last flow chart. Residency status and scope of total income, we have discussed 10 subsection 7 as a part of exemption in the flow chart itself. So that is this point. So these are the 5 allowances which are fully exempt in the hands of the persons. These 5 allowances will never be taxable as salaries, fully exempted. Fully exempted allowances. Now let's discuss the partly exempted allowances. There are only 2 categories. But there are a few more items. So partly exempted allowances, partly taxable or partly exempted, both are right. So under partly taxable allowances, what you can write is number 1, house rent allowance. House rent allowance, which is important. I am writing important only on house rent allowance. That doesn't mean you can skip others, okay? That doesn't mean you can skip others. I have written it important. Why? Because house rent allowance they have tested many times. They have tested others also. That's why I am considering or discussing it in the classes. So house rent allowance, which is under section 1013A. And number 2, there is one more item, that is special allowances. Special allowances under section 1014, clause 1 and clause 2. 1014, clause 1 and clause 2. These are the partly taxable allowances. All other allowances, are fully taxable. All other allowances are fully taxable. Apart from these two, whatever allowance you are in receipt of, it will be fully taxable in your hands. That's what they say. First of all, let me ask you one question. This I have to ask initially itself. What do you mean by allowance? I should ask you this before writing this flowchart itself. I should ask you this. What is allowance? A fixed monthly sum given by the employer to the employee, irrespective of actual expenditure incurred by the employee. Say for example, house rent allowance. I don't know, you are my employees. I don't know whether you are staying in your rented house or your owned house. I'll be least bothered. I'll give you some amount every month. Are you all with me? I'll give you some amount every month. You can pay your house rent or you can stay at your own home. Maybe your house rent will be high, maybe low, maybe zero house rent. Doesn't matter. I'll give you maximum this amount. That's said to be what? House rent allowances. Fixed monthly sum payable by the employer to the employee to meet his expenditure. Now let's write a working note on this house rent allowance first. Let's write a working note on this house rent allowance. So under that we can write house rent allowance. House rent allowance, which is under section 1013A. All right, listen. What do you mean by house rent allowance? As I've told you, every month your employer will give you a fixed money or fixed sum. You can make use of that money to pay your rent or you can save it. It is your wish. Are you all with me? Now the house rent allowance is not fully exempted. That means some portion of house rent allowance is taxable and some portion is exempted also. Are you all with me? How to compute exemption? That's what we are about to discuss. So departments say least of the following. Least of the following shall be the exemption. Shall be the exemption. That simply means, friends, if you are in receipt of house rent allowance, that entire house rent allowance you have to take. Then you are supposed to reduce the exemption, which is computed as per section 1013A. The remaining will be the taxable house rent allowance. Are you all listening? You need to take that entire house rent allowance, then reduce the exemption. The remaining will be the taxable house rent allowance. What is this exemption? Least of the following shall be the exemption. Least of the following shall be the exemption. What all are the list under the least? Let's understand. Number one, under the least of the following, number one is actual HRA received. Actual HRA received. What is HRA? HRA means house rent allowance. Actual house rent allowance received is the first limit. Or number two, an amount which is equal to 50% of your salary. 50% of salary if house situated in metro city. Metro city. Otherwise, 40% of salary. 40% of salary. Arey, what do you mean by 50% of salary if the house is situated in metro city? How many metro cities we have in India? Chennai, Mumbai, not Bangalore. We have a metro in Bangalore. That doesn't make Bangalore a metro city. Delhi and Kolkata, excellent. We only have 4 metro cities. Say Kochi, we have a metro, but that is not a metro city. Metro city means the population should be more than 10, according to the last preceding census. as the last preceding census was held in 2011. After that, 2021 was the next expected date, but due to that corona and other things, they haven't conducted any census in 2021. Maybe after the general election, they may conduct a census. We don't know when they are going to conduct the census next. But maybe only after the general election, I'm thinking. I'm not sure. That is the expectation we have. So, according to the last census, we only have 4 metro cities. After the new census, definitely the number of metro cities will go high. That's for sure. For the time being, only 4 metro cities: Chennai, Delhi, Mumbai, and Kolkata. These are the 4 metro cities we have: Chennai, Mumbai, Delhi, and Kolkata. Now, if your house is situated in these cities, then 50% of your salary will be the second limit. If your house is situated in some other place, then 40% of salary. Say your house is situated in Bangalore, 40% of salary. Your house is situated in Coimbatore, 40% of your salary. It is like that. Now, point number 3. Rent paid minus 10% of salary. Rent paid minus 10% of salary. You take your entire rent paid, from that you deduct 10% of the salary, the rest will be your third limit for claiming the exemption. Now friends, there is a confusion. What do you mean by salary here? I am using the word salary. What do you mean by salary here? The word salary has been defined for the purpose of 1013A. The word salary has been defined for the purpose of section 1013A. Let's understand the definition. So salary here means that the definition says basic salary plus DA if forms part of retirement benefit. RB means retirement benefit, plus commission if expressed as fixed percentage of turnover. So listen, what do you mean by salary here means basic salary. Dearness allowance if forms part of retirement benefit. What do you mean by dearness allowance forms part of RB means retirement benefit? What do you mean by DA forms part of retirement benefit? A DA which is actually used to compute your retirement benefits. Permanent DA. What is DA? Dearness allowance. What is dearness allowance? What do you mean by dearness allowance? Tell me. Dearness allowance is actually given to meet your cost of living. Say for example, your cost of living in Coimbatore and cost of living in Mumbai, is it the same? No. Your cost of living in Chennai and cost of living in a remote place, is it the same? No. In cities, cost of living will be comparatively high. Yes or no? To bear with that, your employer is giving you a extra payment. That is said to be what? Dearness allowance. If that payment is also considered by the employer to compute your retirement benefit, it will be called as DA forms part of a retirement benefit. Which all are the retirement benefits? You have PF, ESI, gratuity, etc. ESI is not a retirement benefit again. PF, gratuity, pension, etc. are said to be the retirement benefits. If DA also considered as a part of computing your retirement benefit done by your employer, then that DA you have to consider here. Then what is commission? The employer is giving you some commission. Alright. Which is expressed as a percentage of your total turnover. Employer's turnover's percentage is given as a commission to every employee for their work. If it is so, then that commission also forms part of the salary definition for the purpose of computing 1013A. If it is a fixed commission, what is fixed commission? Every year he will pay a fixed amount as commission. Then it will not form part of the salary definition for the purpose of 1013A. It will form part only if that commission is a percentage of your turnover. If the commission is varying and it varies based on your turnover, fixed percentage, that doesn't mean it is fixed. It is a fixed percentage of your total turnover. Are you all with me? So the base is turnover. If turnover changes, your commission also changes every year. So if commission is expressed as a fixed percent of turnover, then you have to consider it as a part of the salary. So the salary 50%, 40%, 10%, the salary means this salary. Are you with me? Now friends, for the sake of simplicity, I am naming it. I am giving a name to this salary. Don't write it in your exam because it is a name given by me. Are you with me? Because this salary is there in different parts of the salary head. So what I'm doing is, I'm giving a nickname to the salary. Are you all listening? The nickname which I prefer is standard salary. The nickname which I'm giving it, what? Standard salary. From now onwards, wherever I say standard salary, that means what? Basic plus DA forms part of retirement benefit plus commission if it is expressed as fixed percentage of your total turnover. Repeat with me. What is standard salary? Basic. Commission if it is, or DA if it forms part of the retirement benefit plus commission if it is expressed as a fixed percentage of your total turnover. Standard salary means this. So for the purpose of 1013A, you need to always consider standard salary. I hope till now it is super clear for you. Are you all with me? So you compute these three limits. Then you take the lower figure. And that lower figure will be your exemption under 1013A. You take these three, take the lower, that lower will be your exemption under 1013A. I hope it is clear. Now, there is one point I want to ask. Say you are living in your own house. Employer is giving you a HRA also. Will you get the benefit of exemption? Say you are living in your own house. Your employer is giving you a house rent allowance. Can you claim exemption? In such case, rent paid will be 0. Yes or no? 0 minus 10% of salary, mathematically it is negative. But when you compute limits, it should be 0. Are you with me? Instead of doing this, what department say? If the actual rent suffered by an employee is nil, he is not eligible for 1013A exemption. If the actual rent paid by an employee is nil, he is not eligible to claim 1013A exemption. Why? Because your rent paid will be 0 and the third limit will become 0. So you cannot claim any exemption under 1013A. So we can write that. Please note that if actual rent paid is nil, then no exemption under 1013A. Actual rent paid is nil, no exemption under 1013A. So these are the factors that you should consider while computing house rent allowance. I hope it is clear. Alright friends, now let's solve a problem in relation to house rent allowance. So let's solve a problem. So from the question sheet in page number 4, you can take question number 1. Take question number 1 in page number 4. Page number 4, question number 1. Read the question and give me the answer. Read the question. It is in relation to HRA. Read the question and give me the answer. Okay friends, I hope you have read the question. Now let's solve it together. So Mr. Raj Kumar has the following receipts from his employer. His basic pay is given, DA is given, commission is given, motor car for personal use is given, then house rent allowance is given. Find out the amount of HRA eligible for exemption to Mr. Raj Kumar, assuming that he has paid a rent of 1000 per month for accommodation at Kanpur. DA forms part of retirement benefits. Don't expect such questions in exams. These are only for a conceptual understanding. In examination, questions will be a mix of all perquisites, allowances, everything will be mixed together. Alright. So these are only for the conceptual understanding. So they are asking you to compute the exemption under 1013A. Yes or no? For computing the exemption under 1013A, the first thing we require is standard salary. Because 40% or 50% of standard salary or rent paid minus 10% of standard salary, you require standard salary first. What was standard salary? Basic salary plus DA forms part of retirement benefit plus commission if it is expressed as a fixed percentage of your total turnover. So let's compute standard salary first. For you, you have to write salary under 1013A. That's what you have to write. I'll write standard salary. So basic pay is given 3000 per month. So 3000 basic pay is there plus DA. Is there any DA? Yes, they are saying that 600 rupees per month is the DA, but they are also saying that this entire DA, whether it forms part of retirement benefit, yes, DA forms part of the retirement benefit. So 600 is also there plus let's check the commission, whether it is expressed as fixed percentage of turnover or not. The answer is no, because 6,000 per month is an annual fixed commission. They are not saying it as a percentage of turnover. So you are not supposed to take commission. Yes or no? And hence standard salary is only 3,600 per month. Now let's start computing the exemption under section 1013A. How to compute the exemption? Limit number 1, actual HRA received. How much is the actual HRA received according to the example? 900 per month. And how many months have we worked? That we don't know. Hence it will be 12 months. Yes or no? Since the question is silent about his number of months of working, he worked for the entire year. So 900 into 12. How much is the total HRA amount? 10,800. So actual HRA 900 into 12, that will be 10,800. Number 2, 40% or 50% of standard salary. Here, where is the house? The house is at Kanpur. Kanpur is not Mumbai, it is not Chennai, not Calcutta, and not Delhi, and hence 40% is the limit. Yes or no? So 40% of standard salary is the limit. 40% on 3,600 into 12. How much will be 40% on 3,600 into 12? 17,280. 17,280 is the second figure. And how much is the third figure? Actual rent paid. How much is the actual rent paid, friends? Actual rent paid is rent of 1,000 per month. So 1,000 into 12, that will be 12,000. Yes or no? Actual rent paid will be 12,000 minus 10% of standard salary. Standard salary is 3,600 into 12. That figure into 10% should be deducted from 12,000. And you tell me how much is the figure coming? 3,600 into 12 means how much? 3,600 into 12. 43,200 into 10% will be 4,320. 12,000 minus 4,320, that will be 680. 7,680 will be the figure. Now listen, whichever is lower, you know which is lower figure, that is 7,680. So this is the exempted figure under 1013A. So when you are computing the taxable HRA, how to compute this? Actual HRA is 10,800 minus 1013A exemption, that is 7,680. How much is the remaining figure, friends? 3,120 is the taxable HRA. That is the final answer to the question. I hope it is clear. So there are three types of allowances, that is fully exempted, partly taxable, and fully taxable. Out of that, partly taxable, we have completed house rent allowance. Now we have special allowances, which is under section 10 subsection 14, clause 1 and clause 2. So we'll write a heading here, special allowances. So we'll write a heading, special allowances. Under section 10 subsection 14. So let's understand which all are the special allowances mentioned under section 10 subsection 14. We can split 1014 into 2, that is clause number 1 and clause number 2. So first one is section 1014, clause number 1. So let's understand which all are the items under clause number 1 first. So this clause number 1 says the following shall be allowed as exemption provided it is actually expended. It is actually expended. What do you mean by it is actually expended? The following allowances which we are about to discuss, if you have actually expended those allowances, then you can claim full exemption. If you haven't expended it, that means you have saved it, then you need to pay taxes. If you have expended for it, you can claim full exemption. Otherwise, it will be taxable. Now, let's understand which all are the items where exemption depends upon actual expenditure. Item number one. Item number one, where expenditure depends upon, where exemption depends upon actual expenditure, it is travel. It is travel or transfer allowance. Or transfer allowance. Travel or transfer allowance. What do you mean by travel or transfer allowance, friends? What do you mean by travel or transfer allowance? They say it is an allowance to meet the cost of travel on tour, or cost of travel includes any sum paid in connection with transfer, packing, transportation of personal effects on such transfer. So normally what they say is, say for example, you are working in Chennai. You got a transfer to Hyderabad. So you need to pack everything. Then you need to transport your items. You need to relocate. Yes or no? For this relocation, they are giving you an allowance. That is normally called as travel or transfer allowance. So this relocation, if you are getting an allowance and you are actually expending that allowance for your relocation, then you don't need to pay any taxes. You got 1,000 rupees as transfer allowance and you are spending only 700. Then 700 is exempted and the remaining 300 you have to show as your salary and you need to pay the taxes. So these allowances which we are discussing under this will be exempted subjected to actual expenditure. Will be exempted subjected to actual expenditure. If you have expended it, then you can claim exemption. Otherwise, it is taxable. Item number 2. Daily allowance. Daily allowance. What do you mean by daily allowance? Say for example, daily allowance means allowances to meet the ordinary daily charges incurred on an employee on account of absence of his normal place of duty. We normally call it as daily bata. Have you heard about daily bata? What is daily bata? Say you are normally working in one place. Now as a part of your profession, as a part of your work, you have to travel to some place. Alright. On this travel, you will have to incur some cost. So they will be given a daily bata for your food and other expenses. So this daily bata is called as normally what? Daily allowances. Normally persons who work in transport sector will get this daily allowance. There is nothing in income tax. Only transport employees should get daily allowance and all. I said normally this transport employees will get this daily bata. JCB drivers, lorry drivers, truck drivers, etc. will definitely get daily allowance, daily bata. So that is allowed as an exemption provided you actually expended it. Say for example, I am getting 10,000 rupees in a year, expended 7,000. Then 7,000 I can claim as an exemption. The remaining 3,000 will be fully taxable. So hope you remember the special allowance was under partly taxable category, or we can say partly exempted category. What is its speciality? Out of the entire allowance, a small part will be taxable and the remaining part will be exempted. Are you all with me? Now, moving on with the third item, that is conveyance allowance. Conveyance allowance. That means, conveyance allowance means an allowance given to meet the expenditure on conveyance in performance of duties in office, provided free conveyance is not provided by the employer. Say for example, in Info Park, Techno Park, etc., you will have night shifts. Yes or no? For girls and other young, young people, normally they allow cab. What do you mean by cab? At night, you don't get any public transport system, so the company themselves will arrange for the cab. Yes or no? If they are not allowing cab, then they will give you conveyance allowance for your commutation. Are you with me? If the conveyance allowance is received by you, have been expended by you, then you can claim that expended amount as an exemption. Otherwise, it is fully taxable. So as I've told you earlier, you got 10,000, you expended 7, remaining 3 only will be taxable. There is nothing that you have to expend everything. How much you are expending, that much amount you can claim as an exemption. Out of that entire allowance, how much you are expending, that much amount you can claim as an exemption. Are you all listening? Super. Point number 4. Helper assistant allowance. Helper or assistance assistant allowance. Say for example, helper or assistant allowance simply means you have appointed someone to perform your official duties. You have appointed someone, maybe part-time or full-time, whatever it is, for performing official duties. You have to give him a salary. Yes or no? Say I have appointed you as my official helper, not domestic servant. You are my official helper. You help me in my official duty. My employer is giving me an allowance for paying you. So if I am receiving an allowance, I am making the payment, then I can claim that entire amount as an exemption. Say for example, my employer gives me 10,000 per month. I am paying you only 8,000 per month. The remaining 2,000 will be taxable in my hands because that is my income. The other things are I am passing on. Are you all with me? So helper or assistant's allowance in bracket write official. It is not the housemaid and all. It is only official helper or assistant. Fifth one, they say research allowance. Research allowance. You tell me what will be research allowance. Say for example, I am a degree qualified person and I am pursuing my post graduation. The company is giving me an allowance for my research and other expenses. If I am expending that allowance for my post graduation, I can claim that entire amount as a exemption. Otherwise, it will be taxable. The company is giving me 10,000 per month. I am expending 8,000 per month. Remaining 2,000 will be taxable. That 8,000 I can claim as exemption. That's why I've written in the beginning. The following are allowed as an exemption subjected to actual expenditure. If you actually expend it, you can claim it as an exemption. Otherwise, it will be fully taxable. Point number 6. Uniform allowance. Uniform allowance. You tell me what is uniform allowance? An allowance to buy uniform. It's not for color dress. An allowance to buy uniform. My company, my employer is giving me an allowance to buy uniform. There is a uniform code in my company, dress code in my company, and it's uniform. And my company is actually sponsoring all the cost. If I'm expending that amount for purchasing uniform, then I can claim it as an exemption. Otherwise, it will be fully taxable. So that's what they say. These are the 6 items under special allowances category 1. So can you just repeat for me which all are the items under category 1? Travel or transfer allowance, daily allowance, conveyance allowance, helper or assistance allowance, research allowance, uniform allowance. These are the 6 items under category 1 of special allowances. 10 subsection 14 clause number 1 where exemption depends upon actual expenditure. You actually expend it, you can claim it as an exemption. Moving on to the second set, that is section 10 subsection 14 clause 2. Section 10 subsection 14 clause 2 allowances exemption does not depends upon actual expenditure. What do you mean by does not depends upon actual expenditure? What do you mean by does not depends upon actual expenditure? The following items you don't have to expend to claim exemption. Whether it is expended, whether it is saved, doesn't matter. You will get what? Exemption. Or we can say fixed exemptions, irrespective of actual expenditure. Are you all with me? We can say fixed exemptions, irrespective of actual expenditure. That means whether you have expended, whether you haven't expended, you can claim what? Exemption. So let's understand which all are the items under this list. Starting with, there are a lot of items. Actually, if you refer Income Tax Act, there are a lot of items under this category 2. Now the question is, do we have to study each and every item? The answer is no. No, not required. There are 3-4 items that we have to study. That 3-4 items alone I will write. These 3-4 items you have to mandatorily study. Alright. So, trust me, they will not ask anything else. Only these 3-4 items which I note, they will definitely, I'm not saying the next attempt, these 4 items they will test. The possibility, these 4 items are the only one where they can test. They won't test other items. So, under that, write number 1. Allowances granted to an employee, allowances granted to an employee, allowances granted to an employee working in transport system, working in transport system, working in transport system, working in transport system, provided he is not in any daily allowance. He is not in receipt of, he is not in receipt of any daily allowance. What do you mean by provided he is not in receipt of any daily allowance? See, for example, in transport sector employees, certain employers will pay allowance based on trip. What do you mean by based on trip? Say this week you have trip, then you will get an allowance. Next week you don't have trip, you will not get any allowance. So whether you have trip or not, if they give allowances daily, it is called as what? Daily allowance, daily bata. Based on trips, if they are giving allowances, then we can say it is not daily allowance, but it is an allowance granted by the employer to the employee working in transport system. If it is so, then the exemption shall be as follows. They say exemption shall be 70% of such allowance up to maximum 10,000 per month, up to maximum 10,000 per month, up to maximum 10,000 per month. So what do you mean by this, friends? Let's understand an example in this point number 1. Let's see an example in this point number 1. Please listen. What they say is, say for example, I am an employee who's working in tourist bus. I'm a driver of a tourist bus. Are you all listening? I'm an employee of tourist bus. Every month I have 20-25 days of work. I have 20-25 days of work in every month. So in April, my employer is giving me 20,000 rupees for meeting my expenses. Because instead of daily bata, he gives me a monthly allowance. He gives me 20,000 rupees for meeting my monthly expenses for food and accommodation and for other things. He's giving me 20,000 per month as an allowance. Are you with me? Now the point is, this is an allowance, and when I'm receiving an allowance, it is a part of my salary. Yes or no? That should be taxable. Yes or no? But if I'm not in receipt of daily allowance, I can claim an exemption from this 20,000. And how much is the exemption? Department say 70% of such allowance. 70% of 20,000 means how much? 14,000 rupees per month. But maximum exemption in a month is 10,000. So here 70% is 14,000, but it shall be restricted to 10,000 per month. So 10,000 per month I can claim an exemption, and the remaining 10,000 will be fully taxable in my hands. If I am receiving 20,000 per month as a transport allowance, what I can claim? Up to 10,000. In such case, I can claim up to 10,000 as an exemption, and the remaining 10,000 will be taxable in my hands. Are you all with me? If I am receiving daily allowance and I am expending it, I can claim full amount as what? Exemption. If I am receiving daily allowance and I am expending it, I can claim full amount as an exemption under the first category. Yes or no? Look at this. Daily allowance. If I am receiving daily allowance and I am expending the entire daily allowance, then I can claim it as an exemption under first category. Second category, they say I am not in receipt of any daily allowance. I hope it is clear. Now, moving on to the second item, if they say children education allowance. Children education allowance. Your employer is giving you children education allowance, then the exemption shall be 100 per child per month up to maximum 2 children. Up to maximum 2 children. Say for example, your employer is giving you a children education allowance. What do you mean by children education allowance? It is for meeting the expenditure of your children's education. Then that allowance is taxable in your hands, but you can claim an exemption. How much is the exemption? Huge amount. 100 rupees per month. That too up to 2 children. 100 rupees per month, okay, not per day. Per month is the exemption. This is old exemption, okay. They have to revise the figures. They haven't revised it yet. Because the scale of education, the expenditure, etc. is rocket up right now. 100 rupees per month. They won't even allow you to sit on their stairs. Don't even think about sitting in the class, okay. Per month, 100 rupees, will you be able to complete your expenditure? Complete your education? Never. So they have to revise these figures, but what to do? They haven't revised, so we need to study this limit only. So what they are saying is, your employer is giving you children education allowance. That entire education allowance is taxable. However, you can claim an exemption, that is rupees 100 per child per month up to 2 children. That's what they say. Now, there is another thing. Whether your children is actually studying or not, whether you are expending this amount or not, you can claim this exemption. Whether your children actually studies or not, whether you are expending this allowance for your children's education expenditure or not, you can claim what? Exemption. Because these category 2 does not depends upon your actual expenditure. Are you all listening? The category 2 does not depends upon your actual expenditure. So you can claim exemption whether you have actually expended it or not. Now listen, there is another factor here. What they say is, if your children is studying abroad, department will never give you what? This exemption. If your children is not studying, no problem. But if they are studying abroad, it is considered as a crime. No exemption. You will have a huge loss. And what is the loss? 100 rupees per month per child. Up to maximum 2 children. Gone. The employee will commit suicide for 100 rupees per month. I don't know why they are making so much of restriction for this 100 rupees per month per child. I don't know. But it is there, so we have to study. Alright. So what they are saying is, if your children is studying outside India, you are not eligible for this exemption. Now, point number 3. That is even better. Third point is even better. That is children hostel allowance. So, any hostel allowance for children. What is hostel allowance? Say your children is studying in a hostel. You have to pay the monthly mess fees. Yes or no? The hostel monthly fees will be there. And what they say is, you can claim 300 rupees per month per child up to maximum 2 children. Super offer. Compared to education allowance, it is 3 times. Yes or no? Wonderful offer, isn't it? Compared to education allowance, it is 3 times. 300 rupees per month. Per day itself is very tight. But they are only giving what? Per month. Alright. So if your employer is giving you children hostel allowance, then up to rupees 300 per month per child, you can claim it as an exemption. The remaining will be taxable. It is better not to give an exemption. Why they are giving this exemption? We have to study all this 100, 300. I don't know. Since it is there, we have to study. They have tested this also. And another factor, whether your children actually studies or not, you can claim this exemption. But there is a problem. If your children is studying abroad, then this hostel allowance shall be fully taxable. You will not get any exemption. If your children is studying abroad, your entire hostel allowance shall be fully taxable. You are not eligible for any exemption. If your children is simply sitting at home, no problem for department. You claim what? Exemption. If they studies abroad only, they have problem. If they are simply sitting by playing some PUBG or something, no problem. Department is super happy. Now, so these are the 3 items. Now there is one more item that we have to consider. Listen, what they say is, any transport allowance, any transport allowance granted to an employee who is either blind or deaf and dumb or orthopedically handicapped with disability of lower extremities of body, of body to meet expenditure for commuting between his residence and place of duty. The exemption shall be 3,200 per month. The exemption shall be 3,200 per month. 3,200 per month. So friends, what do you mean by this? Any transport allowance which is granted to an employee, and your employee should be either blind. You know what is blind, right? What is dumb and deaf? He is not able to speak and he is not able to hear. He is dumb and deaf. And orthopedically handicapped with disability of lower extremities of body. That means what? Both his legs are not moving. So he is paralyzed, partially paralyzed to the lower extremities. He is in wheelchair or something. Are you all listening? So if he is in these conditions and his employer is giving him a transport allowance for coming to office and going back to home, then he can claim an exemption. Whether he actually spends it for the daily commutation or not, he is eligible to claim 3,200 per month as exemption. He can claim maximum 3,200 per month. See, the actual allowance is 1,000 and you are getting 3,000. You cannot claim 3,200 as an exemption. If your actual allowance given by your employer is 1,000, then 1,000 per month is the maximum exemption. You cannot claim exemption and you are not supposed to arrive at loss. Are you with me? Say 1,000 is my actual figure and you are claiming 3,200 and you are saying 2,200 rupees per month is my loss. Department will never. This is the exemption, not deduction. Exemption means we will not tax your amount. Maximum exemption is 3,200. You are not supposed to claim exemption and you are not supposed to arrive at loss. That is not possible. Are you all listening? So these are the 4 items that we have to study under category 2. So can you please repeat with me which all are the 4 items under category number 2? Number 1. Allowances granted to transportation employees provided they are not in receipt of daily allowance. How much is the maximum exemption, friends? 70% of the allowance or 10,000 per month, whichever is lower. Rather, we can say 70% up to maximum 10,000. Whichever is lower, also same. Second one, children education allowance. 100 rupees per child per month up to maximum 2 children. Whether your children studies or not. Then, hostel education, hostel allowance. Rupees 300 per child per month up to maximum 2 children, whether your children studies or not. Yes or no? Moving on with the last one, that is transport allowance, which is granted to an employee who is either deaf and dumb or blind or orthopedically handicapped to the lower extremities of his body, then he can claim up to 3,200 per month as a exemption. And these exemptions are irrespective of actual expenditure. Whether you have actually expended it or not, you can claim exemption. I hope it is clear. So these are the things in relation to what? Allowances. So apart from these allowances, whatever other allowance received by you, it shall be fully taxable. All other allowances received by you shall be fully taxable. Only these allowances you can claim what? Benefit. For all other allowance, you need to pay taxes. I hope this much is clear. Alright friends, now it's time for us to move on to the second component in salary. So the first component was allowance. Yes or no? Let's move on to the second component in salary. We will consider the second component, and that is annuity or pension. We will write pension. We will write pension. Alright, so tell me friends, what do you mean by pension? What do you mean by pension? That is the second component, taxable as salary. What do you mean by pension? Say after your retirement, you are not getting any salary. You will not get any monthly amount. But the department or the employer, what they will do, during the pendency of your employment, your employer and you will contribute to the pension fund. At the time of retirement and thereafter, you will get a small monthly amount from the pension fund for your daily expenses. Are you all with me? So this pension is actually not free. It is not free. You and your employer during the period of service have to contribute and have to grow the pension fund. Once you have retired, you will get small denominations from the pension fund, and we will call it as what? Monthly pension received by an employee after retirement. So pension is also an income taxable under the head salary, because that pension received by you, it is on account of employer-employee relationship. You and your employer both contributed to the pension fund. That's why you are getting a monthly pension after your retirement. So the pension is also taxable at what? Salary. Now pension can be splitted into two: commuted pension and uncommuted pension. So under pension, what we can write is, you can split the pension into two, that is commuted pension and uncommuted pension. Commuted pension and uncommuted pension. So what is commuted pension? Commuted pension simply means discounting your pension. Unofficial explanation it is discounting your pension. What do you mean by discounting your pension? What do you mean by discounting your pension? Say for example, I am at the age of 60. I am at the age of 60. I'll get pension till I die. I'll get pension till I die. I'm approaching my employer and I'm saying, sir, don't give me monthly pension. I want to discount my entire pension. I want to discount my entire pension. Now what the employer will do, by making use of the expertise from an actuary. There is a person called actuary who does all these kinds of complicated computations. So what the employer will give me a lump sum amount, and he will never give me what? Again monthly pension. Why? Because I have discounted my pension. So getting a monthly amount, rather than getting a monthly amount, what I'm doing is I'm taking a lump sum amount. Are you all with me? So commutation of pension means it is just like discounting the pension and getting a lump sum amount is said to be commutation of pension. Rather than receiving monthly amount, I'm saying I require a lump sum amount right now. You don't have to pay me monthly amount, just give me a lump sum amount. Hereafter, I will not ask you what? Monthly pension. This concept is called as commuted pension. One more thing is there. It is not necessary that you have to commute your entire pension. You can commute 50% of your pension. What do you mean by commutation of 50% of your pension? Normally, you are in the receipt of 5,000 rupees per month as pension. When you commute your 50% pension, you will get a lump sum amount, plus you will get 2,500 as monthly pension afterwards. And how much will we get as lump sum amount? That depends upon age, your demographics, etc., etc. That is not in our hands. That is commuted by normally an actuary. Are you all with me? So income tax is least bothered about how much you are getting as commuted pension. But income tax say, when you get commuted pension, how to tax it. That's what the department says here. So under commuted pension, we can write, lump sum amount, lump sum amount, lump sum amount taken by the employee, taken by employee, taken by employee, taken by employee. And under that we can again write assessee can claim exemption under section 1010A when he commutes his pension. So when he commutes his pension, assessee can claim an exemption under section 1010A. Let's understand how much is the exemption. So right now we are discussing the exemption. So exemption under 1010A. Let's understand how to commute the exemption under 1010A. You can split this into three. You can split this into three. We can split this into three. The first limit, it says, if you are employee of central government or local authorities or statutory corporations or members of civil service, or defense service, then department say fully exempted. Fully exempted. What do you mean by that? Listen, if you are an employee of CG, central government, LA, local authority, statutory corporation, members of civil service or defense services, entire commuted pension will be fully exempted. You don't have to pay taxes for the commuted pension. How much you are commuting? Entire sum will be exempted in your hands if you are in this first category. Are you all listening? Say you are a central government employee, local authority employee, statutory corporation employee, members of civil service or defense service, you can claim full commuted pension as an exemption. Now, number 2, moving on to the second parameter, what they say, second criteria, what they say, if you are other employee, in case of other employees who is in receipt of gratuity, So if you are not a part of CG, LA, statutory corporation, member of civil service or defense service, you are in some other employee, you are some other kind of employee, and you are in receipt of gratuity. What is gratuity? Gratuity is another retirement benefit received by an employee from the employer, which is totally gratuitous. What is totally gratuitous? See, employee have done hard work during his period of service. At the time of retirement, to show a gratitude, employer will give him a lump sum amount. And that lump sum amount is said to be gratuity payment given by the employer to the employee. So if your employee is in receipt of gratuity, then exemption for pension commutation shall be as follows. Then exemption shall be 1/3 of amount, 1/3 of amount which he would have received. Had he commuted whole of pension. Had he commuted whole of the pension. Okay, friends, what do you mean by this? How much is the exemption? Say you are some other category employee and you are in receipt of gratuity. Then how the exemption is? you can claim an exemption, and the exemption shall be 1/3 of your commuted pension. Had you or he, the 1/3 of the amount which you would have received if you would have commuted your entire pension. Confusing. What do you mean by this? Listen. Say for example, I'll give you one example. Mr. A. Mr. A commuted 50% of pension. 50% of pension, and he received rupees 5 lakh. He received rupees 5 lakh. Are you all listening? He commuted 50% of his pension and he is in receipt of rupees 5 lakh. Now, he is in receipt of gratuity. He is in receipt of what? Gratuity. He is in receipt of gratuity as well. He is not a CG, LA, SC, Civil Service, Defense Services, not in any of those categories. So, he will come under this category. Yes or no? Yes or no? Then, when he receives 5 lakh rupees as commuted pension, how to claim exemption? 1/3 of pension. 1/3 of amount. If he would have commuted his entire pension, it is not 1/3 of 5 lakh. 5 lakh is 50% commuted amount. Yes or no? If he would have commuted his entire pension, what would have been the amount received by him? If he would have been commuted his entire pension, what would be the amount received by him? He received 50% and received 5 lakh. If he would have commuted 100%, he would have received 10 lakh. Basic mathematics. Yes or no? He commuted 50% and received 5 lakh. If he would have commuted 100%, he would have received what? 10 lakh. Yes. So, 1/3 of 10 lakh will be the exemption. How much is 1/3 of 10 lakh? It will be 3,33,333. So, this is the exemption that you can claim under 1010A. The rest of the amount will be fully taxable in your hands. Now, read this again. How much is the exemption? Listen. How much is the exemption? Exemption shall be 1/3 of amount which he would have received had he commuted his entire pension. If he would have commuted his entire pension, what would be the amount receivable? You take that amount into 1/3. That will be your exemption if you are in receipt of gratuity. Are you all with me? It is not the actual receipts 1/3. It is the 100% receipts 1/3. Now, moving on with the third case. That means, what is the third case? So, what they say, if in case of other employees, who is not in receipt of gratuity, you are another employee and you are not in receipt of any gratuity, then how to compute the exemption? Let's understand how to compute the exemption. Listen, it is almost similar to this one, but with slight changes. So what I will do is, first I will copy paste it from here. Listen. So what they are saying is, listen friends. So exemption shall be, instead of 1/3, we can write 1/2. Half of amount which he would have received had he commuted entire pension. This is the only change. Instead of 1/3, it will be 1/2 if he is not in receipt of gratuity. Are you all with me? So what they say is, if you are another category employee, that means if you are not a CG, LA, SC or Civil Service, Defense Service employee, and you are not in receipt of gratuity, then how to compute the exemption? To compute exemption, what they say is, half of your amount, if you would have commuted your entire pension, how much will be that entire amount? Take half. That half will be your maximum exemption. So this is how you compute exemption for what? Pension commutation. The pension is not yet over. There is one more element. That means uncommuted pension. What is uncommuted pension? Your monthly pension. Yes or no? Uncommuted pension means monthly pension. Fully taxable. you are not eligible to claim any exemption. It is fully taxable under salaries, under the head salary. If you are in receipt of monthly pension, that means uncommuted pension, you can claim that entire, or you have to show that entire amount as an income taxable under the head salaries. You are not eligible to claim any exemption. Only commuted pension is eligible for what? Exemption. Uncommuted pension is fully taxable as salary. I hope it is clear. Along with this, one more point is there. Say, for example, employee is dead. Employee passed away. Now, pension is given to his legal hire. We call it as widow pension and all. That widow pension is taxable under IFRS, not under salary. Why? Because there is no employer-employee relationship between the employer and employee widow. Yes or no? So, the widow pension will not be taxable under the head salary. It will be taxable under IFOS, income from other source. Alright friends, so that is the summary of pension. So friends, let's summarize. So pension can be categorized into two, that is commuted pension and uncommuted pension. Commuted pension means discounted pension. If you are taking a lump sum amount by discounting your pension, if you are a government employee, local authority employee, statutory corporation employee, member of civil service, defense service, fully exempted. All the commuted pension is fully exempted. If you are any other employee who is in receipt of gratuity, 1/3 of 100% commuted pension. If you are in receipt, not in receipt of gratuity, then half of the 100% commuted figure will be your exemption. Uncommuted pension is fully taxable. You cannot claim any exemption on uncommuted pension. I hope that point is clear. That is a summary. Now friends, please take the question sheet. Let's solve some problems in relation to this. So if you take the question sheet, you can see a question, that is question number 4. Mr. Sagar. So please take page number 4, question number 4. Page 4, question 4. Page 4, question 4. Mr. Sagar retired on 1/10/2022. Solve that problem. Okay friends, I hope you have completed the question. Anyways, let's solve it together. Listen, Mr. Sagar retired on 10/10/2022, receiving 5,000 per month as pension. On 1st February 2023, he commuted 60% of his pension and received 3 lakh as commuted pension. You are required to compute his taxable pension, assuming he is a government employee, private sector employee, receipt of gratuity, private sector employee, not in receipt of gratuity. Listen, he retired on 1st October 2022. Yes or no? So for October, November, December, January, he is in receipt of monthly pension. Then from February onwards, he commuted his pension, 60%. That means he is eligible for 40% uncommuted pension also. Are you with me? So what we can do is, he retired on 1st October. 1st October. That simply means for the month of October 2023. Then October, November 2023, December 2023, January 2000, not 23, sorry, 22, okay. These are actually 22. October 22, November 22, December 22, January 23, February 23, March 23. These are the remaining months in that year. October, he is in receipt of 5,000 as monthly pension. November, again 5,000. December, 5,000. January, 5,000. On 1st February, he commuted 60%. That means he will get 5,000 into 40%. How much is 40% of 5,000? 2,000. And again for March also he will receive the same. Yes or no? So how much is his uncommuted pension? Uncommuted pension. It will be 1, 2, 3, 4, 24,000. Yes or no? So rupees 24,000 is his uncommuted pension and fully taxable, irrespective of whether he's government employee, private sector employee, whatever it is. So uncommuted pension is 24,000 and it is fully taxable. That is the first thing that you should know. Now in relation to commuted pension, how to compute the exemption and taxability? In first case, I think he is government employee. First case, he is a government employee. Hence, this entire 3 lakh is fully exempted. Only 24,000 rupees is taxable pension in case number 1. Yes or no? How it become 24? That is uncommuted portion. Uncommuted portion anyway is taxable whether you are government employee or not. Now, private sector employee who is in receipt of gratuity at the time of retirement. Let's see. If you are a private sector employee, that means fully exempted. And the total taxable pension is 24,000 if you are a government employee. And case B, that means private sector employee who is in receipt of gratuity. For uncommuted pension, actual pension amount received by you, that is commuted pension, actual commuted pension received by you is 3 lakh. If you are in receipt of gratuity, then how to compute exemption? 3 lakh is 60% commutation. Yes or no? If you are in receipt of gratuity, then how to compute exemption? 1/3 of amount if he would have commuted his entire pension. That's what we have done. So, if he would have commuted entire pension, he would have received rupees 5 lakh. How it become 5 lakh? 60% is 3 lakh. That means 3 lakh by 60 is the 100%. Basic mathematics it is. So, he would have received 5 lakh if he would have commuted his entire pension into 1/3. How much is 1/3 into 5 lakh? 1,66,667. 166,667. So, if you deduct that, the remaining will be the taxable value. How much is the taxable portion, friends? 1,33,333 plus, not yet over, plus 24,000. What is 24,000? Uncommuted portion is also there. So, in total, how much will be his taxable pension? 157,333. Yes or no? Don't try to forget that uncommuted pension, okay? That is very important. These kinds of adjustments will be there in exam. You cannot expect the same question in exam. Same adjustment they will ask. They will definitely demand you to compute the income from the head salary. In that, there will be adjustments like this. This should be your expectation. Now, point number C, he is a private sector employee who is not in receipt of gratuity. So, how much is the actual pension? Actual pension is rupees again 3 lakh. Now, 3 lakh by 60%. If he would have commuted this entire pension, then he would have get 5 lakh into 1/2. So, how much it will be? 2,50,000. So, you deduct that. 50,000 will be the taxable commuted pension plus uncommuted portion 24,000. And hence, total 74,000 rupees will be the taxable pension in case number C. I hope it is clear. So, till now we have completed pension. Now we have to start with the next topic in salary, that is gratuity. It is another retirement benefit received by the employee. And let's study what all are the specialities in income tax when you receive gratuity. So, the first thing to notice, what is gratuity? What do you mean by gratuity? Gratuity simply means a retirement benefit given by the employer to the employee. It is totally gratuitous. Totally gratuitous means the employee does not have to expend anything to get gratuity. It is completely sponsored by the employer. Alright, so gratuity is totally gratuitous from the perspective of employee. Why there is a gratuity? Because employee has provided his fruitful services during his period of service. Due to that, employer is getting a profit. Only due to the hard work of your employees, your employer is flourishing. Yes or no? So, due to that, at the time of retirement, there is a thanksgiving. It is just like a thanksgiving. So, to show gratitude, the employer gives a lump sum amount to the employee, and that lump sum amount is called as what? Gratuity. So, according to income tax, whether it is lump sum, whatever it is, we want to charge what? Tax on your receipt by calling it as a part of salary. It is another component of salary. So, we can write, I think this is the third component which we are discussing. We have completed allowances, thereafter pension. Now, this is the third component that is called as gratuity. So, let's understand what all are the specialities when you receive gratuity. So, listen, according to the law prevailing in India, there are two types of gratuities. We can write gratuity and we can split this into two. according to the income tax law prevailing here, we can split this gratuity into two, friends. Alright, so let's understand which all are the two splits of gratuity. So, split number one, we can say it is death come retirement gratuity. Retirement gratuity. We can call the first part as what? Death come retirement gratuity. And the second part is called as gratuity received during period of service. During period of service. What do you mean by gratuity received during period of service? That means during the pendency of your employment itself, you can withdraw gratuity. During the pendency of your employment itself, you can withdraw gratuity. So that is called as gratuity received during the period of service. At the time of retirement or at the time of your death, you can withdraw gratuity. At the time of your death, you cannot withdraw gratuity. Your legal heirs will withdraw the gratuity. Okay, the dead man will not come back for money. Dead man will leave everything here and he'll go up. Okay, he cannot even take his clothes with him. He have to leave everything and go. Now, done with the philosophy, coming back to the point, it is gratuity received during the period of service is fully taxable. Fully taxable under salary. So, you cannot claim any exemption, benefit, etc. Whatever gratuity that you have received during the period of service will be fully taxable. There is no scheme to provide any exemption for gratuity received during the period of service. Now, then you can say death come retirement gratuity is eligible for an exemption. If the gratuity is death come retirement gratuity, then you can claim exemption according to section 10, subsection 10 of income tax. So, eligible for exemption. Eligible for exemption under section 10, subsection 10. So, death come retirement gratuity is definitely eligible for exemption under section 10, subsection 10. Now, let's understand what exactly is the exemption provided under section 10, subsection 10. We can split this into three. We can split this exemption into three. I am splitting this exemption into three. Alright, so let's understand what all are the three splits under 10 subsection 10. First split, it says gratuity received by members of defense service. Members of defense service or employees of central government, bar members of civil service, bar local authority employees, is fully exempted. Just like pension, for these category of employees, you don't need to worry about the exemption limits and all. Full amount can be claimed as what? Exemption. Are you all listening? So, gratuity received by members of defense service, then employees of central government, then members of civil service, then local authority employees, etc. is fully exempted. You don't need to pay any amount as what? Taxes. Fully exempted. Now, if you are under next category, but that means you are not a central government employee or a defense service employee, etc. For other employees, we can write for other employees. For other employees whom are covered under Payment of Gratuity Act. Under Payment of Gratuity Act. Payment of Gratuity Act 1972. Say you are some other employee, that means you are not a government employee or any employee under category 1. You are some other kind of employee and you are covered under Payment of Gratuity Act. If you are receiving gratuity according to the Payment of Gratuity Act, then what will happen? Then Act says exemption shall be least to the following. Exemption shall be least to the following. Which all are the three limits? They say either rupees 20 lakhs, or actual gratuity received. Or the third limit is the interesting one. They say 15 by 26 into last drawn salary into completed year of service. Completed years of service or part thereof in excess of 6 months. Or part thereof in excess of 6 months. The third one is the thing which we have to focus. Listen, so what they are saying is, you take 3 of this and claim the least as your exemption under section 10(10). If you are another category employee whom are actually covered under Payment of Gratuity Act 1972. Listen, which all are the three limits? First one is a statutory limit, that is a statutory figure, that is rupees 20 lakhs. Second one is actual gratuity received by you. What is third limit? What is this 15 by 26? What they say is you take half month salary. Alright, half month salary, and you take 1 month as 26 working days. You take 1 month as what? 26 working days. That's why 15 by 26. Half month salary by taking 1 month as 26 days. So 15 by 26 into last drawn salary. What do you mean by last drawn salary? Here salary have a definition. Last drawn salary, that word have a definition here. So let's understand what exactly is the definition of this last drawn salary. So it means, last drawn salary means, please write, salary plus DA. Last drawn salary means basic salary plus DA. Basic salary plus DA. That's it. Here the definition of salary is not standard salary. Hope you remember the definition of standard salary. What was standard salary which we have discussed yesterday? Basic salary plus DA forms part of retirement benefit plus commission if it is expressed as fixed percentage of your total turnover. Here they say basic plus simply DA. That DA whether it forms part of retirement benefit or not. When they simply say DA, you can take the entire DA. So these are the three limits. And completed year of service. So last drawn salary means salary, that is basic plus DA, which you have drawn at the time of retirement or at the time of death. That is called as last drawn salary. Now, what is this completed year of service or part thereof in excess of 6 months, friends? Completed year of service means at the time of retirement, how many completed year of service you have, or at the time of death, how many completed year of service you have. Depends upon that year, you will get exemption. Alright, or part thereof in excess of 6 months. What do you mean by that? Say you have 20 years and 8 months of service. You have 20 years and 8 months of service. It have to be counted as what? 21 years. It have to be counted as 21 years. So if you have a monthly experience which is more than 6 months, you take it as 1 extra year. That's what they meant. So these are the three limits while computing exemption under section 10(10) of income tax. I hope it is clear. Now friends, listen. So other employees whom are covered under Payment of Gratuity Act, you claim the exemption like this. And there is one more limit. There is one more category. That means other employees. You tell me, what will be the rest? Other employees whom are not covered under Payment of Gratuity Act. Under Payment of Gratuity Act. under Payment of Gratuity Act. So if you are an employee who is not covered under Payment of Gratuity Act, then how to compute the exemption? So let's understand. Again, exemption shall be least of the following. Exemption shall be least of the following. Exemption shall be least of the following. So let's understand which all are the list. All right. So number one, again they say rupees 20 lakhs. Rupees 20 lakhs. They give the statutory figure again as rupees 20 lakh. Then number two, they say actual gratuity received. Actual gratuity received. It is same as that of category 1. And number 3 is the difference item, that is, they say half month salary into half month's salary into, or we will write it as an equation. So half into last 10 months average salary. Half into last 10 months average salary into completed year of service. Into completed year of service. So listen friends, listen. So what they say as a part of the second one, the third one is very simple. Number one, it is the statutory limit of rupees 20 lakh. It is as same as that the other one. You can take the actual gratuity received as the second limit. And what is the third limit? You take last 10 months average salary. What do you mean by last 10 months average salary? Just before retirement, you take 10 months salary divided by 10, you will get the average. It is not cumulative 10 months salary. They say average of 10 months salary. And the point is, if there is no change in the last 10 months salary, last drawn salary will be the average. Yes or no? If there is no change, no increment in the last 10 months salary, last drawn salary will be the last 10 months average salary. Are you all with me? Now there is a point. What do you mean by salary here? So this salary has a definition here. So let's understand what you mean by salary. Salary here means standard salary. Salary here means standard salary. What is standard salary? Basic salary plus DA if forms part of retirement benefit plus commission if it is expressed as fixed percentage of your total turnover. Hope you remember the definition of standard salary. So the very simple it is, last 10 months average salary, that average salary means it's a standard salary into completed year of service. What do you mean by completed year of service? Years. Fraction have to be ignored because they are not saying you have to consider in excess of 6 months. So whatever the fraction, you have to ignore. Say for example, 20 years at 8 months of service will be only counted as what? 20 years service in the third item, in the third category exemption. So if you are not covered under Payment of Gratuity Act, your exemption shall be least of the following. Which all are the limits? Either 20 lakhs, actual gratuity received, or half into last 10 months average salary into completed year of service. Fraction have to be ignored. Here salary means standard salary. I hope it is clear. Alright friends, so the next thing that you have to focus is, say I am receiving gratuity from 2 employers. Say I am receiving gratuity from what? 2 employers. Say I am continuously, simultaneously working in 2 companies. Morning shift company A, evening shift company B, and I am retiring from both the companies. Can I claim exemption under this section 1010 in both the scenarios? The answer is yes. I can claim exemption twice, but there is a thing that you have to focus. For example, I'll tell you. Say, Mr. JK retired from A Limited in the year 2021-22, and I received some gratuity. And I claim 15 lakh rupees as an exemption. According to the limits under 1010. I've applied the limits under 1010 and I claim 15 lakh rupees as what? Exemption. Thereafter in 22-23 or in the same year, whatever it is, I am retiring from I've retired from B Limited, another company, B Limited. When I'm retiring from B Limited, you have to be very careful. Then that statutory limit of 20 lakhs is there. If you are a government employee, then you cannot parallelly work anywhere. Because government is very strict. You are not supposed to do any side businesses. If you are some other category of employee, then only this scenario will come. So listen, for some other category of employee, the statutory figure is rupees 20 lakhs. Yes or no? The statutory figure is rupees 20 lakhs. When I am claiming gratuity exemption for the second time, what I need to do is, earlier I've already claimed 15 lakhs as an exemption. That 15 lakhs I have to reduce from the statutory limit of 20 lakhs. And the remaining 5 lakhs will be the statutory limit in the second exemption computation. The rest is same. Rupees 5 lakh actual gratuity received, or 15 by 26 into completed year of service into last drawn salary, whatever it is. Are you all with me? So if I am claiming gratuity exemption for the second time, then the first time when I claimed exemption, that amount of exemption I have to reduce from the statutory limit of 2 lakhs. It also means in a lifetime, a person can claim maximum exemption of rupees 20 lakhs, not more than that. Are you all with me? In a person's lifetime, maximum, if he retires 2, 3, 4, 5 times, doesn't matter, maximum gratuity exemption that can be enjoyed by the person under section 1010 is rupees 20 lakhs. Because earlier you have claimed any exemption, that figure you have to deduct from the 20 lakhs, and that balance figure will be the least of the following in the cases. Are you all with me? So this is how you compute gratuity exemption under section 10 of income tax. I hope it is clear. Now let's solve some problem in relation to this, friends. So please take question number 5. Please take question number 5. It's in page number 4. It's in page number 4, and solve it. The question starts with Mr. Ravi retired on 15/6/2022. So you can go through the question and please give me the answer. Alright friends, so listen, let's read the question and compute the answer together. So what they're saying is Mr. Ravi retired on 15/6/2022 after completing 26 years and 8 months of service. So he have a service of 26 years and 8 months of service, received a gratuity of 15 lakhs. At the time of retirement, his salary was basic is given, DA is given, commission is given, bonus is given. Compute his taxable gratuity assuming he is a private sector employee covered by Payment of Gratuity Act 1972. So this is the second category exemption. Private sector employee, that means other employee who is covered under Payment of Gratuity Act 1972. So let's compute his gratuity, taxable gratuity. So first of all, let's write actual gratuity received. Actual gratuity received. So how much is the actual gratuity received as per this question? It is 15 lakh rupees. Yes or no? It is 15 lakh rupees. Now he can claim exemption under section 10 subsection 10. Exemption under section 10 subsection 10 shall be least of the following. Number 1, limit number 1, it says rupees 20 lakhs. Rupees 20 lakhs is the first limit. Limit number 2 is actual gratuity received, that is 15 lakhs. Limit number 3 is 15 by 26 into last drawn salary. And here last drawn salary simply means what, friends? Last drawn salary here means it is basic plus DA of the last month of his employment. Yes or no? Let's go back to the question and understand what exactly is his basic and DA. At the time of retirement, his basic salary was 50,000 and Dearness Allowance was 10,000. 60% forms part of retirement benefit. So how much is basic plus DA? 60,000 will be basic plus DA. 60,000 per month will be basic plus DA. Are you all with me? You are not supposed to take yearly basic plus DA. Last month's basic plus DA is what we require. So 60,000 is the basic plus DA. So 15 by 26 into 60,000 into complete year of service or part thereof in excess of 6 months. He have 26 years and 8 months of service. So it have to be considered as 27 years because that 8 months is in excess of 6. So 27 years. Tell me friends, how much will be the figure? How much will be the figure coming? 9,34,600, 15. So whichever is lower means 934,615 is the lower figure here. And what we can do is, we can claim that 934,615 as an exemption, and the remaining taxable gratuity. How much will be taxable gratuity? 565. 385 will be the taxable gratuity as per alternate A. I hope it is clear. Now let's move on to alternate B. So alternate B, what they are saying is, alternate B, he is a private sector employee not covered by Payment of Gratuities Act. So he is a private sector employee and he is not covered by Payment of Gratuities Act. So what to do with that? So if he is not covered by Payment of Gratuities Act, let's compute. So how much is the actual gratuity received by him? That is the same 15 lakhs. So the limits, let's compute the limits. Limit number 1, it is 20 lakhs. Limit number 2, how much is the limit number 2? That is actual gratuity received 15 lakhs. What is limit number 3? Limit number 3 is half into last drawn salary. That means average 10 month salary. Yes or no? Now here salary means standard salary. Now how to compute standard salary? Basic salary, that is 50,000 plus Dearness Allowance, that forms part of retirement benefit. 10,000, 60% forms part of retirement benefit. That means 6,000 rupees only forms part of retirement benefit. Plus commission, if it is expressed as a fixed percentage of your total turnover. Here the commission is 1% of turnover. So it is right. It is a percentage of your total turnover. So you should take the commission as well here. Now listen, you have to be very careful while taking commission. They say 1% of the turnover and they have given yearly turnover. Yes or no? So 1 crore 20 lakhs into 1%. How much will be the figure? 1 crore 20 lakhs into 1%. How much will be the figure? 1 lakh? 1,20,000 is the yearly commission. It is the yearly commission. You need to convert it into monthly commission because you are taking monthly salary. Yes or no? So divided by 12. And how much will be the figure? How much will be the figure? That will be 10,000 rupees. Will be the monthly commission. So add 10,000 with this. So you tell me how much will be the monthly standard salary? How much will be the monthly standard salary? 66,000 will be the monthly standard salary. So based on that, we need to compute the third limit. So 66,000 into how many years of service he have? How many years of service he have? He have 26 years and 8 months. We have to take it as 26 years because in the third category, we need to ignore the fractions. So only 26 years. We can take 26 years into 26. How much will be the amount coming, friends? 8,58,000. 8,58,000 will be the figure coming. So whichever is lower will be 8,58,000. So after deducting that, how much will be the taxable gratuity? Taxable gratuity 6 lakhs. 42,000 will be the taxable gratuity. So friends, that is B. I hope it is also clear. And what is C? C, he says, is a government employee. Very simple. The entire 15 lakhs is allowable as an exemption. Because if he is a government employee, he can claim the entire gratuity as an exemption under section 10. I hope that is also clear. So moving on with the third component in salary. Hope you understood the concept of gratuity. Now let's move on to the third component in salary, that is said to be leave salary encashment. So please write a heading, leave salary encashment. Leave salary encashment. So let's understand what exactly is leave salary encashment. So friends, what do you mean by leave salary encashment? Listen. Say for example, I am an employee. I am Mr. JK. Alright, my employer, according to my company policy, I can take 100, not 100, I can take 20 leaves every year. 20 leaves every year. This is my eligible leave. Eligible leave means every employee in my company can take 20 days of leave in a year. Are you all listening? Say, I haven't taken any of those leaves. I haven't taken any of those leaves. Instead of 20, I will make it as 30, okay? Instead of 20, I will make it as 30. I haven't taken any of those leaves. That means I've worked for an additional 30 days. Yes or no? In my company, I would have taken 30 days leave, but I haven't taken any leave. That simply means I've worked for extra 30 days. If I work for extra 30 days, I should get salary of extra 30 days. Yes or no? So this salary given by the employer to the employee is said to be what? Leave salary encashment. You are encashing your leave as a salary. And this will be an income in the hands of employee. And definitely it will be taxable under the head salary. Till now, I hope it is clear. Now friends, in certain companies, what the employees will do, they will not encash this leave salary yearly. If you are encashing leave salary yearly, you are not eligible for any exemption. That entire leave salary will form part of your salary and will be taxable accordingly. But in certain companies, employees will not withdraw their yearly leave salary. What they will do, they will wait till retirement. At the time of retirement, they will completely encash their entire leaves. Are you all listening? In certain companies, what employees they will do, they will wait till the retirement date. At the time of retirement, they will encash their entire standing credit leaves. At that time, he will receive a lump sum amount. At that time, he will receive a lump sum amount. For that lump sum amount, he can claim what? Exemption. That's what section 10(10)AA of income tax talks about. So if you are encashing your leave at the time of retirement or at the time of death, all together for a lump sum amount, you are eligible to claim an exemption under 10(10)AA. That is 10(10)AA. That's what we are about to study. So under that, what we can write, encashment of leave, encashment of leave at the time of retirement, 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 then employee can claim exemption under section 10(10)AA. Employee can claim exemption under section 10(10)AA, and the exemption will be computed as follows. So the exemption shall be computed as follows. So let's understand how to compute the exemption. Let's understand how to compute the exemption. Listen friends, it's very simple. So what they are saying is, say if you are a government employee, then full amount you can claim as an exemption. Full exempted. In the case of government employees, you can claim full leave salary as an exemption. What in the case of non-government employees? Non-government employees, exemption shall be least of the following. Least of following. Exemption shall be least of the following. So let's understand which all are the least of the following limit. Number one, statutory figure rupees 3 lakhs. The first limit, they say it is a statutory figure and it is rupees 3 lakhs. Just like the 20 lakhs in gratuity, here the statutory figure is rupees 3 lakhs. Number two, actual leave salary. Actual leave salary received. That is number two. Number three, they say 10 months salary. 10 months salary. 10 months total salary. You take last 10 months total aggregate salary. And limit number four, they say cash equivalent of leave. Cash equivalent of leave. Cash equivalent of leave to the credit of employee. to the credit of employee, to the credit of employee, to the credit of employee, and put in brackets, earned leave entitlement, earned leave entitlement cannot exceed 30 days in a year. 30 days in a year. Cannot exceed 30 days in a year. What do you mean by this? So let's understand these limits by way of a simple example. Listen. Say for example, Mr. JK is retiring from a particular company. Mr. JK is what? Retiring from a particular company, say A Limited. There's a company called A Limited and Mr. JK is retiring from this A Limited. Now listen friends, at the time of retirement, according to this company, every employee can take 40 days leave. 40 days leave in a year. Are you all with me? According to the company policy, how much is the leave entitlement for an employee? 40 days per year. And JK have 20 years of experience. 20 years of experience. I have 20 years of experience and I'm right now retiring. This is my 21st year in between and I'm retiring. All right. Now, at the time of retirement, what I do is like, I haven't taken any leaves. I haven't taken any leaves at all. Are you all with me? Now, friends, you tell me, how much is my number of days of leave credit at the time of retirement? It is 800. How it become 800? I had a leave of 40 days every year and I've worked for 20 years and the total leave credit with me is 800 days. Are you all with me? Now, this will be converted into months. So what they will do is, say 800 days divided by 30 into, say my monthly salary. Say my monthly salary is 50,000. Monthly salary is 50,000. That means how much will be my cash equivalent? How much will be my cash equivalents? So it will be 13,33,333. So this will be my cash equivalents. Yes or no? Now listen, I'm receiving 13,33,333. Now I can claim what? I can claim exemption. Are you all listening? When I'm encashing my leave at the time of my retirement, I can claim what? Exemption. Now how to claim exemption? The first limit is rupees 3 lakh. For that, does not require any explanation. It's a statutory figure. So the first limit is rupees 3 lakh. And what is the second limit? It is actual leave salary received. That is 13,33,333. What is the third limit? 10 months salary. For here also salary have a definition. For the time being, forget about the definition. So last 10 months salary means, last salary is 50,000. Last 10 months salary means 50,000 into 10. Yes or no? That will be 5 lakh. 50,000 into 10, that will be 5 lakh will be my third limit. And how about the fourth limit? That is a tricky one. Cash equivalent of leave to the credit of employee. However, earned leave entitlement cannot exceed 30 days in a year. Here, according to the company policy, we had 40 days in a year. Are you all with me? But while computing the fourth limit, maximum leave entitlement shall be 30 days per year, irrespective of actual leave policy of your company. If the actual leave policy is 25 days per year, then it is okay. It shall never exceed 30 days a year. That's what they say. So what to do is, 30 days a year means 30 days into 20 years I have. So cash equivalence means 600 days. Yes or no? I have to convert it into what? Value money. So what to do is 600 divided by 30 into 50,000. How much will be my fourth limit? Tell me how much will be my fourth limit? 10 lakhs. So now whichever is lower shall be the exemption. And lower figure here is 3 lakh. So from 13 lakh 33,333 I can claim 3 lakh as an exemption, and 10 lakh 33,333 will be my taxable leave encashment. I hope this is also clear. Are you all with me? Now friends, there is a definition for the word salary here. There is a definition for the word salary. Salary here means standard salary. Very simple. What is standard salary? You tell me. Basic salary plus DA forms part of retirement benefit plus commission if it is expressed as a fixed percentage of your total turnover. That is the definition for standard salary. Here, when you convert cash equivalents, as well as when you take 10-month salary, you need to take standard salary as the salary. Are you all listening? I hope it is clear. It is very simple, friends. Now, here also the one thing that you have to be very careful is, if you are withdrawing or encashing your leave credit during the period of service, fully taxable. You are not eligible for any exemption. This exemption you will get only when you encash your leave salary at the time of retirement. Otherwise, it will be fully taxable. I hope it is clear again. Okay, friends, now let's solve a problem for a better understanding of this provision. So please take question number 6 from your question sheet. Question number, not 6, I'm sorry, question number 7. Question number 6 is not there. Question number 7. Please take question number 7 from your question sheet. It's in page number 5. It's in page number 5. Take question number 6, question number 7 and solve it. Okay, friends, so let's solve question number 7 together. Mr. Gupta retired on 1/12/2022 after 20 years and 10 months of service, receiving leave salary of 5 lakh. Other details of his salary income are given. Basic salary, DA, commission, bonus, leave availed during the service is for 80 days. His entitlement was 30 days leave every year. So one blessing is here. What is that? We don't need to recompute his leave credit because his yearly leave credit according to the company policy is only 30 days. So we don't have to recompute the leave credit first of all. Now, you are required to compute his taxable leave salary assuming he is a government employee. If he is a government employee, whatever leave encashment he received shall be fully exempted. Fully exempted. And how much is the amount that he received? It is 5 lakh, right? Entire 5 lakh is fully exempted. That's what we can say if he is a government employee. Now, what if he is a non-government employee? If he is a non-government employee, then we need to compute the exemption. So, how to compute the exemption? So, first of all, leave salary encashed. How much is the leave salary he encashed? It was 5 lakhs. Now, we need to compute the exemption under section 10(10)AA. So, exemption under section 10(10)AA shall be least to the following. What are the limits, friends? Limits shall be either rupees 3 lakh, statutory figure of rupees 3 lakh. Now, second one, actual leave encashment received, that is rupees 5 lakh. Third one, last 10 months total salary. And salary here means standard salary. What is standard salary? Basic plus DA forms part of retirement benefit plus commission, which is expressed as fixed percentage of your total turnover. Now, basic is given. Basic is 5,000 per month. And there is a problem here. Listen, in the question they clearly say that 5,000 per month is the basic salary, but there is an increment of 1,000 with effect from 1st April 2022. So right now is the retirement date, that is 1st December 2022, salary was 5,000. This 5,000 increase was, that means 1,000 increment was only from 1st April 2022. So last 10 months salary, when we take, what we need to consider is, how much is the last 10 months salary, friends? See, the year of retirement is December. Yes or no? So the past 10 months means November, October, then September, August, July, June, May, April, March and February. These are the last 10 months. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So on this 10 months, 5,000 was November, 5,000 was October, 5, 5, 5, 5, 5. From April 1st onwards, there was an increment. Yes or no? So April, how much is the salary, friends? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is the 10-month salary. So from April 1st, there was an increment. That means 4,000 in April. Are you all with me? From April 1st only, there was a salary increment. So, not 4,000 in April, it is also 5,000. In April also, it is 5,000. Now, 4,000 on March, because April, he got an increment. Now 4,000 in February. This is what we can write. Are you all with me? And there is no change in DA, so that we don't have to write all these things. This is only for your understanding. I've written so much. In examination, you don't have to write this much, okay? This is only for a better clarity. I've written all these past 10 months list. So tell me, how much is the past 10 months standard salary? What we can take is 5,000 into 8 plus 4,000 into 2 is the basic salary total. Yes or no? Now what happens with the DA? DA, they say 3,000 per month is the DA and 60% forms part of the retirement benefit. So 3,000 into 60% into 10 months plus, how about commission? It is 500 per month. So you can ignore the commission, because commission you should take only when it is expressed as a fixed percentage of your total turnover. Now listen, if you add everything together, how much is the last 10 months total salary? Total 10 months salary. How much is the total 10 months salary? Tell me. 66,000. 66,000 is the total 10 month salary. It is not per month salary. It is last 10 months total salary. Are you with me? Now 66,000 is the third limit. So 10 months salary. It is 66,000. Now what is the third limit? Sorry, fourth limit, friends. Cash equivalent of leave. That means you need to convert the leave credit into money. Are you all with me? How much is his actual leave credit? Listen, he has 20 years and 10 months of service. Only for completed year, a person will get eligible leave. Only for completed year, a person will get earned leave or eligible leave. That means 20 years of service he have. Every year, his leave entitlement was 30 days. So how much is the total leave entitlement? 600 days. Out of that, he availed a leave of 480 days. That means he took actually 480 days of leave. So how much is his credit at the time of retirement? 120 days is his credit. Yes or no? So when you need to convert that 120 days into salary. Are you all with me? We need to convert that 120 days into salary. For that, there is one more thing that you have to consider. That 120 days divided by 30 days into, what is the salary here? It is not last 10 months salary, or it is not last drawn salary. What department says is, you take average of last 10 months standard salary. For conversion, you should consider average of last 10 months salary. So in the theory, I haven't mentioned about it. So under the theory, you can write a note right now. Note, for the fourth limit, you can add one extra note. That means last 10 months average salary. For conversion of that leave credit into money, you should use last 10 months average salary. That's what the department says. So last 10 months average salary. How to compute last 10 months average salary? Very simple. You know 10 months total salary divided by 10. You will get the last 10 months average salary. Yes or no? You know last 10 months standard total salary. You divide it by 10, you will get last 10 months average salary. So what you need to do, into 66,000 divided by 10. How much will be that figure, friends? 66,000 into divided by 10 into 120 divided by 30, and that will be 26,400. So least of the following. Least means 26,400 will be the least figure. Yes or no? So that 26,400 you can claim as an exemption. And after claiming that exemption, how much will be your taxable leave encashment, friends? So the taxable leave encashment will be 4,73,600. That's it. That is the final answer. Hope it is clear. So the one point you are supposed to consider is, while computing the fourth limit, two things are there. Number one, a company's, irrespective of a company's policy, 1 year leave credit shall not exceed 30 days. This is number one. Number two, while converting the credit into money, you need to use last 10 months average standard salary for the purpose of conversion. These two are the important things while considering or while computing leave encashment exemption under 10(10)AA. I hope it is crystal clear. Alright friends, so the next concept that we have to study is provident fund, which is comparatively a larger component, alright, of salary. Provident fund, that is the next component of salary. Now, before starting provident fund, we should know what exactly is provident fund in India. And according to the Indian prevailing law, we can split provident funds into four. First of all, what is provident fund basically? What do you mean by provident fund? Say for example, after retirement, the employee requires some amount to live. Yes or no? So at the time of retirement, for his social security and other safety, what the employer does or what our law insists is, he should have a habit of savings. To make him save his money, what he need to do is, during the period of service, both the employee and the employer have to deposit to save money for employee's retirement life or post-retirement life. So during every month's salary, both the employer as well as the employee will contribute to what? This provident fund schemes. Say for example, I'll show you a simple example or a simple graph how exactly it works. Then only you will be able to conceptually understand the taxability of provident funds. Say for example, Mr. JK is an employee. Mr. JK is an employee of A Limited. So A Limited is the employer. A Limited is the employer. Mr. JK is getting a monthly salary of 10,000 rupees every month. 10,000 rupees every month is my monthly salary. From this 10,000, say JK is depositing 1,000 rupees to provident fund. This 1,000 rupees will be deducted by A Limited. That's how it works. JK does not have to go and deposit to this provident funds. Employer, while paying the monthly salary, will cut employee's portion from his monthly salary. So JK's portion of 1,000 will be deducted by the employer from his monthly salary, and JK only will get 9,000 rupees as what? Salary contribution per month, or that is the per month salary, net salary received by JK. And this A Limited have 1,000 rupees with them, which is deducted from the monthly salary of JK. Yes or no? And A Limited will contribute another 1,000 rupees from his own pocket. A Limited will contribute another 1,000 rupees from his own pocket, and he will deposit this 2,000 rupees to the provident fund. Provident fund account. He will deposit this 2,000 rupees to the provident fund account. At the time of retirement, there will be employer contribution to the provident fund, employee contribution to the provident fund, interest on employer as well as employee contribution. Are you all with me? At the time of retirement of employee, the provident fund, there will be an accumulated amount in the provident fund, and the accumulated amount composition is employer contributions will be there, employee contribution will be there, interest on employer contribution will be there, interest on employee contribution will be there. Are you all with me? So this is how the provident fund in India works. Now, according to the concept of income tax, there are four types of provident funds. According to income tax law, we can split the provident fund into four. Which all are the four types of provident fund we have? Number one, they say recognized provident fund. What do you mean by recognized provident fund? Recognized provident fund simply means a provident fund which is recognized by income tax department. Say for example, company MNCs like Tata and all, they maintain their own recognized provident funds. Their own recognized provident funds. What do you mean by their own provident fund? They'll start a provident fund by their own by appointing some trustees, and they will get a registration from the income tax department, and the income tax department, if they recognize it as a properly maintained provident fund, then it can be technically known as what? Recognized provident fund. Are you all with me? So what is the definition for recognized provident fund? Simply means a provident fund which is recognized by the income tax department is said to be a recognized provident fund. Second one, unrecognized provident fund. What do you mean by that? I am maintaining a provident fund, but I haven't get an approval from the income tax department, or I haven't approved, or I haven't given an application for registration of my provident fund. Unrecognized. Income tax department does not recognize it as a provident fund. We can call it as what? URPF, that is unrecognized provident fund. Next is statutory provident fund, alias SPF. What is statutory provident fund? Statutory provident fund simply means a provident fund which is maintained by Provident Funds Act 1925. Provident fund which is maintained by Provident Funds Act 1925 is said to be what? Statutory provident fund. If you are maintaining a provident fund according to the Provident Fund Act 1925, then that provident fund is known as what? Statutory provident fund. And there is fourth one that is said to be public provident fund. It is said to be what? PPF. What is public provident fund? Say for example, I am a self-employed person. I want to save amount. Say after 60 years, I'm planning to stop all my activities. So after 60 years, I need some lump sum amount to live my rest of the life. So in order to boost the savings, in order to, to develop a culture of savings, government says, I can maintain a public provident fund. With a recognized bank, say for example, nationalized bank, I can maintain PPF account. With this SBI and all, I can maintain PPF account and I can deposit small amounts to this public provident fund every year. When I deposit this small amounts to public provident fund every year, I am eligible for an 80C deduction. We will discuss it when we discuss chapter 6A deduction. 80C deduction we will call. I can deduct that deposited amount as a deduction from my total income. So at the time of retirement, I will get a lump sum amount. Then what is the purpose of this PPF? Only to promote the culture of savings. If you didn't save, then you have to depend upon the government. That will be a burden for the government to look after you. Yes or no? Whether they actually look after you or not is an altogether different story. But a people's welfare is the government's responsibility normally. So what they are saying is, after your retirement, you yourself have to find the money. For that, we are giving you an offer at the time of your service or at the time of your profession or at the time of your earnings. You deposit amount and claim deduction. Then at the time of retirement, you can enjoy the lump sum amount for your post-retirement life. If you are a self-employed person. Normally, PPF is maintained by self-employed person. It is not necessary. A salaried person also can maintain PPF account according to his own wish. So these are the 4 types of provident funds. And listen, let's repeat which all are the types of provident funds. Number 1, recognized provident fund. It means what? A provident fund which is recognized by IT department. Number 2, unrecognized provident fund which is not recognized by an IT department. Number 3, statutory provident fund, a provident fund which is maintained according to the Provident Fund Act 1925. And finally, public provident fund. That simply means what? You can maintain a provident fund by your own with a nationalized bank. That is said to be public provident fund. So these are the 4 types of provident fund we have. Now, this is not income tax. Now we are about to discuss the provisions of income tax. Only for the better conceptual understanding, I have introduced what is provident fund and how are the classifications of provident fund. Now what department says, when you deposit an amount to this provident funds, you are eligible for a deduction, exemption, benefits, etc. Are you all with me? So let's understand what is the impact of this provident fund during the period of employment. What do you mean by during the period of employment? Listen, during the period of employment, both my employer, me, will contribute to this provident fund account. Yes or no? When my employer contributes any sum to provident fund account, indirectly I am getting a benefit. What indirectly am I getting a benefit means what? Only for my benefit, employer is spending 1,000 rupees from his pocket. Hope you remember our example. Employer is spending 1,000 rupees from his own pocket for my benefit. So when employer contributes that 1,000 rupees to provident fund account, I am indirectly getting a benefit. That benefit have to be taxed as salary normally. Yes or no? But what exactly is the treatment when the employer contributes a sum? Whether I can claim deduction when I myself contributes a sum. These all are the things that we are about to discuss. So what all are the tax implications during the period of employment when you deposit any sum to SPF, RPF, URPF, PPF? What is SPF? Statutory Provident Fund. What is RPF? Recognized Provident Fund. What is URPF? Unrecognized Provident Fund. What is PPF? Public Provident Fund. So each fund's contribution, each fund's impact, that's what we are about to discuss in a table-wise manner. First, I want all of you to listen on this theory very well. Thereafter, I'll give you time to copy this table. First, you listen very carefully. Number 1, we will discuss about employer's contribution to SPF. Let's complete SPF first. Then we will move on to RPF. Thereafter, we will move on to URPF and finally, we will move on to PPF. Listen, simple topic. Employer's contribution to SPF is never taxable in the hands of employees. Employer's contribution to statutory provident fund is never taxable in the hands of employees. It has been fully excluded from the impact of taxability. Are you all with me? So employer's contribution to SPF not taxable. Employee's contribution to SPF allowable as a deduction. Employee's contribution to SPF, whether it is taxable, employee's contribution to SPF, whether it is taxable. See, listen. What is my monthly salary according to this example? What is my monthly salary according to this particular example? 10,000 rupees. Yes or no? But what I'm getting in my hands is only 9,000. But when I show my salary, 10,000 should be my salary. 10,000 should be my salary. And I can claim that 1,000 as a deduction from 80C, not as an expense from the head salary. Rather, the contribution, employee contribution, have to be claimed as a deduction under 80C. We will discuss it later when we discuss chapter 6A deduction. So the point is very simple. When employee contributes something to SPF, what is SPF? Statutory Provident Fund. Then what will happen? That equivalent amount of contribution from my salary is allowable as a deduction under 80C. Is that clear? Now, moving on. Now there is an interest component also. What do you mean by interest component? What do you mean by interest component? Every year on both employer contribution as well as employee contribution, there will be interest accrual. Yes or no? That is also my income. Not my immediate income, but my future income. What do you mean by immediate income? Every year I cannot withdraw that interest income, but every year there is an income accrual on my PF account. Yes or no? In future, at the time of retirement, I can simply withdraw all the money. So what they are saying is, interest is also not taxable. So pretty simple point in relation to SPF. Listen, employer contribution not taxable. Employee contribution allowed as a deduction. Finally, interest on both employer as well as employee contribution fully not taxable. So this is the impact of SPF at the time of period of employment. Now at the time of retirement, when you withdraw the amount, there is separate impact that we will discuss later. Alright, the second phase that we have to discuss is at the time of retirement, when you withdraw the amount, what is the income tax impact? That we will discuss later. First, let me complete the period of employment impact of IT. Now, moving on to the second point, that is to RPF, if you are contributing an amount, what exactly is the implication? When you are depositing or contributing an amount to RPF, what is RPF? Recognized Provident Fund. What exactly is the income tax implication? That's what I am about to discuss. Listen to the employer's contribution. So I've told you earlier, when my employer is contributing something to RPF, I am getting an indirect benefit. Yes or no? What is my indirect benefit? What is my indirect benefit? The employer is spending some money for my benefit. Alright. So what they say is, when my employer spends some money, it is allowable as an exemption, but full amount blindly is not exempted. What they say is exempted up to 12% of salary. And salary here means standard salary. What is standard salary? Basic plus DA forms part of retirement benefit plus commission if it is expressed as a fixed percentage of your total turnover. So listen friends, when my employer contributes something from his own pocket to the recognized provident fund, in my hands, that is not taxable, that is exempted, but there is a ceiling limit for that exemption. How much is the ceiling limit? They say up to 12% of standard salary is the maximum exemption. If there is excess contribution, that excess will be taxable as salary in the year of contribution itself. Are you with me? Normally nobody will contribute excess more than 12% because it's a hardship for the employee. Why hardship? I'm not getting the money in my hand. It has been deposited to the PF account, but I have to pay taxes from the other salary, the other portion of salary which I'm getting in my hand. I have to pay taxes for this contribution also from the other amount. Yes or no? I'm getting a monthly salary, a net amount of 9,000. From that 9,000, I need to pay taxes for the excess contribution also. So it will become a hardship for the employee. So practically nobody will contribute more than 12%. But in exam, they will contribute. In exam, there is no practicality. They will contribute more than 12%. So what to do in such cases? Up to 12% exemption. Over and above 12, that excess will be treated as what? Taxable salary. Moving on. What happens when the employee contributes employee contributes for the benefit of himself? Again, from his taxable salary only he contributes. As I've told you, 10,000 will be salary. Out of that only he will contribute. That contribution he can claim as a deduction under 80C. Just like SPF, he can claim a deduction under 80C. But under 80C, there is a ceiling limit. Maximum 1,50,000 is the yearly contribution that allowable as a deduction. That we will discuss when we discuss chapter 6A. For the time being, only understand when the employee, he himself contributes from his pocket to RPF, he can claim a deduction under 80C. Now, finally, the interest component. It is also exempted, but not fully exempted. They say exempted at 9.5% per annum. Any excess interest will be taxable as salary. That simply means interest. If the percentage of interest every year is more than 9.5, excess will be your taxable salary. How much interest is exempted? 9.5%. Up to 9.5% interest is fully exempted, not taxable. If your contribution is more than 9.5%, then the excess shall be taxable at what? Salary. So, to RPF is also very simple. What all are the components? Number one, employer contribution, exempted, but only up to 12% of standard salary. Employee contribution, allowable as a deduction, 80C. Interest component, exempted, but the maximum exemption shall be 9.5% interest. That's it. I hope it is clear. That is the impact of what? RPF. Now let's understand the impact of URPF. What is URPF? Unrecognized Provident Fund. Are you all listening? Let's understand the impact of what? URPF. Listen, it's very interesting. What is URPF? What is basically URPF? Income tax department is not recognizing that particular fund. Yes or no? Income tax department is not recognizing that particular fund, some fund. When your employer is contributing some amount to some fund, no impact. Why no impact? Because income tax department doesn't know whether that fund is for your benefit or not. You are being the employee. Say I am being the employer and you are the employee. I am contributing something to some fund. Income tax department doesn't know whether that contribution is for your benefit or not, because they don't recognize such a fund. Yes or no? So when the employer contributes anything for the benefit of employee to URPF, there is no tax impact in the hands of employee. Then you will think that this is more beneficial. Why? Because RPF over and above 12% shall be taxable. Here, how much you contribute, not taxable. Yes or no? But there will be implication at the time of withdrawal. At the time of withdrawal, when you really get the money, when the employee really get the money, there will be cumulative taxation. All the amount will be taxable. Are you with me? So it's the deferment of taxes. When you contribute something to what? URPF, the taxation is getting deferred. What is taxation is getting deferred? The taxability will be at the time of retirement, not at the time of contribution. Are you all listening? Moving on. When employee himself is contributing from his own pocket to URPF, no deduction. Why no deduction? Income tax department does not know to what fund you are contributing. They only know you are contributing to something. Why should we give deduction for your some kind of contribution? We should give. No, we shouldn't. So that's they say we will not give any deduction for your URPF contribution. Now interest is also not taxable. It is also tax deferment. At the time of withdrawal, we know how to tax you for. So at the time of deposit, go away. No problem. All right. We are deferring the taxability. Now, finally, moving on to the last point, that is said to be what? PPF. What is PPF? Public Provident Fund. Employer contribution, they say not applicable. Why not applicable? Why not applicable? Employer contribution. Self-employed persons only will take what? PPF. Even if employed persons take PPF, it have no nexus with your employer. Your employer is not going to contribute anything to your PPF. PPF is your personal account. On your own wish, you maintain that. Employer has no responsibility to contribute any amount to PPF. So there is no employer contribution as it is. Hence, that's why it is written not applicable. When you yourself are contributing to PPF, you can claim that contribution as a deduction under 80C. Again, interest on PPF is also not taxable. Any interest accrued on PPF is fully exempted. So this is the impact of what? PF account at the time of employment to SPF, RPF, URPF, PPF. We have discussed everything. I hope it is super clear for you. Now I want all of you to take a note of this particular table. Please copy down this table. Okay. So friends, I hope you have completed this particular table. Now we will move on to the second one, that is called as at the time of retirement. All right. Now during the period of service, when we deposit to that particular fund, we understood what exactly is the income tax implication. Now let's understand when we withdraw at the time of retirement, death, etc., what will happen? The implication is what we are about to discuss. Be very attentive. This is a little bit complicated. All right. Now listen. So the first point what we need to say is recognized provident fund, public provident fund, statutory provident fund. The payment received by an assessee from the following funds at the time of retirement or otherwise would be fully exempted from tax under section 1011 and 1012. Now listen, this wordings is not that correct. Even though departments say full exemption, we will not get full exemption. There are certain conditions, limitations, etc. So the point is, I want to rephrase this sentence. What I will say is, when an employee withdraw from recognized provident fund or a public provident fund or a statutory provident fund, he is eligible to get an exemption under section 10 subsection 11 and 10 subsection 12. Statutory provident fund and public provident fund withdrawals are eligible to claim exemption under 10 subsection 11. For the other one, recognized provident fund withdrawal is exempted under section 10 subsection 12. Are you all with me? So let's understand how exactly is this particular exemption. So I will write it by way of a flow chart. Let me draw a flow chart for a better understanding of income tax implication at the time of withdrawal. Listen. So please write with me at the time of retirement. At the time of retirement, what we can do is we can split exemptions into two. At the time of retirement, we can write any withdrawal from RPF bar, SPF bar, PPF is exempted, and the exemption has been splitted into two. The first set I will write exemption under section 10 subsection 11. Exemption under section 10 subsection 11. What they are saying is, when you withdraw an amount from public provident fund, PPF, I will write PPF bar SPF, you can claim an exemption at the time of withdrawal when you are withdrawing an amount from PPF or SPF. The section which provides exemption is 10 subsection 11. Are you all listening? The section which provides exemption is 10 subsection 11. As I've told you earlier, this 10 subsection 11 is not a full exemption. There are certain limitations. So let's understand what exactly is a limitation. So please listen. Under that, let's write a note. For the limitation. So what they say is, when you withdraw an amount from this particular PPF or SPF, we will consider SPF right now. When you withdraw an amount from SPF, what are the components you have in SPF? When you withdraw an amount from SPF, which all are the components in SPF? Employer contribution, employee contribution, interest on employer contribution and employee contribution. Yes or no? So the limitation is applicable for interest portion. What they are saying is, listen, income by way of interest income by way of interest accrued from SPF, from SPF, from SPF shall not be exempted, shall not be exempted, shall not be exempted, shall not be exempted if aggregate contribution, aggregate contribution, if aggregate contribution made by employee, made by employee exceeding rupees 2,50,000, exceeding rupees 2,50,000. So friends, listen, it's a bit technical. Listen. So what they are saying is, when you retire and you withdraw an amount from SPF, there will be employer contribution, employee contribution, interest on employer contribution, interest on employee contribution. These are the four components of your lump sum amount in SPF at the time of your retirement. Are you all with me? Out of these four components, three components are fully exempted. Which all are the three components? Three components are fully exempted. That is employer contribution, employee contribution, interest on employer contribution. These three components are fully exempted. There is absolutely no problem. These are fully exempted under section 10 subsection 11. But there is a restriction for the fourth component, which is the fourth component which is missing in this list. Which is that? Interest on employee contribution. Interest on employee contribution is also exempted, but there is a limitation. What is that limitation? They say income by way of interest accrued from SPF shall not be exempted if aggregate contribution made by employee exceeding 2,50,000 in a year. So we can write in a year as well. We can write in a year at the end as well. In a year. What do you mean by that? Say during the period of your employment, if in any year, if you have contributed an amount of more than 2,50,000 to SPF, then interest on that excess contribution over and above 2,50,000 alone will be taxable, and that too taxability is at the time of withdrawal. Are you with me? Say for example, every year employee contributes 3 lakh. Every year employee contributes 3 lakh. Every year employee contributes 3 lakh to this, say what? SPF. Are you all with me? Are you all with me? Employee contributes 3 lakh. Then on this 3 lakh he will get interest. On this 3 lakh he will get what? Interest. And this interest can be enjoyed by the person only at the time of withdrawal. This interest can be enjoyed by the person only at the time of withdrawal. At the time of withdrawal, interest on 50,000 will be fully taxable. What is the rate of interest? That we don't know. Depends upon the fund. Rate of interest we don't know. But the interest on that excess 50,000 alone will be fully taxable. Up to 2,50,000, interest is not at all taxable. Over and above 2,50,000, if you are accruing an interest income, that entire interest income will be taxable at the time of withdrawal. That's what the department says. Now, under that, let's write one more point. Let's write one more point under that. So, that is note number 2. Note number 2. In case of PPF withdrawal, in case of PPF withdrawal, in the case of PPF withdrawal, instead of 2,50,000, limit shall be 5 lakh. Limit shall be 5 lakh. What do you mean by instead of 2,50,000, limit shall be 5 lakh? That simply means, see, from SPF, when you withdraw an amount, the withdrawal over and above over and above 2,50,000 was only taxable. When it is the case of PPF, then interest on excess contribution over and above 5 lakh only will be taxable. Say for example, every year a person contributes 6 lakhs. Every year a person contributes 6 lakhs to PPF. Interest on 1 lakh rupees will be taxable at the time of withdrawal. Interest on 1 lakh rupees shall be taxable at the time of withdrawal, because instead of 2 lakh 50, interest accrued on excess amount of 5 lakh will be taxable in the case of PPF. In the case of SPF, it is 2 lakh 50 and PPF it is 5 lakh. This is what they say. Now, moving on to the next point, under that there is one more note, note number 3. Note number 3. So the point is, any interest as above, if accrued on or before, any interest as above, if accrued on or before 31st March 2021, on or before 31st March 2021, shall be fully exempted. Shall be fully exempted. What do you mean by this? This means, simple point, these two notes which we have written, one on SPF and one on PPF, this is effective from 1st April 2021 only. 1st April 2021 only. That simply means, if there is an interest accrual over and above 2,50,000, then that interest accrued only on or after 1st April 2021 will be taxable at the time of retirement. In the case of PPF, interest accrued to a contribution which exceeds 5 lakh shall be taxable only on the accruals which happened on or after 1st April 2021, because this provision is there in the income tax with effect from 1st April 2021 onwards only. That's why I said all the interest accrued before 31st March 2021 shall be fully exempted. There is no income tax implication from PPF and SPF withdrawal for employee contribution or on contribution. This provision is there only from 1st April 2021. All the interest accrued before 31st March 2021 shall be fully exempted. So this is what the Act says as a part of your PPF and SPF contribution. I hope it is clear. Moving on. Moving on with the next point, that is withdrawal from RPF. What is RPF? Recognized Provident Fund. Exemption shall be enjoyed under section 10 subsection 12. You can claim exemption. Exemption can be enjoyed under section 10 subsection 12. So let's understand what exactly is the exemption under section 10 subsection 12. And in this 10 subsection 12 also, what they say is, this exemption under section 10 subsection 12, there are certain conditions. There are certain conditions to claim this exemption under 10 subsection 12. So let's understand which all are the conditions. Listen, let's understand the conditions, how to claim exemption and all. So the first thing they say, in the following cases, assessee can enjoy exemption. In the following cases, assessee can enjoy what? Exemption. So let's understand which all are the scenarios where assessee can claim exemption. So scenario number one, if employee retires after 5 years of continuous service. What do you mean by if employees retire after 5 years of continuous service? Are you all listening? What do you mean by employees retires after 5 years of continuous service? Simply means what? Say you are retiring. Only at the time of retirement you will get this Provident Fund. Yes or no? You are retiring after 5 years of continuous service. Then what is your advantage? If you are retiring after 5 years of continuous service, then you are eligible for an exemption under 10 subsection 12. You can enjoy the entire withdrawal as an exemption. If you have 5 years continuous service, don't even think about any taxability from withdrawal from RPF. What is RPF? recognize provident fund. Number two, if employee does not have 5 years continuous service, but sub point number 1, employee does not have 5 years of continuous service, but what he have done is he, after retirement, employee joined another company or another organization, we will write another organization, and balance in RPF transferred to new employee. What do you mean by that? So this looks like a very long point, but very simple point. Listen, say first point that you should know, if I have 5 years of continuous service, then I don't even think about what taxation. If I have 5 years of continuous service, then what will happen? If I have 5 years of continuous service, then all the withdrawals from RPF is fully exempted. I can enjoy exemption under 10 subsection 12. This is the first thing to note. Second point is, if I don't have 5 years of continuous service, then normally it should be taxable. If I don't have 5 years of continuous service, normally it should be taxable. But they say, if I don't have 5 years of continuous service, that means I've retired before 5 years. I've joined the company and retired or got out before 5 years. So for example, I'll give you an example. Say I've joined Tata in 2018-19. In year 1, I will call it as year 1. In year 1, I joined Tata. In year 3, I resigned from Tata. So year 3, I resigned. Whether I have 5 years of continuous service? The answer is no. I don't have 5 years of continuous service because on third year I got retired or I got resigned. Yes or no? But what I've did is, on third year I've joined another company called Reliance, or I'll say Jio. I've joined in Jio. And I've transferred all the RPF to this new employee. Rather than realizing the money, I've transferred all the money to the new employer. If it is the case, then there is no taxability. There is a withdrawal from Tata's account, but that amount have been deposited in Jio's account. Are you all with me? If it is the case, then there is no implication of income tax, because earlier Tata was the fund manager. Right now, he withdrawn all the fund from Tata and deposited the entire fund in Jio. It's a direct transfer to your new employee. So in such case, you haven't actually realized that money. You have withdrawn from the old account to the new employer. So you haven't withdrawn the amount, and hence there is no taxability. Are you all with me? Now, and thereafter, when you resign from Jio or retire from Jio, you can count combined service as 5 years. That means 3 years I worked with Tata, then another 3 years I worked with Jio, and after this 3 years I am retiring. A total period of service can be taken as 6 years. I can count the past employer experience also while counting that 5 years. Are you all with me? Now listen, moving on to the second scenario, that is second subpoint. I hope you are writing with me. At the time of retirement, entire RPF balance transferred to pension fund under section 80 CCD. So if the employer, say, retiring on the third year, the employee is actually retiring from the employer. Are you all listening? Third year employee has retired, and what he have done, instead of realizing the money, he transferred the balance. The balance is transferred to his pension fund under 80 CCD. Rather than realizing the money, he withdrawn the amount, but deposited the entire amount in 80CCD pension fund, National Pension Fund, 80CCD. We will discuss 80CCD when we discuss chapter 6A. For the time being, simply understand it as a pension fund. Withdrawn from RPF, deposited in pension fund. Again, no taxability. No taxability, it has been excluded from the ambit of taxation. You can enjoy the exemption under 10 subsection 12. Scenario 3. If retirement is due to health of employee, ill health of the employee, right? Ill health of the employee, or discontinuation of business of employer, or any other reason beyond control of employee, or any other reason beyond the control of employee. Alright, what do you mean by this? Listen friends, if retirement is, say, on third year, my health got bad, I got an accident, or my health got bad, I cannot work anymore, so I retired and withdrawn the amount. There is no taxability. Are you all with me? So on third or second or first year, if I am withdrawing the amount due to my ill health, there is no taxability. Or due to discontinuation of business of employer. What do you mean by discontinuation of business of employer? The employer's business got discontinued. He discontinued his business. Business was at loss. So on fourth year, he discontinued the business. I withdrawn my entire provident fund. There is no problem. Or any other reason beyond the control of employee. What do you mean by any other reason beyond the control of employee? Say for example, I lost my job not due to my activity, not due to my act. I lost my job due to some other factors which is beyond my control. Say for example, the government banned my company's product. Government banned my company's product and government recommended a compulsory liquidation. Then what will happen? I will lose my job. In such scenarios are not in my control. So in such scenarios, if I am withdrawing the amount before 5 years, I can claim what? Exemption under 10 subsection 12. Are you all here? So these are the scenarios where I can claim exemption under 10 subsection 12. Number 1 is a common point. Which was the common point? If I have 5 years of continuous service, I don't need to think about any other points, full exemption I can claim. If I don't have 5 years continuous service, then only I need to check the sub points. Which all are the sub points, friends? Which all are the sub points? So the first sub point what they say is, if I don't have 5 years of continuous service, what I need to check is whether after retirement I have transferred my entire RPF balance to new employee. New employer, not employee, new employer. If yes, no problem, no taxability. Whether after retirement I have transferred that entire balance to a pension fund. If yes, no taxability. Whether the retirement is due to my ill health, or due to discontinuation of business of my employer, or due to any other reason which is beyond my control. In such scenarios also, there is no taxability. Now, what if I've resigned by myself and I've enjoyed the entire amount by withdrawing the amount? It will be taxable. If I've resigned voluntarily without any other reason and I have transferred that, I haven't transferred that amount to any pension fund or to any other new employer, then what will happen? It will be taxable. Yes or no? Then how is the taxability? We can write it under that write a note. Under that write a note. If amount withdrawn from RPF is taxable, then taxability shall be same as the case of URPF withdrawal. Taxability shall be same as the case of URPF withdrawal. Array, what do you mean by URPF withdrawal? If RPF withdrawal is taxable, then the taxability will be similar to taxation of URPF withdrawal. What is URPF withdrawal taxation? That we are about to study. Are you all listening? URPF withdrawal we haven't studied yet. We are about to study URPF withdrawal. That is the next topic. Alright, so what they are saying is, if in any circumstance your RPF withdrawal is taxable, then the taxability will be similar to what? URPF withdrawal. That's what they say. I hope it is clear. Now friends, under that there is one more note. There is one more note under that. I hope you are writing all these notes. The last note under that, it says if employee contribution to a recognized provident fund exceeds rupees 2,50,000, then interest accrued thereon on excess contribution shall be taxable. The same point which we have written in SPF. Hope you remember. So this point is actually similar to that SPF taxability. If the employee from his own pocket is contributing over and above 2,50,000, interest accrued on the excess contribution shall be fully taxable. He cannot enjoy exemption under 10 subsection 12 on excess contributions interest. Excess means over and above 2,50,000. Interest on excess contribution is not eligible as an exemption under 10 subsection 12 at the time of withdrawal from RPF also. Now, there is one more note. What will be the note? Any interest accrued on or before 31st March 2021 shall be fully exempted under section 10 subsection 12. Why? Because this is effective from 1st April 2021 onwards. So, we can write second note. Any interest accrued on excess contribution up to 31st March 23, sorry, not 23, 21, shall be fully exempted. In accordance with section 10 subsection 12. What do you mean by in accordance with section 10 subsection 12? For that interest also you should have that 5 years experience or the other conditions which we have discussed under 10 subsection 12. Exemption will be as per section 10 subsection 12 always. So, the point is very simple. From 1st April 2021 onwards, if the employee is contributing over and above 2,50,000 rupees to RPF, interest accrued on that particular excess contribution shall never be exempted. You have to pay taxes whether you have 5 years continuous service or not. That's what they say at a part of this. I hope this is clear. Now, to the main other part, withdrawal from URPF. That's what we are about to discuss. So let's understand withdrawal from URPF, friends. Listen. So withdrawal from URPF. Now friends, you have to be extremely attentive here. Alright. So what was URPF? What was URPF? Unrecognized Provident Fund. When you are withdrawing some amount from URPF, how to compute taxes on that particular withdrawal? Let's understand. So what they are saying is point number 1. In URPF account, there will be 4 components. Which are the 4 components? Employer contribution, employee contribution, Interest on employer, interest on employee. Yes or no? Now, when you are withdrawing, accumulated employer contribution shall be fully taxable under the head salaries. When you are withdrawing an amount from unrecognized provident fund, all the accumulated employer contribution shall be taxable under the head salaries. Because at the time of deposit, we have deferred. Hope you remember. At the time of deposit to URPF, employer contribution, it was not at all taxable. The complete taxation, I've told you it earlier, the complete taxation have been deferred, and that will happen at the time of withdrawal. That's what they say. All the employer contribution, out of that lump sum amount you withdraw, out of that how much is the employer contribution, that entire contribution will be taxable under the head salaries. Number 2, accumulated employees contribution not taxable. Why? Accumulated employee contribution, they say not taxable. Reason? Already that is taxable as your salary. Out of that amount only you contributed to the unrecognized provident fund. It is just like getting back the money. Are you all with me? See, for example, when you are depositing money in bank and withdrawing the amount, it is not your income. Only the interest component is your income. It is just like you deposit and withdraw. At the time of receipt of salary, your entire income is taxable. Out of that taxable income only you have deposited to URPF. Now at the time of withdrawal, you don't have to show it as your income again. So it is not at all taxable. Then, third one, accumulated interest on employers' contribution again shall be taxable under the head salaries. Employers' contributions interest alone again will be taxable under the head salaries. And how about employees' contribution interest? Under IFOS. Because it is an unrecognized provident fund. It is just like a bank deposit or something. Alright. So, when on employees' contribution, if there is an interest accrual, that interest shall be fully taxable under the head IFOS. So, very simple. URPF, listen. All the employer contribution, salary. All the employee contribution, not taxable. Interest on employer contribution, salary. Interest on employee contribution, IFOS. Done. Since we cannot enjoy any exemption, there is no condition, fully taxable. When there is an exemption, there is a problem. They will come up with some conditions here and there. Alright, there is no exemption. It is very easy, fully taxable. Only the head. That's what you have to remember. Employer contribution and his interest, salary. Employee contribution not taxable. His interest, IFOS. Done. I hope it is clear. Alright friends, now it's time for us to solve a problem in relation to this particular thing. So, read question number 8. Read question number 8 and give me the answer. Read question number 8, which is in page number 5 in your question sheet. Page number 5 in your question sheet and give me the answer. Alright friends, so let's understand how to solve this question. Mr. A retires from service on 31st December 2022 after 25 years of service. Following are the particulars of his income bar investment for the previous year 22-23. Basic pay is given, Dearness Allowance is given, lump sum payment received from unrecognized provident fund is given, deposits in PPF account is given. Out of the amount received from unrecognized provident fund, employer's contribution was 2,20,000. Interest on employer's contribution is 50. Employee's contribution was 2,70,000. Interest thereon is 60. What is the taxable portion of amount received from unrecognized provident fund in the hands of Mr. A for assessment year 23-24? So what is the question? Find out the URPF withdrawal income tax effect. You don't require this table at all, because that table is actually what? A distractor. What is a distractor? They have given some information. You will continuously read all the table figures and you will think, what is the nexus of this table with the answer? Alright. So, what we require is only this paragraph. Yes. So, let's understand how to compute the answer. Listen. So, employers contribution. How much was the employer's contribution in the question? It was 2,20,000. That will be taxable under the head salary. Now, interest on employer's contribution again will be taxable under the head salaries. How much is the interest on employer's contribution? 50,000. So, total taxable salary will be 2,70,000. And employee's contribution not taxable. Why? As I've told you, employee's contribution is not another income for the employee. His taxable salary he have contributed, thereafter he have withdrawn. So it is not an income at all for the employee. And how about his interest portion? Interest on employee's contribution, that is 60,000, will be taxable under the head IFOS. So the final answer is 2,70,000 under the head salaries, 60,000 under the head IFOS is the total URPF withdrawal income tax implication. I hope it is clear. Now listen. Can you go through question number 9 and give me the answer? Question number 9 is actually a continuation of question number 8. Alright, so please read question number 9 and give me the answer. So hope you have done that question. What will be your answer? Will your answer be different if fund mentioned above is a recognized provident fund? So what they are asking is, if it is a recognized provident fund, will your answer differ? Yes. What is the difference? Full exempted. Full exemption. Why full exemption? Array, full exemption, you have 25 years of service. Yes or no? And total employees contribution is only 2,70,000. Not yearly contribution. Total employees contribution is only 2,70,000. Yearly contribution if exceeds 2,50,000 only, then there will be a small problem under 10-12. There will be taxability on the interest component on the excess. Here your complete total contribution for the entire period of service is only 2,70,000. Yes or no? Hence what we can say is entire withdrawal is fully exempted. So full exemption you can claim. Your entire withdrawal will be fully exempted. I think it is super clear for you. So this is the impact of what? RPF, PPF and URPF and SPF. RPF, PPF, URPF, SPF. We have understood both at the time of deposit as well as at the time of withdrawal in a conclusive manner. I hope it is super clear for you. Okay friends, now let's discuss the next concept that is called as retrenchment compensation. Next component which we are discussing is retrenchment compensation because there is an exemption. I mean, friends, one more point I should tell you. We are not discussing all the components of salary. We are only discussing those components where he have an exemption or deduction. Rest of the components will be fully taxable. Are you all with me? Say for example in the allowances, I have only taught you exempted allowances and partly taxable allowances. The remaining allowances are fully taxable. Likewise, we are discussing only those salary components where we have an exemption or deduction. But the rest of the components will be fully taxable. So let's understand the next item that is called as retrenchment compensation. Never asked in exam, but still we will study all the conditions and other things in relation to this. So retrenchment compensation. Retrenchment compensation, which is under section 1010B of income tax. Which is under section 1010B of income tax. So friends, what do you mean by retrenchment compensation? What do you mean by retrenchment compensation? A kind of a layoff. Your employer is actually telling you to go away because not due to your problem. All right. Maybe due to his continuous losses or something, he is what? Discontinuing his employees. He is not discontinuing his business. He said tata bye bye to his employees. That is normally called as what? Retrenchment. Kind of a layoff. When you are retrenching your employee, you need to give them a compensation. You cannot simply say tata bye bye tomorrow morning. Is that possible? Not possible. You need to give them a compensation. And that compensation is an income in the hands of employee. Yes or no? That retrenchment compensation received by an employee is his income and hence it will be taxable. How to compute it? Let's understand. From the taxable amount, an employee can claim an exemption under section 1010B of income tax. So listen friends, when you are in receipt of retrenchment compensation, you can claim an exemption under 1010B according to the conditions given under 1010B. Now let's understand what exactly is the exemption. So we can write exemption shall be lower of the following. Exemption shall be lower of the following. So let's understand what all are the limits. So let's compute the exemption. The limits shall be 15 days average pay, 15 days average pay into completed year of service, completed years of service or part thereof, in excess of 6 months, or part thereof in excess of 6 months, or point number 2, rupees 5 lakh, whichever is lower. So if you are in receipt of any retrenchment compensation, your exemption shall be computed as follows: either 15 days average pay into completed year of service or part thereof in excess of 6 months, or rupees 5 lakh, whichever is lower shall be your exemption, and the remaining shall be completely taxable. Are you all with me? Are you all with me? So here the average pay have a wider definition. You don't have to by heart all those definitions. Average pay for the time being simply means last drawn salary. Consider average pay as what? Last drawn salary, which includes all DA, all other benefits, everything, every other taxable salary components. All right. So it has a very huge definition. This has been never tested in our examination. So I won't give that much importance to this 1010B because it is really huge. The salary definition itself is half a page. So we don't have to simply by heart all those things. For the time being, simply understand 15 days pay means you take the last drawn salary at the time of withdrawn, at the time of retrenchment, into completed year of service or part thereof in excess of 6 months, or rupees 5 lakh, whichever is lower as the limit. Again, we don't have any question also because it has been never tested. So don't give more importance to this 1010B. Let's move on to the next point, next component under the head salary, that is voluntary retirement receipt. So voluntary retirement receipt, which is under section 1010C of income tax. Let's understand what exactly is this voluntary retirement receipt under section 1010C of income tax. Listen friends, what do you mean by voluntary retirement? That simply means you are retiring before your age. Say your retirement age as per the state law is 60 years. You are retiring at the age of 40. You are retiring at the age of 40. That retirement is called as what? Voluntary retirement. You are saying that done. Podum, enough is enough. I am not interested to continue my work. I am retiring. I want a peaceful life. I don't want any more work pressures. If you are retiring from your work like this, it is called as what? Voluntary retirement. And if you are voluntarily retiring from your service, then your employer is supposed to give you what? A voluntary retirement compensation. A lump sum amount at the time of receipt of voluntary retirement is said to be voluntary retirement receipt. When you are receiving voluntary retirement receipt, that will be an income taxable under the head salaries. That will be an income taxable under the head salaries, and you are supposed to pay taxes for that. But from the amount, what you can claim? You can claim an exemption under section 1010C, and that's what we are about to discuss. So listen, if you are voluntarily retiring, at the time of retirement, you will get voluntary retirement receipt. That voluntary retirement receipt, from that amount you can claim an exemption which is mentioned under 1010C. That's what we are about to discuss. So let's understand how much is the exemption. It says least of the following. Least of the following shall be the exemption. Least of the following shall be the exemption. Limit number 1, they say actual amount. Actual amount received. What do you mean by actual amount received? The actual voluntary retirement that you received. Number 2, they say rupees 5 lakh. Rupees 5 lakh. Number 3, they say, what they are saying is 3 months salary into completed year of service. Completed year of service. 3 months salary into completed year of service is the third limit. And the fourth limit is salary at the time of retirement. Salary at the time of retirement into balance number of months of service left. Now, next here is the word salary is defined here. Here salary means what? Standard salary. Here salary means what? Standard salary. What is standard salary? Basic salary plus DA forms part of retirement benefit plus commission if it is expressed as fixed percentage of your total turnover. That is said to be what? Standard salary. So listen, there are 4 limits under 1010C. Least of the following shall be your exemption under 1010C. And how to compute those limits? Number 1, actual amount received. Number 2, rupees 5 lakh statutory figure. Number 3, 3 months standard salary into completed year of service. What to do with the months? What to do with months? You have 20 years and 8 months. What to do? Only 20 years is the completed year. When they simply say completed year, ignore the fraction. When they simply say completed year, that means you have to complete a year to count it, right? Ignore the fraction. If they say part excess of 6 months and all, then you can round it off. Otherwise, you should ignore. Here you should ignore because they clearly say completed year. Then third limit is salary at the time of retirement. That means standard salary at the time of retirement into balanced number of months of service left. So you compute 4 of these. Take the lower as what? As the exemption under section 1010C. I hope it is clear. Now there is one point. To claim this exemption, either you should have 10 years of service, 10 years of service or 40 years of age. It's a minimum criteria. You are retiring at the age of 35. You are getting voluntary retirement compensation, fully taxable. If you want to enjoy the exemption, either you should have 10 years of service or you should have 40 years of age. Any of this condition have to be satisfied. Then only you can claim this exemption under 1010C. Otherwise, that will be fully taxable. Are you all with me? Either 10 years of continuous service or 40 years of age. 10 years of not continuous, completed service. That's what they say. Now, let's solve one problem in relation to this particular 1010Z exemption. So, listen friends, let's take the question sheet and go through question number 10. Go through question number 10. It's in page number 6. Page number 6. Go through question number 10 and give me the answer. Okay friends, so let's solve the question together. Mr. Datta, not age is given. Mr. Datta received voluntary retirement compensation of 7 lakh after 30 years and 4 months of service. He still have 6 years service left. At the time of voluntary retirement, he was drawing a basic salary of 20,000 per month. Dearness Allowance, which forms part of pay. What do you mean by which forms part of pay? If they say which forms part of pay, that means it forms part of the retirement benefit. It is 5,000 per month. The compute is taxable voluntary retirement compensation, assuming he does not claim any relief under 89. Relief under 89 is for the salary arrears. That we will discuss later. For the time being, he is not getting any arrear, or he is not taking any relief for arrears of salary. Can he get the benefit of 1010C? That's what we are about to discuss. The answer is yes. He can claim the benefit under 1010C. How to claim exemption, friends? Listen. So, to claim the exemption, there are certain limits that you need to consider. Which are the limits? So, first of all, let's write voluntary retirement compensation amount. How much is the compensation amount? It is 7 lakh rupees. Now let's compute the limits under section 1010C. How much are the limits under 1010C? Number 1, first one is a statutory limit. How much is statutory limit? Rupees 3 lakh. Sorry, rupees 5 lakh. 5 lakhs is the statutory limit. And how much is the actual compensation received? 7 lakhs is the actual compensation received. That is the second limit. And what was the third limit? 3 months standard salary into completed year of service. So 3 into, how much is standard salary? So in the question, basic salary they have given. How much is the basic salary? It is 20,000 per month. And Dearness Allowance forms part of pay is 5,000 per month. So total it is 25,000 per month. So 25,000 per month into completed year of service. He have 30 years and 4 months. So you take 30 years. What will be the limit? It will be a huge one. How much will be the figure, friends? 22,50,000 will be the amount coming. Now listen, how about the fourth limit? How much is the fourth limit? Last drawn standard salary, that is 25,000 into remaining months of service, not years, remaining months of service left. In the question they say he have remaining 6 years of service. Yes or no? So 6 into 12. You have to convert it into months. So how much will be the fourth limit? 18 lakh. So you tell me which is the lower figure. 5 lakh statutory figure is the lower limit and you can claim 5 lakhs as an exemption and the remaining 2 lakh will be fully taxable. I hope it is clear. This is voluntary retirement compensation. Okay friends, now it's time for us to discuss the next concept, next component, that is a huge component, that is perquisites. After finishing perquisites, we have deductions also. After that, we can say salary chapter is over, but perquisites, it's really vast. All right, so let's write a heading, perquisites. Perquisites. So what do you mean by perquisites, friends? Perquisites means an additional benefit given by the employer to the employee. It can be monetary, it can be non-monetary as well. So perquisites can be monetary as well as non-monetary. So let me ask you one question before we start perquisites. What is perquisites? Extra benefit given by the employer to the employee. What is allowance? Extra amount, fixed amount given by the employer to the employee to meet expenditure of employee. What is the difference between allowance and perquisites? What is the difference between allowance and perquisites? Both are same. No, both are not same. What is the difference? Allowance means fixed. Irrespective of your actual expenditure, employer will give you fixed. That's it. Perquisite means either employer himself will give you the facility or he will reimburse your actual cost. Say for example, house rent allowance. What is house rent allowance? House rent allowance means fixed monthly sum given by the employer to you to cope up with your rental expenditure. Perquisite can be given, house can be given by way of perquisite also. Either the employer will give a house for you to stay or he will repay your actual rent. In such scenario, we cannot call it as allowance. We'll call it as perquisite. So what we can say, perquisite will always have a nexus between your actual expenditure, where allowance does not have. Allowance will be always monthly, fixed, irrespective of your actual expenditure. I hope this much is clear. Now, perquisite can be divided into 3. You can split perquisites into 3, friends. So let's understand what all are the splits of perquisites we have. That means perquisites taxable in the hands of all employees. Perquisites taxable in the hands of all employees. Number 1. Number 2, perquisites exempted in the hands of all employees. Perquisites exempted in the hands of all employees. And finally, perquisites taxable only in the hands of specified employees. Perquisites taxable only in hands of specified employees. So these 3 are the 3 types of perquisites. Number 1, taxable in the hands of all employees. Number 2, exempted in the hands of all employees. Number 3, taxable only in the hands of specified employees. Who are specified employees? We will discuss it later. For the time being, just understand that there are 3 categories of perquisites. Now let's discuss each and every perquisite. So friends, listen. From here onwards, we are taking each and every perquisites and we will understand each and every perquisites in different permutations and combinations, so that in examination, however they complicate the scenario, you will be able to answer. Are you all with me? So we are taking one perquisite, then we are understanding it, rather than going with the taxable, non-taxable, etc., etc. So the way we study perquisites will be altogether different. We will take one perquisite, we will think it in different permutation and combination, then we will move on to the next perquisite. It will be like that only. So let's start with perquisites. Under that, we should know a few things in relation to perquisite. First of all, the first point that I want to focus on is, I'll call it as point number 1. Point number 1 under perquisites, that is, any contribution made by employer for the benefit of employee, to subpoint number 1, a recognized provident fund, or subpoint number 2, NPS. What is NPS? National Pension Fund, National Pension Scheme. Or point number 3, approved superannuation fund. So listen friends, any contribution made by employer for the benefit of employee to any of these funds, to the extent it exceeds 7,50,000 rupees, shall be taxable as perquisites. The first item shall be taxable as perquisites. This is the first item that we are discussing in perquisites, and it is very, very, very complicated. All right. So listen, let's understand what exactly is the impact of this paragraph. Listen. You know what is RPF? You know what is NPS? What is superannuation fund? What is superannuation fund, friends? Listen. Yeah, actually I asked you a question. What is superannuation fund? So what is RPF? Recognized Provident Fund. What is NPS? National Pension Scheme. This is like giving you pension. Superannuation fund is also like a retirement scheme. It is also a retirement scheme where your employer will collect fund from you, and he also will contribute to that particular fund, and it is given at the time of retirement, maybe by way of different installments or by way of lump sum. All right. So superannuation fund can be called as another retirement benefit given by the employer to the employee. Now listen, what department say, if you are being an employer, be very careful, okay? You are employer and you are contributing for the benefit of employee either to RPF or NPS or superannuation fund or all together. We can say aggregate. If aggregate contribution to all these funds exceeds 7,50,000, then the excess shall be taxable as what? Perquisite in the hands of employee. Simple example. An employer, say A Limited, is contributing for the benefit of employee to RPF, and the amount of contribution is 10 lakh. A year, this employer is contributing an amount of how much? 10 lakh rupees. How much is excess of 7,50,000? 2,50,000. Yes or no? So 2,50,000 is the excess contribution. This 2,50,000 shall be fully taxable in the hands of employee as what? Perquisites. This is what the department says. So when you are contributing something to recognize the provident fund and the contribution in amount exceeds 7,50,000 altogether, it becomes, say for example, to RPF they have contributed 3 lakhs. To NPS, he have contributed another 3 lakhs. To superannuation fund, he have contributed 4 lakhs. Altogether it is 10. Then only excess 2,50,000 again will be taxable as what? Perquisites. So in aggregate, if contribution made by an employer for the benefit of employee to either NPS, RPF or superannuation fund, altogether if exceeds 7,50,000, excess will be taxable as what? Perquisites in the hands of employees, because he is the person who is going to enjoy the benefit in future. So they say the excess will be taxable as what? Salary under the head, perquisite under the head salaries. Are you all with me? Moving on. Now, point number 2. Point number 2. Interest on such excess contribution. Interest on such excess contribution as above also shall be taxable as perquisite. Taxable as perquisite. Interest on the above also, above means excess contribution, as above also shall be taxable as what? Perquisite. What do you mean by that? See, in the last example, I have told you the excess contribution was 2,50,000. Yes or no? Now, in every year, in that particular recognized provident fund or superannuation fund or pension fund, there will be interest accrual. Every year, there will be what? Interest accrual. That interest on 2,50,000 is also a taxable perquisite. The 2,50,000 contribution given by the employer is a taxable perquisite. Every year, interest on that 2,50,000 is also another taxable perquisite. That's what the department says. So simply we can say, if employer is contributing to any of these funds and the aggregate contribution in a year exceeds 7,50,000, that excess shall be perquisite. Interest on that excess also shall be perquisite. Are you with me? Both the excess as well as the interest shall be taxable perquisites according to the income tax law. I hope it is clear. Now friends, there are some problems. Problem means certain issues are there. To find out the excess contribution, it is very easy. To find out the excess contribution, it is very easy. How? You take the annual contribution, check whether it is excess over and above 7,50,000. If yes, it is perquisite. But how do you compute interest on that excess contribution? Because there are certain issues. I'll tell you something. Listen, in the fund, say, forget about SPF and other funds. For the time being, focus only on RPF, because that's what we know better. Are you all with me? Forget about superannuation fund and pension fund. Let's take an example of RPF, that is Recognized Provident Fund. Listen, as I've told you, to the Recognized Provident Fund, employer is contributing 10 lakh. There will be employee contribution also. There will be employee contribution also. Yes or no? Yes or no? There will be employee contribution as well. I've told you this employer contribution when exceeds 7,50,000, excess shall be taxable as perquisite. So, first of all, we can say 2,50,000 shall be taxable perquisite. 2,50,000 on this shall be taxable perquisite. Interest on this also shall be taxable perquisite. But there is a problem. On this entire 20 lakh, there is interest. On this entire 20 lakh, there is interest. Yes or no? And there is another problem. Say for example, say this employee is employed in the company from 21-22, 22-23, say this year is 23-24. Say this is the third year. That employee is working in that particular company from 21-22 onwards. So this is the third year. All these years there will be contribution by the employer and by the employee. Yes or no? On that contribution also there is interest, that compounding effect. And there will be interest on interest also. Say for example, in 21-22 there will be employer contribution and employee contribution, and there will be interest. In 22-23 there will be employer contribution employee contribution plus balance of last year contribution. Are you all listening? If you didn't listen, this is a very technical area, tested multiple times in exam. So if you are thinking about something else, done. I'll give you a statement, I'll give you a written declaration. You won't be able to understand this by yourself. This is the most complicated topic in salary head. So listen, in 22-23, that 22-23's employee contribution is there. 22-23's employer contribution is there. Last year balance is also there. What is last year balance? Last year both employer and employee contributed, as well as interest is also there. That fund balance is also there. On that fund balance also interest is there. Yes or no? When it comes to year 3, that means 23-24, current year contribution is there. Plus last year fund balance is there. Last 2 years fund balance is there. So it is totally complicated to compute that interest on this excess. It is not that easy to compute interest on this excess. For that, department comes up with a formula. Department has developed a particular formula how to compute a taxable interest portion, not to compute the excess portion. For computation of excess portion, there is nothing. You take excess over and above 7,50,000. But for computing the interest component, it is very complicated. Hence, the department prescribes, it's a CBDT, prescribed a formula. So we are about to discuss that particular formula. So that is, interest of such excess contribution also shall be taxable as perquisite. Under that, what we can write, taxable portion of interest shall be computed as follows. There is an equation. The equation is PC by 2 into R plus PC1 plus TP1 into R. This is the equation. I will explain the equation in detail. For the time being, please copy this equation. PC by 2 into R plus PC1 plus TP1 into R. So this equation is for what? This equation is to compute the taxable interest perquisite portion. Interest on over and above 7,50,000 contribution. That interest, how to exactly spot, that's what we are about to discuss. So PC by 2 into R plus PC1 plus TP1 into R. Now let's elaborate this particular formula. Let's understand what exactly is what. Alright, listen. So let me write that formula again. What is that formula, friends? We will split that formula into two. First of all, PC by 2. First, let's consider PC by 2. After finishing that, I will take 2 into R. This is part 1. Then PC1 plus TP1 into R is the second part. We are splitting the formula into 2. This is part 1. And the other is part 2. The other one I will take it as part 2. So let's explain part 1 first. So PC means, please write, PC means aggregate amount of contribution, in excess of rupees 7.50 lakhs. In excess of rupees 7.50 lakhs. In excess of rupees 7.50 lakhs. Okay, tell me, what do you mean by this? In our example, how much is the figure? 2,50,000. How it become 2,50,000? Current year, how much you have contributed in excess of 7.5 lakhs to RPF, NPS or superannuation fund. That excess is PC. Are you all with me? So PC simply means what? Excess contribution done in current year to the respective funds is said to be PC. Now, what is R? R, we will write R is equal to I divided by FAVG. Under that, write R equals I divided by FAVG. Now, what is I? I means interest accrued. Interest accrued. Interest accrued during current year. During current year. So, I means what? Interest income accrued during current year. FAVG. FAVG means what? That is, it is said to be fund average. That's what FAVG. So, fund average. For that also there is a formula. So, let's understand what exactly is the formula for the fund average. Listen. So, under that fund average, please write aggregate amount in the respective fund on beginning of current year. In brackets write opening balance of fund. Write opening balance of the fund plus aggregate amount in the respective fund at the year end. In brackets write closing balance. Then under that divided by 2. Under that both divided by 2. What do you mean by this? Opening plus closing divided by 2 of that particular respective fund is said to be what? Fund average. Can you read this? Listen. Aggregate amount in the respective fund on beginning of current year. Current year opening balance you take. Plus aggregate amount in the respective fund on the current year end. That means current year closing balance you take. You add it together, divided by 2. You will get what? Fund average. Are you with me? Now, interest income divided by fund average will be the rate of interest. Yes or no? Current year interest accrued divided by the fund average balance will give you the rate of interest. So, R is what? Rate of interest. Are you with me? R is what? Rate of interest. What is PC? Aggregate amount of contribution excess of 7.5. So, the 2.5 into rate of interest will give you that first part of the formula. 2,50,000 into rate of interest will be the first part of formula. That means excess contribution in the current year into rate shall be the first part of formula. Till now, is that clear? Yes or no? What is this by 2? PC means what? Excess contribution over and above 7,50,000. R means what? Rate of interest. From where did you get this by 2? What is this by 2? Listen. How do you make a contribution to recognized provident fund? In the first year of month, you will make something. Second year, make something. So it is equally distributed throughout the month. Yes or no? Equally distributed throughout the year, not throughout the month, throughout the year. Every month you will contribute equally to that particular recognized provident fund. This is how you contribute to RPF. Are you all with me? So the problem is, see, say for example, current year I am contributing 12 lakhs. Say listen, current year I am contributing 12 lakhs. Employer contributes 12 lakhs to recognized provident fund. Friends, I am trying to explain the logic of divided by 2. If you are not getting the logic, by heart it. Alright, I am trying to explain the logic of each and every term in the equation. If you are not getting it, by heart it. That's it. Now, you will get it. It's very simple mathematics. But it looks like very complicated. If you are listening, you will get it. Trust me. So listen, I am talking about by 2, okay. I can teach you it as a formula. but I don't believe in by hearting all the concepts. We should know the reason behind that by 2. So listen, so 12 lakh is your yearly contribution. Are you all here? From April you will contribute 1 lakh, May 1 lakh, June 1 lakh. So likewise till March you will contribute 1 lakh each. Are you all with me? So this exceeds 7.50 lakhs. Then excess shall be the taxable perquisite, and on that excess you apply the rate, that will be the taxable interest also. Are you with me? So how much is the excess over and above 7.5 when you contribute 12 lakhs? 4,50,000. You cannot simply multiply 4,50,000 into the rate. Why? Because in the year's beginning, you don't have any excess contribution over and above 7.5. In the first year of the month, you will only have 1 lakh. In the first month of the year, is the first month for that particular current year, your contribution is only 1 lakh. Second month, it will become 2 lakh. Third month, it will become 3 lakh. Fourth, 5 lakh. So likewise, maybe on the 8th month, it exceeds 7.5 lakh. Yes or no? In the 8th month only, it exceeds 7.50 lakh. So what they are doing is, since your contribution is evenly throughout the year, you take the average of that too. You take the average of the excess contribution. So how to take average? Listen, how much is the opening excess contribution? Opening excess contribution, 0. Why opening excess contribution is 0? Because opening, I will never have any excess contribution. What is the closing excess contribution? That is 4.50 lakhs. In this example, closing excess contribution shall be 4.50 lakh. You divide it by 2. So that you will get the excess contribution average. Instead of saying 0 plus 4.50 divided by 2, they say PC divided by 2. Excess contribution divided by 2. They are taking it to average because the opening contribution is always 0. So instead of saying 0 plus PC by 2, that will become illogical. They are saying PC by 2. Are you all listening? So if you get the logic, it is fantastic. If you didn't get the logic, by heart it. So what is the first portion of the formula, friends? What is the first portion of the formula? Listen, PC divided by 2 into R. It's simply created for excess contribution into rate. Since it is evenly throughout the year, they are averaging the excess contribution. Opening 0 plus closing divided by 2. Instead of that, they simply say excess divided by 2 into R. R means the rate. How to find out R? Income divided by the fund average. Fund average means opening value of that fund in the current year plus closing value of that fund in the current year divided by 2 will get you the fund average. I means interest income which is generated throughout the year, current year. That entire interest income divided by fund average will give you the rate of interest accrued on that particular fund. That rate applied on that excess will give you the interest portion taxable as perquisite on and above 7.50 lakh contribution. Are you all here? So the logic behind the equation is actually nothing. So don't worry about by hearting it. Now, the formula is not yet over. The formula is not yet over. We have what? We have one more part. We have splitted that formula into 2. Yes or no? We have one more part to finish. So part 2. It is just like PS1, PS2. PS2 is coming. Alright. So, exactly like Ponniyin Selvan. PS1 is very complicated. Something happening somewhere, you are not getting any idea. Even people who are fluent in Tamil, when they watch Tamil version, they are not getting anything. Yes or no? Likewise, this example also, this equation is also very complicated. So, let's understand what is PC1 by T plus TP1 into R. So, under that write, PC1. Okay, under that we will write it like this. PC1 as aggregate amount of contribution, aggregate amount of contribution to the respective fund, which is above 7.50 lakhs. Aggregate amount of contribution to the respective fund above 7.5 lakhs for past years. for past years. For past years. If any. For the past years, if any. Commencing after 1st April 2020. Commencing after 1st April 2020. This is PC1. Now, what is PC1, friends? For understanding PC1, there are a few things that you should know. Listen, the first point for understanding the logic of PC1 is, this provision has been introduced in income tax from 1st April 2020. This provision inserted in income tax from 1st April 2020. Before that, how much ever your contribution is, there is absolutely no problem. Excess contribution was not at all taxable. So before 1st April 2020, if you contribute 20 lakhs to RPF, absolutely no problem. Are you all with me? Interest on the 20 lakhs, absolutely no problem. But from 1st April 2020 onwards, they have put some restrictions. If you contribute to RPF or superannuation fund or NPS and aggregate contribution exceeds 7.5 lakhs, excess shall be taxable perquisite. Interest on excess also shall be taxable perquisite with effect from 1st April 2020. Are you all listening? Now listen. I'll give you one detailed example to understand the logic of PS2. That means the part 2 of the formula. To understand the part 2 of the formula, I'll give you one detailed example. Be very attentive. Are you all listening? All right. So, for the example purpose, say I am Mr. JK. I am Mr. JK and I'll be the employee. I'll be the employee. And there is another person called employer. Employer. And there is some RPF contribution. There is some RPF contribution done by the employer. I joined on the company on 1st April 2020. This is my joining date. This is my joining date. I joined the company on 1st April 2020. We are computing for multiple years. All right, please listen. I joined on the company on 1st April 2020. That means the very first day when this provision was effective, I joined the company. Listen, my employer contributed 10 lakh rupees. My employer contributed how much? 10 lakh rupees to recognized provident fund. This is employer contribution. Forget about employee contribution because employee contribution is never going to be perquisite. Only employer contribution is going to be perquisite. So we are only taking that aspect. Now, listen, my employer contributed 10 lakhs to RPF. Now listen, in the year 2020-21, what I should do is, I need to compute the perquisite taxable perquisite. Yes or no? The first point is, over and above 7.5 lakhs is my taxable perquisite. So 2.50 lakhs is taxable perquisite. Are you all with me? 2.50 lakhs will be my taxable perquisite. Not yet over. Interest on 2.50 lakhs is also my taxable perquisite. Interest on 2.50 lakhs is also my taxable perquisite. How to compute that interest on 2.50 lakhs? Listen, for that, what we need to do is, we need to apply the formula. PC by 2 into R plus PC1 plus TP1 into R. We need to apply this particular formula to compute the interest component. Now, what is PC? Excess contribution over and above 7,50,000 in the current year. So, PC in this example will be 2,50,000 because current year in this example is 2020-21. We are computing the effect of 2021 right now. Are you all listening? So, PC is 2,50,000 divided by 2 into how much is R? Say for example, R is say 10%. I'm not complicating the example too much. R is 10%. So into R. How do I get 10%? Income divided by opening plus closing by 2. I got exactly 10%. So into 10%. Are you all with me? Then how much is the first part of the formula? How much is first part of the formula? Two lakh 50 by 2 will be 125 into 10%, that is 12,500. 12,500 rupees is the first part of the formula. This is the interest component. Are you all with me? Now, plus PC1. What was PC1? According to what we have written, what was PC1? It is the aggregate amount of contribution to the respective fund above 7.50 lakh for the past year, if any, commencing after 1st April 2020. That simply means it is for the past year excess contribution. Here in the example, in 2021, there is no past year excess contribution because I've joined the company on 1st April 2020. Are you all with me? So there is no past year contribution. Have you got this point? Not yet over. Let's write TP1 also. Let's write TP1 also. So TP1. Let's write TP1 here. So what is TP1? TP1, what they say is, so write TP1, aggregate of taxable perquisite. Aggregate of taxable perquisite of past years. Aggregate of taxable perquisite of past years. In bracket, interest portion. Interest portion commencing from 1st April 2020 onwards. Commencing from 1st April 2020 onwards. Commencing from 1st April 2020 onwards. Now, listen. What do you mean by this? Just go through the theory. What we have written is aggregate of the taxable perquisite of the past year, because this is a past year interest portion which is already taxed as what? Perquisite. Are you all listening? So TP1 means taxable perquisite of interest portion of past year which commences from 1st April 2020 onwards. That is also 0 in our example. Why? Because we don't have a past year. This is our first year and the first year is the 1st April 2020 on. Yes or no? So both TP1 and PC1 is 0, 0. 0 plus 0 into R. R is the same. Current year income divided by current year fund average is R. Are you with me? So that portion is 0. Are you with me? So the moral of the story is, on the first year of my employment, always second portion will be 0. On my first year of employment, I don't have last year excess contribution. I don't have last year taxable interest perquisite portion also. So always first year of employment, second part of the formula will be always 0. You don't need to by heart this formula basically. This is nothing. This is purely what? Conceptual. If you study in this method, trust me, in any permutation combination they ask, you'll be able to answer. The problem with by hearting is, you by heart one formula and you apply the formula in a particular question. If that same question they ask in exam, you can write. Otherwise, definitely you will get in trouble. You need to conceptually understand all these things. That's why I'm not wasting time. That's why I'm spending a lot of time for explaining the logic. Are you getting this? Now, note it over. Year 2. We are going to year 2. So, listen. Say year 2. Which is year 2 in our example? 2021-22. Are you listening? This is year 2. And in year 2, my employer contributed 12 lakh to RPF. My employer contributed how much? 12 lakh rupees to RPF. So year 2 also we need to compute what? Perquisite valuation. We need to do the perquisite valuation. First of all, excess contribution over and above 7.5 lakhs is my taxable perquisite. How much is my excess contribution? 4,50,000. Taxable perquisite, that is already over. Interest on that excess is also taxable perquisite. Yes or no? For that we need to apply formula in year 2. Yes or no? What is the formula? Repeat with me. What is the formula? PC divided by 2 into R plus TPC1 plus TP1 into R. Let's take the first part of the formula as usual. Let's take the first part of the formula. So in first part of the formula, what is PC by 2? What is PC, friends? Tell me. What is PC? 4,50,000 excess contribution of current year is PC. Yes or no? So 4,50,000 is PC. Divided by 2. Say R is ideal rate, again 10%. Assume the rate is 10% into R. Sorry, 10%. That portion will be how much? 4,50,000 divided by 2 into 10%. 22,500. Till now it is clear? Moving on to the second part. Second part, this year, year 2, there are figures in second part. According to our equation what we have written, what was TP1? Sorry, what was PC1? Aggregate amount of the past year, not current year, past year, which commences from 1st April 2020. Why? Because this amendment came on 1st April 2020. So in this example, past year excess contribution, that is PC1. What is past year excess contribution in this example? 2,50,000, because past year employer contribution was 10 lakh. Are you listening? Past year employee contribution was only 10 lakh. So past year employer contribution over and above 7.5 lakh will be 2,50,000. That is PC1. Yes or no? Plus, what is TP1? What we have written? Aggregate of taxable perquisite of past year, that is interest portion, commencing from 1st April 2020. That simply means last year taxable interest portion. Last year taxable interest portion is TP1. What is last year taxable interest portion in our example? 12,500 was the last year taxable interest portion. Yes or no? Plus 12,500 into R, 10%. Now tell me what is the logic of this second part. I haven't explained the logic yet now. What is the logic of the second part? Listen friends. See, Provident Fund is there till your retirement. This is year 2. In year 2, you will get interest on last year excess contribution also. On the entire fund, you will get interest this year. Yes or no? This year, you will have current year contribution. On that interest, we have used that first part of the formula. You have last year excess contribution also. On that last year excess contribution, you will get current year interest. Are you getting my point? On the last year excess contribution, you will get current year because it is there in the balance. That current year interest is 2,50,000 into rate. On the last year excess contributions, interest is also there in this year. Last year's excess contributions interest is there as a part of the fund this year. On that interest also you will get interest this year. On that last year's interest also you will get interest this year. On that also it should be treated as what? Taxable perquisite. That's what this 12,500 into 10%. 10% is current year interest rate. So this second part of the formula is for taxing past year excess plus past year taxable perquisite. In year 3, there will be 2 past year excess and 2 past year interest. In year 4, there will be 3 past year excess and 3 past year interest. The current relevant PY for your November 23 examination is 22-23. So the maximum toughest question from this lot will be, maybe we'll start from 2020-21, 21-22 and 22-23. The maximum toughest question will be with past 2 years. The maximum toughest question from this lot will be with past 2 years. They cannot complicate it further because we have understood all the complication and all the permutation combination. Are you with me? This is how you should study complicated concept. Complicated concept you should not leave. You should put your extra time on complicated concept because there are chances, very high chances to ask the same concept in your examination. Are you all listening? So this is how you compute taxable portion of interest element. Now let's solve one problem in relation to this. So can you just solve this question number 11? Question number 11 in page number 6. Question number 11 in page number 6. All right, friends. So let's read the question together. Mr. X appointed as CFO of ABC Limited in Mumbai from 1/9/2020. So he was appointed on the company from 1st September 2020. So that is his date of appointment. Now, his basic salary was 6 lakh and he is paid 8% as DA. He contributes 10% of his pay and DA towards a recognized provident fund and the company contributes the same amount. Accumulated balance in the recognized provident fund as on 1st April 2021, 31st March 2022 and 31st March 2023 is 50 lakh 35,000, 7146 and 9457,700 respectively. Compute the perquisite value chargeable to tax in the hands of X under 17 subsection 2 clause 7 and 17 subsection 2 clause 7a for 22-23 and 23-24 A wise. Sheri. Let's start with the initial point. So the first year onwards, let's start. So listen, he got employed on that company on 1st April 2000, not 1st April 2020, which was the date on 1/9 September 2020. So 1st September 2020, he joined that particular company. Yes or no? Now listen, from 1st September 2020, he joined the company and his basic salary was 6 lakhs. And how much was his DA? It was 8%, right? So how much is 8% on 6 lakhs? 48,000. So 6 lakhs 48,000 is his monthly salary. 648. And his employer was making a contribution of 10%. 10% was the contribution. So that will be 64,800. That is the monthly contribution. Yes or no? From September, October, November, December, Jan, Feb, March, it is 7 months. Into 7 months, how much will be the employer contribution? In 2021, 4,53,600. It is 4,53,600 less than 7,50,000 and hence in 2021, there is no perk impact. Yes or no? In 2021, there is no perquisite effect. Why? Because it is level less than 7,50,000. Yes or no? Now, in 21-22, in 2021-22, let's compute the contribution. 64,800 into 12 months. How much will be the employer contribution? Employer contribution for 21-22, 64,000 into 12. How much will be the employer contribution? 7,77,600. Yes or no? So 777,600 is the total contribution. Over and above 7,50,000. How much is the figure? Over and above 7,50,000. 27,600 is the excess contribution. That's when 27,600 will be definitely a taxable perquisite. Yes or no? This is 21-22. Taxable perquisite of excess contribution shall be 27,600. Not yet over. Interest on 27,600 is also taxable. How do you compute that interest? You have to apply the formula. And how to apply the formula? That is PC by 2 into R plus PC1 plus TP1 into R. Let's apply the formula. Listen, for that we require PC and R. We know how much is PC, excess contribution is PC, but we don't know what is R. Yes or no? For computing R, there are certain hints in the question. What is R? Income by fund average. Yes or no? Now listen. So let's compute R. That is income, interest income divided by fund average. This is what we can say. So how do you compute interest? Listen friends, the year which we are talking about is 2021-22. The year which we are talking about is 2021-22. So friends, as on 31st March 2022, on 31st March 2022, how much is the fund balance? On 31st March 2022, the fund balance was 71,46,700. Yes or no? It is given in the question. On 31st March 2022, the fund balance was 7146,700. How much is the opening balance? That means as on 1st April 2021, how much is the opening balance? It is 5035, 50 lakh 35,000. So if you deduct this opening balance from the closing balance, what will you get? Current year contribution as well as current year interest. Yes or no? Current year altogether full amount we will get. So how much is the figure? 7146,700 minus 5035. How much is the figure coming? 21 lakh 11,700. So this 21 lakh 11,700 contains employee contribution and interest. Yes or no? We know employer contribution and employee contribution because both are same. If you deduct that too, then the rest is the income. Divided by fund average will give you the R. Yes or no? So from this employer contribution, how much is the total employer contribution in 2021-22 to that particular fund? That is 7,77,600. That is the employer contribution. 7,77,600. The question says employee also contributes the same amount. Normally employer and employer contribution will be the same. So employee contribution is also the same. That is 7,77,600. If you deduct these two, how much will be the balance? If you deduct these two, how much will be the balance figure? 556,500. So 5,56,500 will be the balance figure. This is the current year income. Current year means 21-22 year income. Yes or no? Yes or no? Now you got income. That is 556,600. Now we require fund average. How do we find out fund average? Opening plus closing divided by 2 for the year. Opening we know 7146,700. Sorry, that is closing. 7146,700 is the closing. Plus opening is 5035. Yes or no? 50,35,000 divided by 2. Tell me how much is the fund average coming? 60,90,850 will be the fund average. Yes or no? So divided by 60,90,850. What? Tell me how much is the rate coming? You need to take it in full. 0.091366. Okay, we can take it as 0.0914366, right? All right, we can take 0.0914. It is always better to take 3 or 4 decimals for the accuracy of the answer. Always better to take 3 or 4 decimal places for the better accuracy of answer. So 0.0914 will be, or we can say 9.14%. 9.14 percentage. That is the rate. Now let's apply the rate here. So PC1 is 27,600 into 9.14%. Don't ask me, sir, from 0.0914, how do you get 9.14%? Basic mathematics, okay? So you apply this plus, not yet over. PC1 I will say 0. Why? Why PC1 is 0? Last year there is no excess contribution. Yes or no? That we have already written. Last year there is no excess contribution. So PC1 is 0. Where is that? Yeah, PC1 is 0. If PC1 is 0, then TP1 also will be 0. Because last year there is no excess contribution, then there is no taxable perquisite. So 0. So this portion is entirely 0. So tell me how much is the taxable perquisite for the year 21-22. Interest portion. 2,523. 2523. 2523 is the taxable perquisite. Let's mark this down. and 27,600 is the excess contribution as well, because we require these figures in the next year. Yes or no? We require all these figures in the next year. So let's move on to the next year. They are asked for the next year also. So year 3, that is previous year 2022-23 or assessment year 23-24. Now in 22-23 also the figure is same. How much is the excess contribution? Excess contribution 27,600, because the salary there is no change. DA also there is no change, and hence excess contribution there will not be any change. So that will be 27,600 is the excess contribution. That is point number 1. Now current year interest, you need to compute the formula again. So for the interest portion, I am applying the formula, that is PC by 2 into R plus PC1 plus TP1 into R. This year rate also changes, because every year depends upon that fund's performance, rate also changes. So don't take last year's R as this year's R. Every year you need to compute R. Are you all with me? It depends upon the fund's performance. The fund will invest these funds. The fund will invest these amounts in some other securities. They will make return. Are you with me? So based on the fund's performance only, there will be interest liability or interest income. Now PC1, you know, it is 27,600 divided by 2. We require R. So for R, let's do a format. Let's do a working note. So R is equal to interest income for 2022-23 divided by fund average of 22-23. So let's take the interest income. For how to find out interest income for 22-23? Same formula. Closing minus opening minus employer as well as employee contribution. Yes or no? So closing as on 31st March 2023. How much is the closing balance as on 31st March 2023? In the question, 94,57,700. How much is the opening? That is 71,46,700. Minus employer contribution 777,600 minus employee contribution, say 777,600. So if you deduct everything, you will get current year income. Tell me how much is the current year income? How much is the current year income figure coming? How much is the current year figure? 55,800 is the current year income. So we have 7,55,800 divided by, how to find out fund average? Closing plus opening divided by 2. So closing is 94,57,700. Opening is 71,46,700 divided by 2. Help me with the figure. 83 lakhs 2,200. That is the fund average. So 83,200. What will be the rate? What will be the rate, either in percentage or in figures? %104%. So 0.0910. Yes or no? Yeah. All right. Now let's apply this. Let's apply this on the formula 0.0910. So into 9.10%. That is called as 0.0910. So into plus, it's not at over. Now you tell me what is PC1? PC1. Past year's excess contribution. How much was the figure? Past year's excess contribution. Array, past year's excess contribution 27,600. Last year's excess contribution over and above 7,50,000. It is 27,600 in our question. So 27,600. plus last year taxable perquisite 2523 plus 2523 into same 9.10%. So tell me how much is the figure coming? Yeah, tell me. Total. I only want total. Basic mathematics. What is this portion coming? What is the figure coming here? 1255.8. We will take it as 1256. 1256 plus what is this portion? 2741 point. 1 second. Friends, listen. In 2021, in 21-22, not 2021, listen, there is a mistake in the answer. In 2021, the formula was PC by 2 into R. Alright, but we forgot to divide this 27,600 divided by 2 into R. Are you all listening? So, we forgot to divide that by 2. So, there is a small change in the answer. What we can do is, we can recompute it. Okay, let's recompute it. Let's not recompute the entire thing. Only the mistakes we will spot and recompute. Listen, there is a mistake in the taxable perquisite, this figure. This is for the year 21-22. Let's recompute it. So, recomputation, the formula should be PC by 2 into R. What the mistake we have done is we take the entire PC into R. We forgot it to divide it by 2. So, 27,600 divided by 2 into 9.14%. And how much will be the taxable perquisite? This divided by 2, what will be the figure? 1261 should be the perquisite instead of 2523. Are you with me? This is for the year 21-22. Now, there is no other mistake. Only that divided by 2 we missed. When it comes to 22-23, here 27 by 600 divided by 2 we have taken. But here the figure is not 25-23, it is 1261. That is 27,600 plus 1261 into 9.10%. Just tell me the figure. That is 2626. So, adding 1256 plus 2626, how much is the total perquisite portion of interest in year 2? 3882 will be the taxable value of perquisite in 22-23. So, listen, what was the mistake that we have done in solving the answer? In 21-22, we've written everything. But while calculating, we forgot to take divided by 2. So, we have corrected it. I hope it is clear. And the fantastic factor is everybody said, right sir. Alright. Anyways, I hope the concept is clear. Alright friends, so let's continue our discussion in perquisites. So, let me take the second perquisite, that is second perquisite which we are about to discuss is actually a very simple item. So, what we can say, it is telephone provided by the employer at the residence of employee. So, telephone provided by employer at residence of employee. What do you mean by telephone provided by employer at the residence of employee? Okay, tell me what is telephone provided by employer at the residence of employee means. The employer has given a phone to the employee. Employee can use that phone for official as well as personal purpose. It is at residence. So he can use it according to his wish. If he is using it for his personal purpose, then actually it is a perquisite. Yes or no? Because all the telephone maintenances, maybe the recharges, everything is done by the employer. It is normally a perquisite, but department say not taxable. Not taxable perquisite. There is no other condition. If the employer is providing employee a telephone at his residence, then it is not considered as taxable perquisite. What if it is given at office? What if it is given at office, whether it is taxable? At office means official, employee is not getting any personal benefit. Perquisite means due to your employer-employee relationship, you are getting a personal benefit. Then only will be taxable as what? Perquisite. If the employer is providing a phone at his official purpose, then definitely it is never regarded as a perquisite, whether it is phone or whether it is any other facility. Official purpose is not perquisite. So that is the second one. It is as easy as that. Now moving on with the next item, that is said to be exemption in respect of payment from superannuation fund. So third item, exemption in respect of payment of or payment from superannuation fund. Superannuation fund. 1013. This is not basically perquisite. It is actually a salary component. Okay, this is not basically perquisite. This is actually a salary component, which I forgot to explain earlier. So right now I am taking it. Are you all listening? This is not a perquisite basically. We were discussing perquisite. This is not a perquisite. It is a salary component. Since I forgot to discuss it earlier, I am considering it right now. So I am not numbering it as 3. I'm not numbering it as 3. So what the department says, if an employee is in receipt of, any payment from approved superannuation fund, then he can enjoy an exemption. He can enjoy an exemption under section 1013 in the following situations. Under section 1013 in the following situations. So he can enjoy an exemption under section 1013 in the following situations. So let's understand which all are the situations where he can enjoy an exemption. So listen, number 1, on death of beneficiary. On death of beneficiary. So listen, what do you mean by superannuation fund? In the morning session, I've told you what is superannuation fund. It is just like a retirement benefit. So if you are getting any payment under a superannuation fund, whether it is taxable or not, that is the question. You can claim an exemption under 1013 if it is on account of death of employee. That simply means the employee died. Any superannuation fund payment received by his legal heirs shall be fully exempted under 1013. That is the first point. Now, point number 2, it is received on becoming incapacitated prior to retirement. What do you mean by that? Say you have met up with an accident and you become incapacitated. Say for example, you lost a hand, you lost your leg, etc. You lost your head. That means death. Okay. You lost your hand, leg, etc. Then due to that incapacitation, the employer is releasing the superannuation fund. That is also not taxable in your hands. And the third scenario, transfer of funds to pension fund under section 80 CCD. So instead of enjoying the amount, you transferred that particular amount to whom? To what? To National Pension Fund or National Pension Scheme, which is referred under 80 CCD, just like that RPF. in the RPF point, we have discussed similar things. Instead of taking that recognized provident fund by yourself, you transfer the amount to NPS. Likewise, if you are transferring the amount to NPS, then it will be exempted. So all these three scenarios, it will be exempted. Otherwise, it will be taxable as salary. Any other mode of payment or any other circumstance, it will be taxable as salary. What 1013 says is, in these three scenarios, you can claim what? Exemption. In these three scenarios, you can claim exemption if there is any withdrawal from superannuation fund. I hope it is clear. Alright, so I hope this much is clear for you. Now moving on to the next is perquisite. Alright, next is actually perquisite. So we will number it as 3. The third perquisite which we are about to discuss. So number 3 in perquisites, that is leave travel concession. Leave travel concession. Leave travel concession, which is under section 10 subsection 5. Leave travel concession, which is referred under section 10 subsection 5. First of all, friends, listen. What do you mean by leave travel concession? What do you mean by leave travel concession? Okay, friends, tell me, what do you mean by leave travel concession? What is leave travel basically? Say, for example, you are my employees. You all are my employees, and I am sponsoring a travel, a tour for you. I am sponsoring a tour for you. What you can do is, you can travel, then you can stay at hotel, then you can have food, and you can go for shopping. All the expenses incurred by you, all the expenses incurred by my employees are reimbursed by employer. All these expenses incurred by my employees are reimbursed by the employer. Let me ask you one question. Is the employees getting any benefit? Is the employees getting any benefit? Yes. They can go for travel for free. They can stay at hotel, have food, have shopping, etc. at the cost of employer. Yes or no? So there is a benefit given by the employer to the employee, and this can be normally called as what? Perquisites. If you can call it as perquisites, then the employee should pay taxes for the value of perquisite that he received from the employer. Yes or no? If you can call it as perquisite, then the employee should pay taxes for the value of perquisite received from the employer. So what normally we need to do is, in such scenario, we need to compute the value of perquisite. But while computing value of perquisite, what section 10 subsection 5 says is, if you have gone for a leave travel, then you can claim exemption in accordance with 10 subsection 5. I'm not saying entire cost is exempted. So what the act says, you can claim exemption for the traveling cost alone, which is as per section 10 subsection 5. So when your employer is sponsoring employees tour, you can claim an exemption under 10 subsection 5 subjected to the conditions mentioned under, and the exemption is available only for what? Traveling cost. If your cost of stay, your food, your shopping, etc. has been reimbursed by the employer, that entire amount will be taxable perquisite in your hands. Only for the traveling cost, you can claim an exemption which is mentioned under section 10 subsection 5. Now friends, let's understand how to claim this exemption under 10 subsection 5. So the point is very simple. If you're going for a tour sponsored by employer, the traveling cost, stay, food, shopping, etc., reimbursed by the employer is a perquisite in your hands. Out of that, for traveling alone, you can claim an exemption under section 10 subsection 5. Now the question is, what are the conditions for claiming exemption under 10 subsection 5? So let's understand the conditions under 10 subsection 5. So listen, first of all, there is a limit. Before understanding what are the conditions, first of all, let's understand the limitation. You can go for 2 travels. You can go for 2 travels out of 4-year block. In a 4 calendar year block, you can perform up to 2 journeys, 2 travels, and claim this exemption under 10 subsection 5. Are you all listening? So the first condition that they say is, can you go for n number of travels and claim exemption? No. You can go for n number of travels. That is your choice. The employer can reimburse n number of travels. That is his choice. But income tax department have a choice. They only will say out of in a period of 4 calendar years, only 2 journeys performed by you is eligible for exemption under 10 subsection 5. What is this 4 calendar year block? What do you mean by a block of 4 calendar year? That simply means the department have some prefixed blocks. There are certain prefixed blocks. The Act says block starts from 1986 to 1989 because this is the first year that the department says. So the first block is from 1986 to 1989. Before that, let me ask you one question. What is your relevant PY? Say the relevant PY is say 22-23. This 22-23 comes under which block? This comes under January 22 to December 25 block. This comes under January 22 to December 25 block. From where this January 22 to December 25 came in? This is 22, 23, 24, 25. This is the relevant prevailing block. Are you all with me? This is the relevant prevailing block. This block is fixed. This block is what? Fixed. Say, I started my employment on 1st April 2024. I got a new job on 1st April 2024. I will automatically fall on which block? 22-25 block. It is not from the day from which I am getting a job. It's not from that date you have to count 4 years. The 4 years is fixed. Whenever you get a job, whenever you go for a travel, you automatically fall into the prefixed block. Are you all listening? So there are prefixed blocks in income tax. So the relevant block is 22-25. So if you perform any number of journeys, then up to 2 journeys in this particular block, you can claim what? You can claim an exemption under 10 subsection 5. So the first point is any 2 travels or 2 journeys out of 4 calendar year block, you can claim exemption under 10 subsection 5. That is the first point that you should know. Now, listen, moving on to the second point. So, what is the relevant block, friends? Relevant block. It starts from January 22, ends with December 25. Say, I haven't performed any journeys. I haven't performed any journeys in this particular block. Then department say, I can perform up to 2 journeys. Yes or no? I can perform up to 2 journeys in a normal calendar year block. I could have performed 2 journeys in this particular block, but I haven't performed any journeys. So what department say? In such scenario, I can take one of the unperformed journey to the next block. Which is the next block? Starting from January 26, ends with 27, 28 and 29, ends with December 29. This is the second block. This block will go like that. Are you all with me? Whether you have job or not, there will be prefixed block. When you get a job, you will automatically fall to that respective block. It is like that. So, what you can do is, in this block also you can perform up to 2 journeys. Yes or no? So, in the previous block, if you haven't performed any journeys, what you can do, out of 2 journeys, you can take one and you can carry forward it to the next year, next block. So, that simply means in the next block, you can perform 3 journeys. Not additional 3 journeys. You can perform additional 1 more journey, apart from the 2 journeys. But there is one more point. If I have performed 1 journey and claimed exemption under 10 subsection 5, then I can perform 1 more and claim exemption. If I already have performed 1 journey and claimed exemption in 22-25, I can perform 1 more journey in 22-25 because I can perform up to 2 journeys and claim exemption. That 1 remaining journey I cannot carry forward. Department is very clear. If I haven't performed any journeys in a block, out of that 2, only 1 can be carried forwarded to the next year. I already performed 1. Remaining 1, can I carry forward to the next block? Not possible. Are you all listening? If I haven't performed any journeys, then out of that 2, I can pick one and I can carry forward to the next block. If you have performed one, then there is no carry forward and all. Now, moving on. Now the point is, will you get your entire traveling cost as an exemption? The answer is no. You will not get the entire traveling cost as an exemption. There are certain other limits also. So let's understand which all are the limits. So let's understand the limits where you can claim an exemption under 10 subsection 5. So the limit the department say is, I have converted it into a table. So let's understand how exactly is that limits. Listen. So if the journey is performed by air, that means you preferred a flight. Are you all with me? Say you are in Chennai and you took a flight and you visited Delhi. You took a flight and visited Delhi. Now, all the flight ticket, your other cost, everything has been reimbursed by me. Who am I? I'm the employer. You are my employees. You performed a journey from Chennai to Delhi by flight. How much will you get as exemption? The exemption will be maximum air economic class fare of the shortest route. That simply means if you have gone in business class, you will get maximum economic class ticket cost as the exemption. Say for example, business class ticket cost was 1 lakh. 1 lakh is too much. From Chennai to Delhi, say we will say 45,000. 45,000. Then the economy class ticket cost is say 20,000. I have reimbursed 45,000. I have given the entire cost, but the maximum exemption that you can claim is only 20. Even though you have performed the journey in business class, you will get the maximum exemption only of the economy class. That's what they say, provided if you perform the journey by flight. If you are performing the journey by flight, then you will get the maximum exemption. What is the maximum exemption? Air economic class fare of the shortest route is your maximum exemption. Moving on. If you are performing the journey by rail, you pick a train, then what is your maximum exemption? Air conditioned first class fare of the shortest route. You can claim air conditioned first class AC fare as your exemption. Now, you are performing by any other mode. What do you mean by any other mode? You are going by road, by a two-wheeler or a car, you are performing by road. Then, first thing I have to check is whether your place of origin and place of destination have a railway connection. Say you performed a two-wheeler journey from Chennai to Delhi. You go, you pick a bullet for your journey. Alright, so journey was actually performed in a bullet. Now the question is whether there is a rail connection between Chennai and Delhi. The answer is yes. If your place of origin and place of destination have a railway connection, what you need to do? Maximum exemption is not your petrol cost. The maximum exemption shall be an amount not exceeding air conditioned first class rail fare by the shortest route to the place of destination. Even though I have reimbursed all your petrol costs, you cannot claim that entire amount as an exemption. Your maximum exemption shall be how much? The AC first class fare of the journey if you have performed that journey in a train. As if you have performed that journey in a train. Maximum exemption shall be Chennai, Delhi, first class AC fare. That's it. Not more than that. Are you all listening? Moving on. If the rail service is not available, that means you have performed the journey to Himalaya. There is no railway track from Chennai to Himalaya. So if you have performed the journey to Himalaya, then in two-wheeler, you perform the journey in what? Two-wheeler. Himalayan ride. Alright. So there is no railway connection between Chennai and Himalaya. So what to do? In such scenario, you should check whether there is a recognized public transport system exists. You should check whether there is a recognized public transport system exists. To Ladakh and all, to the Himalayan top mount and all, there is no recognized public transport system. What is recognized public transport system? A normal licensed bus is a recognized public transport system, or a stage carriage like a tourist bus, trip bus, etc. Tamil Nadu State Road Transport Corporation will be there. I'm not saying there's a journey from Chennai to Delhi and all, but just like that, if you have a recognized public transport system, if the answer is yes, then maximum exemption shall be amount not exceeding first class or deluxe class fare, as the case may be, on such transport system by shortest route. That simply means the maximum exemption shall be first class or deluxe class fare of that recognized transport system. Now the point is, you have visited the top of Himalaya in a bullet. There is no rail connection and there is no recognized public transport system as well. If there is a rail connection, you don't have to check anything. The rail fare, that's what you can take. There is no rail as well as there is no recognized transport system. Then how much is the maximum exemption? This is comedy. How much is the maximum exemption? Listen, amount equivalent to air conditioned first class AC fare, rail fare for the distance of journey performed by the shortest route as if the journey had been performed by a rail. Are, what do you mean by this? There is no railway connection first of all. There is no public transport system as well. You performed your journey in some other mode. Are you all listening? Then how much is the exemption? The first class AC fare as if you have performed the journey by rail. How do you get that rail cost? How do you get that rail cost? You take your phone, call the Indian Railway. Hello Indian Railway, I know that you don't have a railway connection to Himalaya, but say think it as an ideal situation. Say what if you have a railway connection? What would have been the first class AC fare? If you ask such questions, what they will say? They will say a lot of things. That's for sure. Right? Even if you ask about a train timing, they will never respond. Alright, they are supposed to respond. They are inquiring. If you call them and ask for a train timing, they will never respond. Now you are asking something which is not there itself. What if if it would have been a rail connection between my place of origin and destination, what would have been the railway cost? How do you find it out? Very simple. You find the nearest railway station, then you check the first class AC fare to that station, you claim it as your exemption. This is what we do practically. We cannot find out. It is not per kilometer. It's not per kilometer. Depends upon the train also it changes. Vande Bharat and normal ticket train cost is altogether different. So depends upon the train, depends upon the running time, the fare also changes. Alright. So it is not basically per kilometer. So there is no other way. What you need to do is pick the nearest railway station. You find out the first class AC fare. That you can easily find out. That you can check from the apps or website itself. You find it out, you claim that as your exemption. So this is what the act says. So it is very simple. Listen, let's repeat it again. If you have performed the journey in air, first class AC fare, economy class. If you have performed in train, first class AC fare of rail. If you have performed in some other mode where there is a rail connection, then again first class AC fare of the train ticket. Then you performed in any other mode. There is no railway connection, but there is recognized public transport system. Then deluxe class or first class fare of that particular public transport system. You performed in some other mode. There is no rail, no public transport system. Then first class AC fare of the train ticket, as if you have performed the journey by way of a rail or by making use of train. That's what they say. So this is what the maximum exemption that you can claim. Now it's not yet over. Now you can perform the journey during your period of service or after retirement. Absolutely no problem, and you can claim this particular exemption as well. Say after retirement, you performed the journey like this, and your employer has given you complete reimbursement also. Absolutely no problem. You are still eligible to claim what? Exemption. After retirement also, you can perform such journeys and claim what? Exemption. Now listen, there is another problem here. That means, see, your family, your children, you can pick everyone. It is not you alone. You can perform this journey along with your family members as well. What do you mean by family members, friends? What do you mean by family members? Respond. Spouse, wife, that spouse means wife, then children, etc. But there is a limitation for the number of children. You cannot take all of your children and you cannot claim full amount as an exemption. What department says is, listen, so restriction on number of children. So what they are saying is, exemption can be claimed for any number of children born on or before 30th September 1998. So if you are born, if your children is born on or before 30th September 1998, you can take n number of children, but it should be your children. Alright, you can take, say you have 5 children, which is born before 30th September 1998. You can take all of them and you can claim all their traveling costs as an exemption. But in addition to that, exemption is available only for 2 surviving children born on or after 1st October 1998. That simply means, say, I have 5 children which is born on or before 30th September 98. And I have 3 more children which is born on or after 1st October 1998. So how many children I have? I have 8 children. I don't have any other job. All right. Say I have 8 children. This is my only job. I have 8 children and I took 8 for a family trip. I took 8 of them for a family trip. Now the question is, me and my wife, 8 children went for family trip. Can I claim all of our traveling costs as an exemption? No, you cannot claim I cannot claim all of my traveling costs as an exemption. What I can claim is my cost, done. Wife's cost, done. 5 children which is born on or before 30th September 1998, I can take. But those 3 children, out of these 3 children, I can only take 2 children's traveling cost as an exemption. So that's what they say. If you have some children which is born on or after 1st October 1998, then out of n number of children I have, I can take only 2 children's traveling cost as an exemption. I can take all of my children. That is my choice. But I'm not supposed to claim exemption for the traveling cost of other children. I can claim only maximum 2 children's traveling cost. Now listen, they are also saying one more thing. Say, this 3 children, are you all listening? This 3 children I have, which is born on or after 1st October 1998, after the first birth, I have a twins. First, I have a daughter. Thereafter, I had 2 sons, that 2 twins. Then I have 3 children. Yes or no? But department say, however, the children born out of multiple birth after the first child will be treated as one child only. The children which is born in multiple birth after the first child should be considered as one only. What do you mean by that? I have a daughter first. Thereafter, I have 2 sons, that 2 twins. I have 3, but I can take it as 2. That means I can claim exemption for all of 3s. Are you all with me? If it is vice versa, I cannot. After twins, if I have 1 more born, then it will be counted as 3 itself. Are you with me? After the first birth, the next is multiple. It can be double, triple. Okay, are you all listening? It can be double, triple, how much ever God gives, I can take. All right. That will be counted as only 2. That's what they say. But vice versa, not possible. I have already twins. I have to stop it. Done. Then I have already a twins. Thereafter, I have 1 more child. That will be counted as 3 only. So that's what the department says. Now, fixed travel allowance given by the employer to the employee will be always fully taxable. This is not allowance. This is perquisite. And what is the difference between allowance and perquisite? Allowance means every month salary, my employer will give me some additional amount for the tour. Here it is not like that. The employer himself is sponsoring my tour, or he is reimbursing my entire tour expenditure. Out of that, traveling cost I can claim as an exemption under section 10 subsection 5. So listen, let's sum up the entire 10 subsection 5. Listen, if I am performing a tour, my traveling costs, my food and accommodation, my shopping, etc. will be taxable as perquisite. However, from the traveling cost, I can claim an exemption under 10 subsection 5. How much is the exemption? Up to 2 journeys performed in a block of 4 calendar years, I can claim exemption. That traveling cost, there is a restriction. Performed in air, economic air class. Performed in rail, first class AC fare. Performed in other mode where there is a rail connection, first class AC fare. Performed in other mode whether there is no rail connection but there is public transport system, deluxe class fare. Then no public transport system, the first class AC fare as if I have performed that particular journey in rail. That's what they say. And while performing this, there is one more thing. Your journey should be within India, otherwise you will not get the exemption. If you travel abroad, I went to France, I can The entire cost reimbursed by my employer will be my taxable perquisite. The journey should be performed within India. That is also important. Now, there are multiple points. Say, for example, from Chennai, initially I visited Kerala. Then I went to Jammu. Then came back to Chennai. Alright, so first I went to Kerala. Then I went to Jammu. Then I came back. Like a triangle. Are you all with me? From Chennai to Kerala. Don't say it is not triangle, sir, and all. But just like similar to a triangle. I went to Kerala, then to Jammu, then came back to Chennai itself. If it is so, then how to claim the exemption? From which is my place of origin? Chennai. Which is my farthest destination? Jammu. Farthest destination means the longest destination. So, if I perform this journey straight away to Jammu and for coming back, what exactly is the traveling cost? That only is my maximum exemption. I will not get multiple performance as an exemption. If I have visited multiple locations, then from the place of origin to the farthest point and coming back. That is the maximum exemption that I can claim under 10 subsection 5. That simply means the flight ticket incurred by me to visit Kerala. Then from Kerala to Jammu, not possible. Straight away from Chennai to Jammu, thereafter Jammu to Chennai. It is possible. Not Chennai, Kerala, Kerala, Jammu, not possible. That's what they say. Multiple location travel, place of origin and till the farthest destination. How much is the ticket cost? That much amount you can claim as an exemption under 10 subsection 5. The rest you cannot. Are you all listening? Hope it is clear. This employee can be a citizen of India or a non-citizen, doesn't matter. And again, as I've told you, this is only for the traveling cost you can claim exemption. For the other costs reimbursed by your employer, you cannot claim any exemption. And I hope this much is super clear for you. Alright friends, so now let's solve some problems in relation to this. So can you take page number 6, question number 10. Take page number 6, question number 10 and solve the answer. Alright friends, so let's solve it together. So let's read the question. Mr. D went on holiday on 1st December 2022 to Delhi with his wife and 3 children. One son aged 5 years, twin daughters aged 2 years. They went by flight and the total cost of tickets reimbursed by his employer was 60,000. 45,000 for the adults and 50,000 for 3 minor children. Compute the amount of LTC exempted. So let's compute it together friends. So Mr. D went on a holiday on 25 December 2022 to Delhi with his wife and 3 children. So listen. So there is D, his wife and 3 children. And 3 children is one son aged 5 years and twin daughter aged 2 years. So which is the firstborn? Sir, it is not given in the question, sir. Which is firstborn? One having 5 years is the firstborn. Then the twin daughters having 2 years is the elder ones, younger ones, right? So, son is the first one and twin daughters. So, after the firstborn, there are twins. So that twins can be treated as one only. Yes or no? So, what we can do is 45,000 rupees for the adults and 15,000 rupees for the children. All of them, all the cost. Journey is actually performed by flight and the economy class fare is given. So the entire 60,000 you can claim it as an exemption under section 10 subsection 5. And taxable perquisite shall be nil. Taxable perquisite shall be nil. Why? Because after the firstborn you have twins. So you can take everything. You can take that twins, that 3 as 2. And you can claim the entire cost as what? Exemption under 10 subsection 5. Now take the next question. You have one more question related to that. Take question number 11 and solve it. It is a continuation of question number 10. Okay friends, so that question is actually continuation of question number 10. So what they say, in the above illustration, that is illustration number 10, will there be any difference if among 3 children, the twins were 5-year-old and son 3-year-old? That means the firstborn is twins. Thereafter the son came in. So if it is so, then they have to be treated as 3 only. You cannot treat it as 2. Then they are 3 only. So what to do? For D and wife, they incurred 45,000. That is anyway exempted. For 3 children, they incurred 15,000. That means per children it is 5,000. Yes or no? 3 children, 15,000 per children, 5,000. That simply means out of this 3, only 2 you can claim exemption. Only 2 you can claim exemption. The remaining 1 will be taxable perquisite. Yes or no? So what we can do is, so actual amount is 60,000 and exemption shall be 55,000. How it become 55,000? 45,000 plus 10. The remaining 5,000 will be taxable perquisite. I hope it is also clear. So this is how you compute exemption under section 10 subsection 5. It is easy only. So whatever other costs reimbursed by your employer shall be fully taxable. Apart from the traveling cost, say food, accommodation, shopping, other amenities, entertainment, anything reimbursed by the employer shall be fully taxable as perquisite. Only for the traveling cost, subjected to the conditions under 10 subsection 5, you can claim what? Exemption. Moving on. So next perquisite is, the next item what we have to consider is medical facilities provided. That means perquisite number 4. Medical facilities. Medical facilities. So let's understand what all are the treatment of medical facilities given by the employer to the employee. From employer to employee. So friends, let me ask you one question. Listen, say for example, employee has some disease. Employee or their household has some diseases. The employer sponsored the entire treatment. Employer sponsored the entire treatment cost. Employee is getting a benefit. Yes or no? We can say that employee is getting a benefit. Why? Because the employee himself have to cure his disease. It is the employer who sponsored that entire cost. In such scenario, we can say the employee definitely have received some benefit from the employer by way of medical facilities. That entire benefit shall be fully taxable as what? Perquisites, subjected to the following exceptions. There are certain exceptions. The following shall not be regarded as perquisite. Are you all with me? Except following, whatever medical facilities provided by the employer to the employee shall be fully taxable as perquisite. So let's understand which all are the exclusions. So we are about to discuss the exclusions. Exclusions from taxable perquisites. Exclusions from taxable perquisite. So let's understand which all are the exclusions. Listen. So the first exclusion what they say is, value of medical treatment in a hospital maintained by the employer. Say for example, employer is giving free treatment in his own hospital. He owns a hospital. Employer owns a hospital. The employer gives free treatment to the employee or his family members in his own hospital. Then no perquisite valuation. But the employee is getting a benefit. If he had treated it in an outside hospital, he would have charged something. He would have paid something. That payment is not required if he undergoes a treatment in the employer's own hospital. But department say don't value any perquisite. If the employer is providing free treatment in the employer owned hospital, then no perk valuation. And the benefit can be enjoyed by the employee or member of his family. Are you all here? Hope you got my point. Moving on to the second point. Listen, any sum paid by employer in respect of an expenditure actually incurred by the employee on his medical treatment or treatment of any member of his family in a hospital maintained by government or local authority or any other hospital approved by the government for the purpose of medical treatment. That simply means, say, the first situation I've told you, employer provided free treatment in his own hospital. Scenario number 2, employer sponsored the medical expenses and the medical expenses are incurred in a government hospital. So the employee's treatment were held in a government hospital. There was some minimal cost. That cost was suffered by the employer. No perquisite valuation. Are you all listening? or the treatment is incurred in a local authority maintained hospital. Say for example, Panchayat hospital, municipality, corporation, etc. maintained hospitals. Then also no taxation, no perquisite valuation. Or finally, any central government approved hospitals like ESIC hospital and all. Any central government approved hospitals, if the employee is undergoing a treatment and the employer is reimbursing the treatment expenses, no perquisite. Are you all listening? So which are the two things which we have discussed? Number one, employer owned hospital. Number two, government hospital, local authority hospital, central government notified hospitals. And scenario number three, if the expenditure is incurred for a prescribed disease or ailment in a hospital approved by principal chief commissioner or chief commissioner. What they are saying is, say the treatment has happened in a private hospital. The treatment happened in a private hospital, but the treatment was for prescribed diseases. Income tax department prescribed certain diseases like cancer, tumor, etc. We don't have to study the prescribed list of diseases because it's a long list. We don't have to study. It is not there as a part of our syllabus also. It is not there. So what you need to understand is the employee has undergone a treatment for prescribed diseases in a notified hospital, notified by principal chief commissioner or chief commissioner of income tax. Either principal chief commissioner or chief commissioner of income tax has notified certain hospitals. Employee has undergone a prescribed disease treatment in those notified hospitals. Entire cost is reimbursed by employer. Again, no perk valuation. So, three things completed. Owned hospital by employer. Government hospital, local authority hospital, central government notified hospital. Then, notified hospital by PCC or C. PCC means Principal Chief Commissioner, CC means Chief Commissioner for prescribed disease. No perquisite valuation. Then, next is, third and fourth we can combine together and study. Any premium paid by the employer for health insurance of employee or any premium reimbursed by the employer for the health insurance of employee, not a taxable perquisite. What do you mean by premium paid by employer for the health insurance of employee? What is health insurance? Say for example, you have taken a health insurance, then what is your benefit? If you incur any medical expenses, that insured company will give you the payment. Either they will directly pay or they will reimburse the medical expenses. So here the policy is taken by the employer for the benefit of employee. Entire premium is paid by the employer either directly or by way of a reimbursement. Then also no taxable perquisite valuation required. So 3 and 4 we have combined together. Point number 3 they say premium paid to the effect of insurance. Point number 4 reimbursement of premium. So we have combined it together. And to the last point, that is actually an interesting point. Listen, let's understand the last point. I have summarized the last point. Let's study this table. Listen, say for example, you are an employee. Either you or your family member have undergone a treatment. The treatment was conducted in overseas. That was conducted in say US. So you traveled to US, you undergone the treatment, then you came back. You tell me what all are the associated costs. Number 1, traveling. Number 2, medical expenses. Number 3, staying abroad. Are you all with me? The entire cost is reimbursed by your employer. Your traveling cost, your medical expenses, your stay abroad. Everything have been reimbursed by your employer. Then what to do? That's what we are about to discuss. So, in respect of medical expenses, exempted to the extent limited by RBI. Reserve Bank of India permits certain limits. So RBI limitation is there. You will study this in CA final when you discuss FEMA. When we discuss FEMA, we can CA final law paper. CA final law paper under FEMA, you will come to know about this medical expenditure. So listen. So when you study FEMA, you will be able to know what exactly is the permitted limit by RBI. It is also called as there are certain parameters called LRS and all that will be covered as a part of FEMA, not as a part of income tax anyways. Now listen. So simply we can say your employee is undergoing a medical treatment overseas. All the medical expenditure is allowed as a exemption. You don't have to compute it as a taxable perquisite. It is excluded from the computation of perquisite. Number 1. Then cost of stay abroad. You have to travel over there and you have to stay there, right? So cost of stay abroad of the patient and one attendant. What do you mean by attendant? It is overseas, right? So you cannot go alone. You are taking any one other person along with you. That person can be called as an attendant, caretaker, accompanier. Alright. So the cost of stay abroad of you and the accompanying person, again exempted from perquisite valuation, provided it is approved by Reserve Bank of India. So two things excluded. Which all are the two things? Number one, medical expenditure. That is the main thing. Number two, cost of stay abroad. All right. Then number three, cost of travel also will be there. You require flight ticket to go abroad. Yes or no? So cost of travel of your patient and one attendant. And again, you are not supposed to ask me this. Sir, in medical expenditure, you haven't mentioned anything. So will the patient and one attendant get the exemption? That one attendant does not require any medical expenditure. Only patient require medical expenditure. Yes or no? The accompanying person, will he say, doctor, give me 2 medicines, okay? Since I've traveled from India to US, give me 2-3 tablets. Will he say like that? No. If he say like that, that means he has some problem with his head. Then definitely psychiatrist will give him 2 or 3 tablets. That's for sure. Now, coming back to the point, the cost of travel of one patient and one attendant is also excluded from perquisite valuation, but there is a condition. Exempted only when gross total income of the employee excluding this does not exceed 2 lakh rupees. Listen, this is very tricky. Cost of travel, will you get exemption? Yes, provided that employee's gross total income should be less than or equal to 2 lakh rupees. If your gross total income is more than 2 lakh rupees, you will not get the benefit of exemption. What do you mean by gross total income? You compute 5 heads income, add it together by subjected to clubbing and set off. That is called as what? Gross total income. If your gross total income is less than or equal to 2 lakh only, you will get the benefit, exclusion for cost of travel. But for medical expenditure and cost of stay abroad, you will get. It is excluded always. Cost of travel is excluded only if that employee's gross total income is less than or equal to 2 lakh. And that too, this gross total income before adding this cost of travel. What do you mean by before adding this cost of travel? We don't know whether this cost of travel will form part of our taxable perquisite or not. Yes or no? If cost of travel form part of our taxable perquisite, then that also have to be added. Before adding that, if your other income is 2 lakh or less, then that cost of travel is not required to be added to the total income because it has been excluded from the perquisite valuation. I hope you are getting what I'm saying. Now, note, in calculation of gross total income ceiling, taxable value of medical perquisite and cost of stay perquisite shall be included. So, while computing that, both of those things you can consider. Listen. Now, I have said you or your family members. In all these scenarios, I've told you, employee or as family members. What do you mean by family? There's a definition for family here. That means spouse, children of individual. Children may be dependent or independent, married or unmarried. It also includes parents, brothers, sisters of individual if they are wholly and mainly depends upon him. What do you mean by that? See, in this medical valuation or medical perquisite valuation, I have told you that either employee or member of his household. If the employer is incurring any expenditure, then there are certain exclusions. What do you mean by member of household? Member of household means your spouse, wife, your children. There is no number count and all. Any number of children you can have. Alright. Then next is what? Your brothers, sisters and parents. Brothers, sisters and parents will form part of your family only if they are totally depends upon you. They are not supposed to be independent. They should be dependent on you. You means who? Employee. Are you all with me? So in the family definition, spouse, children and dependent parent, dependent brother and dependent sister will come. And again, one more thing, fixed medical allowance received, if any, shall be fully taxable. Fixed medical allowance received, if any, shall be fully taxable. The exclusion which we were discussing right now was in relation to perquisite, not in relation to allowance. Are you all with me? So let's sum it up. Listen. So summary, what we can say is, if the employer is either directly incurring or reimbursing any medical facility or medical expenditure on behalf of employee or member of his household, it is fully taxable as perquisite, subject to certain exclusions. Which are the exclusions? Number 1, owned hospital. Number 2, government hospital, local authority hospital, central government approved hospital. Number 3, prescribed diseases in notified hospital. Then number 4, medical insurance premium, either direct payment or reimbursement. Number 4, abroad treatment. For abroad treatment, medical expenses and cost of stay abroad. In all permutation combination, if it is approved by RBI, you can claim exemption. Cost of travel of patient and one attendant is excluded when that employee's gross total income is less than or equal to 2 lakh. Bus. I hope it is clear. Now let's solve some problems. So solve one problem, that is enough. So take question number 12 and solve it, friends. Take question number 12, it's in page number 6 and solve it. All right, friends. So let's read the question together and let's find the answer. Listen. So what the question says is, compute the taxable value of perquisite in respect of medical facilities received by Mr. G from his employer during previous year 22-23. So you are supposed to compute the taxable value of perquisite. So I will solve it here itself. So listen. Sorry. Point number 1, medical premium paid for insuring the health of G. It is medical insurance premium. You tell me whether it is perquisite or not. Not perquisite. Medical insurance either direct premium payment or reimbursement, never considered as perquisite. Number 2, treatment of Mr. G by family doctor, perquisite. Family doctor and all, you will not get any exemption. It is fully taxable as perquisite. Next, treatment of G in government hospital, fully exempted. Treatment of Mr. G, Mrs. G, that means your spouse. Mrs. G in government hospital, fully exempted. Then, treatment of Mr. G's grandfather in private clinic. Two things are there. Number 1, grandfather is not your relative for the purpose of medical perquisite valuation. Number 2, that too in a private clinic. Yes or no? So, you will not get the benefit of exemption. It is fully taxable as perquisite. Then next is treatment of G's mother, 68, and dependent by family doctor, full perquisite, not at all exempted. Then treatment of Mr. G's sister, that too dependent in nursing home, fully taxable. One point is dependent, the other one is it is in some other nursing home, not an appointed, not a notified hospital. So taxable. Treatment of Mr. G's brother, independent. It is independent, not dependent. If it is dependent, then we can think about exemption provided it is for some approved hospital, provided it is for some approved diseases or in some approved hospitals or in some government hospitals, etc. Here they said independent brother and hence not exempted, fully taxable. Then treatment of Mr. G's father, age 45 years and dependent, which is abroad. That is fine. Expenses of staying abroad, that is also fine. RBI limit is 75,000. But these two is 80. Out of this 80, 5,000 will be taxable. 75,000 you can claim as an exemption. Yes or no? So how much is the taxable figure? 5 plus, 8 plus, 12 plus, 3 plus, 6 plus, 5. You tell me how much will be the taxable perquisite total? How much will be the total? The total shall be 39,000. That is the total taxable perquisite. I hope it is clear. 5 plus, 12 plus, 8 plus, 3 plus, 6 plus, 5. That will be 39,000. I hope it is clear. Alright friends, so good morning everyone. So till yesterday we have completed the perquisites, that is medical facilities provided by the employer. That's what the point which we have completed yesterday. Now, we have to study another type of thing that is called as, in the first day when we discussed perquisite, I have told you there are 3 types of perquisites. Hope you remember. Number 1, perquisites taxable in the hands of all employees. Number 2, perquisites taxable, exempted in the hands of all employees. Number 3, perquisites taxable only in the hands of specified employees. And I've told you for the time being, forget about specified employees. Hope you remember. today let's understand who are specified employees. Thereafter, we will take the other perquisites where there is a condition and explanation in relation to specified employees. So let's understand who is specified employees, and thereafter we will discuss the remaining perquisites. So please write a note, specified employees. Please write a note, specified employees. Specified employees. So let's understand who all are specified employees according to the income tax law. So number one, what they say is, if you are a director employee, you will be considered as a specified employee. What do you mean by director employee? You are being a director of a company as well as employee of that particular company. Say for example, managing director, whole-time director, etc., etc. All right, you are a director as well as an employee of a particular company. You will be called as a specified employee. Number two, an employee who has substantial interest, in the company. Say you are an employee and you have a substantial interest in company. You are an employee of a company, you have substantial interest in the company. What do you mean by substantial interest? Having 20% or more share capital in the company. Having 20% or more share capital in the company is said to be what? Substantial interest. So you have substantial interest in a company, that means you are a shareholder as well as employee of the company. And how much is your minimum share capital? Either 20% or more. Now, point number three, employee drawing a salary which is more than 50,000 rupees in a year. That is a comedy. Employee drawing a salary, and how much is the salary, friends? More than 50,000. Arey, that is not monthly, it is yearly. Yearly 50,000 salary means monthly how much? 50,000 divided by 12. Monthly, anyways, it will be less than 10,000. Not 10,000, it will be around 6,000, 7,000 something. How much is coming? 4,000 something is coming. All right. Now, there is actually a definition for the salary here, but we don't have to study all those definitions and all. But I'll give you a summary of that definition. So, salary means add all monetary benefits, exclude non-monetary benefits, exclude non-monetary benefits, then exempted monetary benefits, then deduct standard deduction rupees 50,000, deduct standard deduction rupees 50,000, entertainment allowance and professional tax paid, So listen friends, what they are saying is, while computing this salary, for considering the limit of 50,000, you have to add all the monetary benefits. Whatever monetary benefits you have earned, you have to add it. Then you are supposed to disregard or exclude non-monetary benefits. Say for example, you have received any non-monetary benefits in kind, you can exclude that. Any exempted monetary benefits you can exclude. Then thereafter, you can claim standard deduction, entertainment allowance deduction, professional tax paid as a deduction. After that, if the sum is more than 50,000, then you are a specified employee, otherwise not. So effectively, per year salary will be around 1 lakh. Why? Because you will get a 50,000 rupees as a standard deduction. That also you can deduct to determine the 50,000 limit. So that's what they say. This is not important, but still, only for the purpose of information, I have shared it with you. So these three employees are said to be what? What? Specified employees. And what is the speciality of specified employees? There are certain perquisites. Those perquisites will be only taxable in the hands of specified employees. There are certain types of perquisites where taxability only is with the specified employees. So let's understand the other perquisites as well. Now, how many we have completed till now? How many perquisites? I think 4. Maybe 4 types of perquisites we have completed in my understanding. So let's discuss the fifth type of perquisite. So let's take fifth perquisite. The fifth one is value of residential accommodation. The fifth perquisite which we have to discuss is value of residential accommodation. We can write it as the fifth one. Valuation of residential accommodation. We can write it as the fifth item here. Alright, so friends, listen, let's understand how to value residential accommodation first of all. So please listen, friends, please listen. See, valuation of residential accommodation. What do you mean by residential accommodation first of all? What do you mean by residential accommodation? Say for example, your employer is giving you a house. Your employer is giving you a house, not allowance. He is giving you a house, or he is reimbursing your rental payments. Either he directly provides you a house, or he is giving you a reimbursement of the rent suffered by you. In both these cases, we can say you are getting a perquisite by way of a residential house property. If your employer is giving you fixed monthly amount, then it will be house rent allowance. Here, either he provides a house for you to stay, or he pays the rent directly or reimbursing the rent to you. In such cases, we will say value of residential accommodation provided as what? Perquisite. This benefit received by you is definitely taxable in your hands. Now the point is how to value the benefit, because you are getting a non-monetary benefit at times. If the employer is giving you the rent, then we can say it is a monetary benefit, but he can give a house owned by him to you and you can stay there without paying any rent. In such cases, you are getting a non-monetary benefit. Now let's understand how to value that particular non-monetary benefit. So listen, so what the department says is rent-free accommodation, you can split that into 2. You can split rent-free accommodation into 2. Number 1, unfurnished accommodation. Number 2, furnished accommodation. You can split this into furnished accommodation as well as unfurnished accommodation. Now friends, listen. In unfurnished accommodation, what do you mean by unfurnished accommodation? There is only structure and rooms, doors, windows, etc. They don't provide you any furniture. What is furnished accommodation? House along with refrigerator, TV, AC, fridge, sofa set, etc. can be called as a furnished accommodation. Unfurnished means only the structure has been provided. So let's understand how to value unfurnished accommodation first. That means the employer is giving you an unfurnished accommodation. How to value that unfurnished accommodation? That's what we are about to discuss first. Listen. First of all, if you are a government employee, then how to value that? License fee determined by government minus rent payable by the employee shall be the value of perquisite taxable in the hands of employees. So listen, license fee determined by the government. Friends, what do you mean by license fee determined by government? What do you mean by license fee determined by government? Say for example, I'll tell you one example. Say, think about police. Alright, SI, CI, SP, Commissioner, DGP, different, officers are there, higher ranking officers are there. All of them get the same quarters to live. Yes or no? No. They will never get the same quarters. Depends upon their designation, their rank, their experience. The facility provided by the government will be different. Yes or no? So all the government-owned quarters will have a license fee determined by the government, just like the minimum price or the minimum value of the property. That is called as license fees. There will be annual license fees. Depends upon this license fee and depends upon the rank of a person or a designation of a person, government allots these kinds of quarters to a particular government employee. So what you need to do if you are a government employee and you are getting a rent-free accommodation which is owned by the government, then how to value the perquisite? you go find out that less license fees. There will be a license valuation for every government quarters. So you go find that license fees. Then from that you can deduct rent payable by you. Say for example, you are not paying any rent, then the entire license fees will be your taxable perquisite. You are paying something, then that something which you paid can be deducted from the license fee and the rest of the amount will be your taxable perquisite. I hope it is clear. So in the case of government employees, how to value the perquisite? You take the license fee determined by the government, reduce rent payable by the employee from it, and the rest will be the value of perquisite in the hands of government employees. Now listen, if you are a non-government employee, that means you are a private company employee, non-government employee, then how to value the rent-free accommodation? If you are a non-government employee, then how to value rent-free accommodation? That's what we are about to discuss. Listen, non-government employee, valuation of perquisite can be divided into two. House owned by the employer and house taken on lease or rent by the employer. What do you mean by house owned by the employer? What do you mean by house owned by the employer? So owned by employer simply means employer is giving his owned house for you to live in. In such case, the perquisite valuation will be in three forms. There are actually three forms for valuing perquisite in such a case. If the house is owned by the employer, then the first thing that you have to check is whether the population of city where the house is situated. You check the population of the city where the house is situated. If it is more than 25 lakhs, then perk valuation shall be 15% of your salary. Are you all with me? So if that house is situated in a place where the population of that particular place is more than 25 lakhs, just like metro city, then how much is the value of perquisite taxable? You take your salary, 15% of that will be the taxable value of perquisite. And here the definition of salary is there that we will discuss later. Because salary is defined here, it is not standard salary. We have a separate definition for salary here. We have to study that too. So for the time being, it's very simple. Listen, employer is giving a house which is owned by him to you. And the house is situated in a city where population is more than 25 lakhs. Then how to value the perquisite? You go take your salary, your annual salary, 15% of that will be your taxable perquisite. They are not giving any other way. This is the only way to value the perquisite. Now, if the population of the place where the house is situated is more than 10 lakh but less than or equal to 25 lakhs, that means the population is more than 10 but does not exceed 25. It is between 10 and 25. Then you take 10% of the salary. If in any other case means what? Less than or equal to 10 lakhs. In some rural areas, then 7.5% of the salary will be the taxable perquisite. So this is how they are telling you to compute the value of taxable perquisite. So listen friends, number one, the first thing to note is if your house is situated in a place where the population is more than 25 lakhs, how much is the perquisite? 15% of the salary. Population is more than 10, less than or equal to 25, then 10%. Less than or equal to 10, then 7.5% of the salary will be your taxable perquisite. Now, if it is owned by the employer, now what if it is taken on lease by the employer? Say taken on lease or rent by the employer, then lower of the following shall be the taxable perquisite. Lower of the following shall be the taxable perquisite. So let's understand what exactly is the lower. Rent paid by the employer or 15% of the salary, whichever is lower shall be the taxable value of perquisite. So what they are saying is, if the house is taken on rent or lease by the employer and it is given to the employee, then how to value the perquisite? You take the rent paid by the employer or 15% of the salary, whichever is lower shall be your value of taxable perquisite if the property is taken on lease. It is not alone the lease rentals paid by the employer. You need to compare it with the 15% of the salary also. Whichever is lower shall be the taxable value of perquisite. So this is what they say. Now listen. So we have completed the valuation of unfurnished accommodation. So how to value unfurnished accommodation? If it is government employee, license fee. If it is non-government employee, then what to do? You check whether it is owned by or taken on rent. Owned by, check the population. More than 25, 15%. More than 10, 10%. Less than or equal to 10, 7.5%. Yes or no? If it is taken on lease, then actual lease rentals or 15% of salary, whichever is lower, shall be the taxable perquisite. Now we will understand how to compute the value of furnished accommodation. Very simple. For furnished accommodation, you first find out the value of unfurnished accommodation. For furnished accommodation, you first find out the value of unfurnished accommodation, UFA, unfurnished accommodation. How to find out unfurnished accommodation value? That's what we have discussed here. First you go and find out the unfurnished accommodations value. Then, if the furniture is owned by the employer. What do you mean by furniture owned by the employer? Employer has some furnitures. Furniture includes fridge, TV, AC, etc. It is not only the sofa set. Furniture includes whatever appliances that has been given by the employer in your house. You take, if it is owned by the employer, you take its original cost. What is original cost? The actual cost incurred by the employer to purchase that. 10% of original cost per annum will be the taxable value of perquisite enjoyed by the employee. Say for example, the employer is giving me a fridge having a value of 1 lakh rupees. Every year 10,000 rupees will be the taxable value of perquisite for using that particular fridge. Every year. Are you all with me? If I am using only for 3 months, then 10,000 divided by 3. Not 10,000 divided by 12 into 3. Are you all with me? So, for example, if my employer is giving me a TV having a value of 1 lakh or a fridge having a value of 1 lakh, annual value is 10%. Annual value of taxable perquisite in my hands is 10%. That means 10,000. If I am using only that particular fridge only for 3 months, are you all with me? If I am using that particular TV or fridge, whatever it is, only for 3 months, then 10,000 is the annual value divided by 12 into 3. This is how you have to value the furniture point. If the furniture is taken on rent, that is also possible. The employer is not owning any furniture. He has taken all the furniture on rent. In that cases, you add the rental charges along with the unfurnished value of accommodation to find out the taxable value of furnished accommodation. Very simple. You find out the unfurnished accommodation value, then owned by employer 10% of original cost every year. Rented by the employer, the actual rental charges paid by the employer every year. You add it, you will get the taxable value of what? Taxable value of furnished accommodation. From the taxable value of furnished accommodation, you can always deduct what? The actual rent paid by you. If you are paying something, you can always deduct the actual rent paid by you from the taxable value of perquisite. I hope it is clear. So this is how you have to compute the perquisite valuation of rent-free accommodation. So can you just copy this down? I want all of you to copy this down. Alright friends, listen, there are a few things that you have to focus again. So let's understand which all are the other things to focus. So listen, where accommodation is provided by any employer, whether government or any other employer in a hotel. What do you mean by accommodation provided in a hotel? What do you mean by accommodation provided in a hotel? Say for example, instead of giving a house, my employer preferred a hotel and he told me to stay in that particular hotel. Are you all with me? So in that case, how to value the perquisite? If the accommodation is provided in a hotel, either by the government or any other employer, then the value of perquisite shall be either 24% of the salary or actual charges paid or payable to such hotel, whichever is lower. So department says if the accommodation is provided in a hotel instead of a house, then 24% of salary for a year or actual charges paid or payable to such hotel, whichever is lower, shall be the taxable value of perquisite. Now, from this, always you can deduct what? The actual amount paid by the employee for getting that particular house or hotel, whatever it is. So, always actual payments payable by the employee can be deducted. Now, listen. The next point we have to focus here is what do you mean by salary here? Because we have referred salary 15%, 7.5%, 10%, 24%, etc. Now the definition of salary, let's understand. So please write a note. salary here means, let's understand what is salary. Means basic plus bonus plus commission plus DA form part of retirement benefit plus DA forms part of the retirement benefit plus employer's contribution to provident fund, employer's contribution to provident fund, employers, sorry, not plus, don't write that, plus DA, or write excluding employer's contribution to provident fund, excluding employer contribution to provident fund, then exempted allowances, perquisites. So what they are saying is, while taking salary for the purpose of rent-free accommodation valuation, you need to take all the basic salary, bonus, commission, DA forms part of the retirement benefit. Commission means whether it is expressed as fixed percentage or not. When they say simply commission, that means whatever the form commission is in. So you need to take all these things, but you shall never consider these things. Number one, employees' contribution to PF, exempted allowances and perquisites. These things you have to exclude. And how about we can write other payments also here. In the inclusions, you can write other payments as well. Other payments means taxable allowances and other components of salary which are taxable. Other payment here means what, friends? Other taxable components of salaries. That's what you can say. Now, there are a few further explanations required before moving on to rent-free accommodation valuation. That means I'll tell you a few more things here. Say, for example, I'll tell you by way of some stories. All right. Say, for example, listen. Say, I am an employee. JK is an employee of A Limited. There is a company called A Limited and I am their employee. And I'm currently working in Bangalore. All right. So, my employer transferred me to Chennai. All of a sudden. So, my employer came to me and told me that tomorrow you have to go there and take charge. So, I said, yes, sir, no problem. But I made a request to my employer that it's a sudden transfer. Yes or no? So, I made a request to my employer that give me some time because currently I'm staying in a house which is provided by my employer at Bangalore. Currently, I am staying in a house provided by my employer which is at Bangalore. So, I told my employer that I need a house in Chennai also. I need some time to transfer my items, apparels, etc. from Bangalore to Chennai. I need some time to transfer my utensils, my other things from Bangalore to Chennai house. So, my employer allotted 2 months. My employer has given me 2 months. I can use both this Bangalore house and Chennai house for this 2 months. From the 3rd month onwards, I only have what? Chennai house. Are you with me? Now, the problem is, for these 2 months, I am getting 2 properties. Yes or no? So, I have to consider the valuation of both the properties as my taxable perquisite. Yes or no, I have to consider for these 2 months, I am enjoying Bangalore property as well as Chennai property. So, I have to consider both the property, value of both the property as my taxable perquisite. Yes or no? But the department say, in the event of transfer, etc., up to 90 days, if an employee is enjoying one or more residential house properties, out of that, any one only will be the taxable perquisite. In the event of transfer, if the employee is using more than one house property, one in its original place and one in the transferred place. If he is using more than one property, then out of that, only one will be considered as the taxable value of perquisite. Which one he should consider? Which one he should consider as the taxable value of perquisite? The one having lower value. For that, you need to compute both. You need to compute both for the 2 months, and you need to consider the higher value as your exemption. Lower value will be the taxable perquisite. And one more thing is there. After 90 days, this relaxation is there only for 90 days. After 90 days, both the properties will be taxable value of perquisite. From 91st day onwards, the other property also you have to value and consider it as a part of your taxable salary. Are you all listening? This exemption or relaxation is only there for how many days? 90 days. After 90 days, you have to consider both the property and you have to pay taxes for both the properties value. Now, another thing here is house property includes house, a fixed residential house, then a boat, houseboat, a caravan, etc. All these things will be considered as a rent-free accommodation. Are you all with me? House doesn't mean always house. My employer has given me a houseboat. No problem. That also you have to value as a rent-free accommodation. Now, these are the things that you have to focus in this rent-free accommodation valuation. This is actually an important perquisite because they have tested it many times. They have tested it many times. You have to study the salary definition also. I hope this much is super clear for you. Now, friends, let's solve one problem in relation to this. So, can you please take your question sheet, page number 13. Take question sheet, page number 13. Not page number 13, page number 6, question number 13. Page number 6, question number 13. Take that and solve it. Page number 6, question number 13. Take it and solve it. Alright friends, so let's solve the question together. Listen. So what they are saying is, Mr. C is a finance manager in ABC Limited and the company has provided with him a rent-free unfurnished accommodation in Mumbai. So the company has given a rent-free unfurnished accommodation in Mumbai. He gives you the following particulars. Basic salary is given, DA is given, bonus is given. Even though the company allotted the house to him on 1/4/22, he occupied the same only from 1st November 2022. So he occupied the house only from 1st November 2022. Calculate the taxable value of perquisite for assessment year 23-24. Now the question is, allotment date is from 1st April, but he utilized it only on 1st November. Which should be considered? 1st November. Because the point is, it is not from the date of allotment. It is from the date of actual utilization. When the moment you are starting, the moment you have started using the particular house property only, you are getting a benefit. Otherwise, you are not getting a benefit. So it is always from the date of utilization, date of actual usage, not from the allotment. So what we can do is, so here the company has provided means it is owned by the company. Yes or no? The company has provided means it is owned by the company. And rent-free unfurnished accommodation in Mumbai. So Mumbai, the population will be more than 25 lakh, metro city it is. Yes or no? More than 25. And hence, how to value the perquisite? First, you need to compute the salary for the purpose of this. Because 15% of salary or how much? 15% of the salary is the limit. There is no or limit. So, taxable value of perquisite shall be 15% of salary for a year. So, 15% of salary. Salary here means, what all are the elements in salary? Basic salary 6,000 per month plus Dearness Allowance forms part of retirement benefit. Out of 2,000, only 30% forms part of retirement benefit. So, how much is 30% on 2,000? 600. Then, what is next? Bonus 1,500 per month. Have to add it. So, 1,500 per month. Then, that's it. These are the components given in the question. So, how much is the monthly salary? How much is the monthly salary coming? 8,100. Yes or no? 8,100 is the monthly salary. So 8,100 into how many months he utilized? For November, December, Jan, Feb, March, 5 months. Into 5 months into 15%. So you tell me how much is the taxable value of perquisite coming? 6,000 6,075. 6,075 is the taxable value of perquisite coming. Now, is there any recovery from the employee? No. If there is any recovery from the employee, then you can deduct that recovery as well. In the question, they are silent about the recovery from employee, so you don't have to consider that. I hope this is clear. So please take the next question, the very next question after that, and solve it. Take the very next question, that is question number 14. It's a continuation of 13. Question 14 is actually a continuation of 13. So please take that and solve it. So let's read that remaining 14, that is using the data given in illustration 13, compute the value of perquisite if ABC Limited has taken this accommodation on lease rent of 1,200 per month and C is required to pay a rent of 1,000 per month to company for the use of his accommodation. So if it is taken on lease, then how to value the perquisite, friends? If it is taken on lease, then either the actual lease rental for the 5 months. So how much is the actual rent paid by the employer for 5 months? Actual rent paid by the employer is 1,200 per month into 5. How much is 1,200 into 5? 6,000 rupees or 15% of salary. How much is 15% of salary for 5 months? That we have already computed in the last one. That is 6,075. Whichever is lower shall be the value of taxable perquisite. Hope you remember, whichever is lower shall be the value of taxable perquisite. That means 6,000. So value shall be 6,000. From that, you can deduct actual rent paid. How much is the actual rent paid, friends? Actual rent paid by the employer is 1,000 per month. So 1,000 into 5, it will be 5,000 rupees. And hence, only 1,000 rupees will be the taxable value of perquisite. 1,000 rupees will be the taxable value of perquisite in illustration number 14. I hope it is clear. So that's all about the house rent-free accommodation valuation. Now let's move on and discuss the next perquisite valuation. So the next perquisite valuation is the biggest valuation in our syllabus. That is the biggest valuation. We have 2 small flowcharts to study. This is flowchart number 1, very small flowchart. This is flowchart number 2. So in the institute study material, it is only 1 or 2 tables, small 2 tables. But in our material, it is 2 big flowcharts. So don't think that I have complicated this. See, what I have done is, I have prepared all the permutations and combinations. In exam, whatever they ask, it will be from this particular 2 flowcharts. They cannot ask anything outside because everything is there in the flowchart. Alright, so let's discuss the perquisite valuation of motor car. So please write the heading, motor car is the next perquisite valuation. That is valuation number 5, right? 5th perquisite, right? 6th one, 6th item. 6th item. So let's understand, what do you mean by giving motor car? See, I'll tell you 2-3 possibilities of this motor car. I'll tell you 2-3 possibilities of this motor car. Say for example, say employer and employee. Say employer have a car. It has been given to employee. Given to employee means the car is used by employee. The ownership is with the employer itself. He is not giving any ownership. The valuation which we are about to discuss is if it is given for the employee to use it, then how to value. So the car is given to the employee and employee is using the particular car. Then car maintenance and running. Maintenance and running met by the employee himself or by the employer himself. These are the 2 possibilities. Car owned by the employer. Either maintenance and running charges are also met by the employer or it is met by the employee. How to value? This is flowchart number 1. We have one more flowchart, that is car owned by employee. Car owned by employee, but its maintenance and running charges are met by whom? Employer. Car owned by the employee, maintenance and running charges only are met by the employer. Then also employee is getting a personal benefit. Yes or no? So these are the contents in the flowchart which we are about to discuss. So what are the 2 possibilities? Car owned by the employer, car owned by the employee. Maintenance and running charges, either employer or employee. We will think about all the permutation and combination. So let's get into the flowchart, friends. Let's get into the flowchart. So let's start with the flowchart. That is, the car is owned or hired by the employer. That's what we are about to discuss first. The car is either owned or hired by the employer. How to value the perquisite? So let's understand. Number one, maintenance and running expenses are met by the employer. So friends, listen. Car owned by whom? In this flowchart, car owned by whom? Owned by employer. And maintenance and running charges, that too met by employer. So maintenance and running charges, employer. Car owned by employer. Then how to value the perquisite? The valuation of perquisite depends upon the usage of the car. If the car is used for official purpose by the employee, then no perquisite, hence not taxable. Why? Car owned by employer, maintenance and running charges met by the employer. Car is used by the employee for official purpose, no perquisite. Why? You are not getting any personal benefit. You are using that car for the official purpose. You are not getting any personal benefit, and hence there is no perquisite valuation. If you are getting a personal benefit only, there will be perquisite valuation. Otherwise, there won't be any perquisite valuation. Are you all listening? Point number two. Car is used for private purpose of employee or any member of his household. What do you mean by private purpose? Personal purpose. The car is used for personal purpose either by the employee himself or any member of his household. Then there will be perquisite valuation. Yes or no? There are two elements of perquisites. Which are the two elements of perquisites? You are getting two benefits. Number one, you don't have to own a car. Number two, fuel and other maintenance is free. Because in the flowchart where we started, car is owned by the employer. Maintenance and running charges met by the employer. And you are using the car for your personal purpose. You are getting two benefits. Number one, you don't have to spend anything to buy a car. Number two, you don't have to spend for the diesel and for the maintenance as well. Are you all with me? So two types of valuation is required. Number one, for the ownership. For the ownership, what the department says is, you take the original cost of the car and consider 10% per annum for the ownership. Just like the unfurnished accommodation, that furniture case. If the car is owned by the employer, maintenance and running charges met by the employer, car is given to the employee, he is using that car for his personal purpose, then what to do? Two types of valuation are required. Number one, for the ownership. For the ownership, what you need to do? You take the original cost of the employer. 10% per annum will be the taxable perquisite in the hands of employee for the proportion of ownership. Plus the actual maintenance and running charges met by the employer, including driver salary, will be the point number two. You're getting two benefits. Number one, you don't have to own. Number two, you don't have to spend anything for the maintenance and running. Both of them you have to value perquisite. For ownership, you take the original cost and add 10% every year. For maintenance and running charges, you add the actual maintenance and running charges met by the employer, including driver salary. What do you mean by including driver salary? Car along with the driver has been provided by the employer, and the employer is giving salary to the driver as well. You need to add the driver salary also as a taxable value of perquisite. Are you all with me? This is pretty simple. No complication is involved. So the point is, car is owned by, repeat with me, car is owned by employer. Maintenance and running charges met by employer. Car is used by the employee for personal purpose. Ownership 10% per annum. Then actual maintenance and running charges, including the driver salary, have to be taxable in the hands of employee. Now the question is, whether it is taxable in the hands of all employees? No. They say it is taxable only in the hands of specified employee. If you are a specified employee only, this valuation is there. Otherwise, there is no valuation. For the time being, forget about this specified valuation, specified employee. Why? Because we have a shortcut to study the specified employee, non-specified employee thing. Alright, for the time being, forget about this particular specified employee point. I hope this much is clear. In the flowchart, they are using a word depreciation. Don't confuse the word depreciation, okay? Instead of using the word proportion, they say it as a depreciation, 10% every year, charge it on the employee. So for the time being, Two things, two valuation required. Number one for the maintenance and running, number two for the ownership. Now, the problem is where when the employee is using that car partly for official purpose and partly for personal purpose. That is a problem. What do you mean by partly for official purpose and partly for personal purpose? You're mixing. Some journey is for your official purpose and some other journey is for your personal purpose. Now, how do you value perquisite? There is a way. Before every journey, you need to report the kilometers and you need to say, this is for personal, this is for official. It is possible, not practical. It is not that practical. Before every journey, you have to take a note of the kilometer and all. It's not practical. So what department say? You forget about the actual usage. Rather, we will say some statutory figures. Use the statutory figures to value perquisite. Are you all with me? If the car is owned by the employer, maintenance and running charges met by the employer, car is used by the employee for official as well as personal purpose mixing, then you do one thing. You check the cubic capacity of the car. If the cubic capacity of the car does not exceed 1.6 liters, that means 1600 cc or less. That is the engine capacity of the car. Are you all with me? Say small cars like hatchbacks will have a cubic capacity of less than 1600. Say for example, Swift, then Desire. Cars like that will always have a cubic capacity of less than 1.6. That means a small car. In that case, you take 1800 per month. 1800 per month as the taxable value of perquisite. What is the logic behind this 1800 per month? There is no logic. What department says, it is very difficult to bifurcate the actual usage. Whether the actual usage is for personal or actual usage for official, it is very difficult to bifurcate. So we are giving you a formula, a magic formula. What is the magic formula? If you are mixing it and the cubic capacity of the car is less than 1600, you do one thing. You take 1800 rupees per month as the taxable value of perquisite. You take the 1800 per month as the taxable value of perquisite. One more thing. If driver also is given along with the car, then additional 900. That simply means 1800 plus 900 per month will be the taxable value of perquisite every month. Are you with me? So, what is this combination, friends? Listen. Car owned by employer, maintenance and running charges met by employer, car is used for official as well as for the personal purpose by the employee, and car's cubic capacity is less than or equal to 1600. Then how to value? 1800 per month will be the taxable value of perquisite. If driver also is given, additional 900 per month. In total, 1800 plus 900 per month will be the total value of taxable perquisite. Now, one more thing you should know. What if the value of what is the cubic capacity of the car exceeds 1.6? If the cubic capacity of the car exceeds 1.6, then instead of 1800, substitute it with 2400. Because you have been given with a bigger car, luxurious car. So the statutory value also goes up. That's it. You are given with a luxurious car. So statutory value also have to go up. So what they are saying is substitute 2400 in the place of 1800. That means 2400 per month. If driver is also given, additional 900 per month. This will be the taxable value of perquisite. These two are statutory figures. What is statutory figures? Irrespective of law, actual usage and all, you can always consider this as the equation for valuing taxable perquisite if motor car is given. Are you all listening? Hope it is clear. Now, it's not yet over. It's not yet over. We have discussed which combination? Car owned by employer, maintenance and running charges met by employer. Now, under that, car owned by employer, maintenance and running charges met by the employee. If car is owned by the employer and maintenance and running charges are met by the employee and the car is used for official purpose, again, no perquisite valuation. Why no perquisite valuation? A car is used for your official purpose. There is no requirement of any per valuation. Now, if car is used for your private purpose, that means personal purpose, don't look here. You tell me. There is only one element of perquisite. That is for the ownership. Because in this alternative, maintenance and running charges are actually met by the employee himself. So there is only one alternative of perquisite valuation, or one element of perquisite is there, which is that for the ownership. How to value that? 10% of the original cost of the car per annum. Yes or no? So that's what they say. 10% per annum of the original cost of the car only in the hands of specified employee. Forget about specified employee. So friends, listen. This is very simple. If the car is used for private purpose only, car owned by the employer, maintenance and running charges paid by the employee, then only for the ownership you have to value perquisite. You take the original cost into 10% per year shall be the value of taxable perquisite. I hope it is clear. Listen, next point, partly used for official and partly for private. There starts the problem. Car owned by the employer, maintenance and running charges met by the employee, you are mixing the car, official as well as for personal. What to do? Again, department say, check whether the cubic capacity of the car does not exceed 1.6. If the cubic capacity of the car does not exceed means less than or equal to 1600 cc's. In such case, instead of 1800 and 2400, you take 600 per month as the taxable value of perquisite. Why a lesser value? Bigger expenses are met by yourself. Here only the ownership proportion is there. Yes or no? Hence they suggest a lesser statutory value. 600 per month. If driver is also given, 900 per month. Driver is given and the driver's salary met by employer, then 900 per month. Driver's salary met by the employee, you don't have to value any perquisite. Yes or no? Common sense. The driver's salary is met by the employee himself. Is he getting a benefit from the employer? No. If the driver's salary met by the employer only, we can say he is getting a benefit. Now, if chauffeur is provided, that means chauffeur means driver, okay? Chauffeur means driver, chauffeur driven car, driver driven car. Normally we used to say Rolls Royce, Mercedes S-Class, etc. are chauffeur driven cars. Normally the owners don't drive Rolls Royce and all. The owners will spend their time in the back seat. So these cars are normally called as chauffeur driven car. That means driver driven cars. Now, if CC does not exceed, it is written does not exceed. CC exceeds. It should be exceed, okay? If the cubic capacity of the car exceeds 1.6 liters, then instead of 600, you take 900. Again, driver is given additional 900 per month. Are you with me? Lower statutory figures. These are also statutory figures. These are also what? Statutory figures. So friends, the point is very simple. Repeat with me. All right, let's study this perquisite valuation from here itself. Car owned by employer. First alternative. Maintenance and running charges paid by employer. Official purpose, no perquisite. Personal purpose, two elements. Ownership, 10% of the original cost and actual running and maintenance charges including driver salary. Mixing, then 1600 or less. Then 1800 per month plus additional 900 if driver is there. More than 1600 cc, then 2400 plus additional 900 if driver is also there. Then car owned by the employer, maintenance and running charges met by the employee himself. Official purpose, no perquisite. Personal purpose, only the proportionate ownership. That means 10% original cost. Then mixage, then what to do? 1600 or less cubic capacity. Then 600 per month. If driver is there, additional 900 per month. Then if the car capacity is more than 1600, then how to value? 900 per month. Driver is there, additional 900 per month. I hope it is clear. Moving on. Moving on with the next point, that is, car is owned by the employee and maintenance and running charges met by the employee. Then if it is used for official purpose, private purpose, mixage, no perquisite. Why? Car owned by me, maintenance and running charges met by me. I am using that car for my personal purpose, official purpose, mix. I am not getting a benefit. Why? Because I am spending everything. Are you with me? If the car owned by the employee, maintenance and running charges met by the employee, irrespective of usage, there won't be any perquisite valuation. Why? Because I am not getting any benefit. Clear or not? That part is over. Now, car owned by employee, maintenance and running charges met by employer. Car owned by employee, maintenance and running charges met by employer. Then official purpose, no perquisite. Then for personal purpose, you tell me how to compute the value of perquisite. The actual maintenance charges met by the employer, including driver salary, because owned by employee. In this flowchart owned by employee, only the employer meets the maintenance and running charges. If I'm using the car for my personal purpose, then the actual maintenance and running charges met by the employer is my value of taxable purpose, including driver salary if any. Now, the problem starts when the car is used for official as well as personal. The car is used for official as well as personal. Rather than giving statutory figures, department here uses another method. Please listen. If the car's cubic capacity is less than or equal to 1600, then what department says is, here what was the alternative? Car owned by whom? Owned by employee. Maintenance and running charges met by employer, not employee. If it is employee, then no valuation of perquisite required. Okay, maintenance and running charges met by the employer, and the car is used for mix. That means for personal as well as official. Then what department say? If the cubic capacity of the car is less than or equal to 1600, you take the actual running and maintenance charges. You take your entire running and maintenance charges. Now let me ask you one question. Is the entire running and maintenance charges taxable perquisite? No. Why? Because the car is used for official as well as personal purpose. Yes or no? So what department say is, from the actual running and maintenance charges, you deduct 1800 per month every month's usage. You deduct how much? 1800 per month. If driver is also given, deduct additional 900 per month. Whatever the remaining value will be the taxable perquisite. Are you all with me? So what they are saying is, you consider the actual maintenance and running charges first. You take the entire running and maintenance charges. From that, you deduct 1800 per month for what? For actual usage. And if driver is also given, deduct additional 900. If there is anything left, that will be your taxable value of perquisite. Are you all with me? It is not like giving statutory figure. They say deduct statutory figure from the actual running and maintenance charges. Here, what they say is deduct statutory figure from actual running and maintenance charges. Now, if the cubic capacity of the car is more than 1.6, if the cubic capacity of the car is more than 1600, then how to value perquisite? They say instead of 1800, substitute 2400. You deduct 2400 from the actual running and maintenance charges. And if driver is also there, you can deduct 900 per month as an additional deduction. Whatever the balance there will be the taxable perquisite. Whatever balance there will be the taxable perquisite. That's what they say. I hope it is also clear. So listen friends, very simple. Car owned by employee. Maintenance and running charges met by employer. Car used for official, no perquisite. Car used for personal, actual running and maintenance charges met by the employer, including driver salary. Car used for mix, take the actual running and maintenance charges. Then deduct 1800 if the cubic capacity is less than or equal to 1.6. Deduct 2400 if the cubic capacity is more than 1.6. You can deduct an additional 900 if driver is also given. Are you all with me? So this is how you have to value the perquisite of motor car given by the employer to the employee. I hope it is clear. Alright, listen. Say for example, there is few more things that we have to consider. Say for example, you are paying something back to the employer. Say you are paying, there is some recovery, just like rent recovery from the employee. There is some recovery from the employee for the usage of car. Then the recovery definitely can be deducted from the taxable value of perquisite. Yes or no? Say for example, the employer is charging something monthly from the employee for the usage of motor car. Then that monthly amount paid by the employee can be definitely deducted from the taxable value of perquisite, except where statutory figures are used. What do you mean by except where statutory figures are used? So listen, in the first flow chart, in these alternatives, we are using statutory figures. Yes or no? From this, employee cannot deduct actual payment given to employer. From all other perquisite valuation, employee can always deduct the actual amount paid by the employee to the employer for the usage of car, except where statutory figures are used. Why except where statutory figures are used? Statutory figure means what? We are not taxing everything. We are only charging a small portion. From that, you are not supposed to deduct anything more. That's what the department says. I hope it is clear. So my point was very simple. Listen, where employee makes a payment to the employer for the use of motor car, normally we can deduct that payment from the taxable value of perquisite, except where statutory figures are used. I hope it is clear. Now listen, there is one more point that you have to consider. Say for example, see, we have seen statutory figures of 1,800 per month, 2,400 per month, then 600 per month, 900 per month, etc. These are statutory figures. Yes or no? If employee can prove that, his actual monthly benefit is lesser than these figures. If employee can prove that his actual monthly benefit received by him is lesser than these figures. What do you mean by employee can prove that actual monthly expenses are lesser than this? What do you mean by that? What do you mean by if employee can prove that actual monthly expenses are lesser than this? Means what? Say for example, he is using that car for his personal purpose only in few instances. Only for one journey in a month, he using that car for his personal purpose. Then the value of benefit received by him is very less, because all the maintenance and running charges paid by the employer, and he is using that particular car only for a few journeys. In such scenarios, employee will say that 1,800 per month is a huge figure for me. I'm only using it for 1 or 2 kilometers ride. Are you all with me? In such scenario, what employee needs to do? Employee needs to maintain details of his personal journey. Details of his personal journey, plus get a certificate from employer. Stating that it is right. The employee have to maintain personal journey details in a adequate manner. Say for example, how many kilometers driven, the diesel expenses incurred, and the employer have to certify it. What do you mean by employer have to certify it? The employer have to say that yes, it is right. All other kilometers driven for official purpose. If employer certifies that also, then he can show the actual personal expenses reimbursed by the employer as his taxable value of perquisite. He need not use the statutory figures. If employee can prove that the statutory figures are very high, his actual personal benefit is less, then he is permitted to claim the actual personal benefit received itself as the taxable value of perquisite. I hope it is clear. One more thing is there. Say employer is giving 2 cars, car 1 and car 2. Employer has given me 2 cars, car 1 and car 2. One Mercedes and one BMW. You have given me 2 cars. You have given me a Mercedes as well as a BMW. Then I am using both the cars. For what? For my personal and official purposes. I am using both the car for my personal and official purposes. Then how to value perquisite? Department say either one can be treated as personal plus official. And the other car, while valuing perquisite, have to be treated as if it has been used for personal only. This is how you have to value. If more than one car is given by the employer to the employee, and the employee is using that car, all the cars for personal as well as official, then what to do? Out of that cars given, only one car, while valuing one car only, you can use the personal plus official split statutory figures. For all other cars, you have to value as if you are using it for personal purpose only. Which car should be personal plus official mix? Out of this, which car should be personal plus official mix? The higher value car, not one, higher value car. That we don't know. That means we have to value both the cars as if we are using for personal. Yes or no? The higher value car have to be used for mix, because the statutory figures are comparatively very less. 1,800 per month is nothing. The fuel expenses are so high. 1,800 per month is nothing. So the statutory figures will be always less. So what you need to do is, out of one, you can use it for mix. And the other one you have to value as if you are using it for personal only. I hope it is also clear. So if more than one car is given, you have to value everything as if it is personal. Then the higher value car should be used for mix. For the others, you have to value as if it is used for personal only. So these are the things that you have to consider while valuing a motor car. I hope it is clear. Now friends, let's solve a problem in relation to this. So please take question number 16. Question number 16 in page number 7. Question number 16 in page number 7 and solve it. All right friends, so listen, hope you have completed the question. Sonam has been provided a car that is 1.7 liter. What is 1.7 liter means? 1700 cc, okay. 1 liter means 1000 cc. 1.7 means 1700 cc. By his employer, Vikash Limited. Has been provided means car owned by employer. Yes or no? Car owned by the employer. That's why he provided the car to the employee. The cost of car to the employer was 3,50,000 and the maintenance cost incurred by the employer was 30,000. So the car owned by the employer, maintenance and running charges met by the employer, chauffeur salary paid by the employer. Chauffeur means driver. Driver salary paid by the employer was 3,000 per month. Find value of perquisite for Sonam for assessment year 23-24 if car is used for official purpose, personal purpose, both purpose. Everything is there. And one more sub question is there. In case B and C, that means in B and C, employee is being charged 15,000 per annum for such facility. How much is the value? So they are asking so many things. So let's take A. A, I will say not perquisite. Not perquisite. Why? Are official purpose. If the car owned by employer, maintenance and running charges met by the employer, car is used for official purpose. What is the personal benefit employee is getting? Nothing. And hence no perquisite valuation required. Number 2, for personal purpose. For personal purpose, 2 elements are there. One for the ownership, the other for the running and maintenance charges, because this car is owned by the employer. Maintenance and running charges met by the employer. So 2 elements are there. Number 1 for the ownership. So tell me how to value the ownership. Take the original cost of the car, that is 3,50,000 into 10%. The car is used for the whole year or for limited months. They haven't mentioned anything. Hence the assumption is the car is used for the entire year. The car is used for the entire 12 months. So 3,50,000 into 10%, that will be 35,000 rupees. That is for the ownership. Now running and maintenance charges. What are the running and maintenance charges? 30,000 for the running and maintenance and driver salary 3,000. So hence 33,000 total. Yes or no? Oh, that is per annum. Okay. 30,000 per annum and driver salaries per month. Okay. So we will take 30,000 straight away per annum for running and maintenance charges, and we will take driver salary separately. 3,000 per month into 12. How much is 3,000 per month into 12? 36,000. So tell me altogether, how much is the total value of perquisite? 1,01,000. So 1,01,000. From there is some recovery from the employee. So amount paid by employee. Paid by employee. How much is the amount paid by the employee? They say 15,000 per annum. Yes or no? So that you can definitely deduct, except where statutory figures are used. When they are using statutory figures, you cannot deduct. All other cases you can definitely deduct. How much is 1,01,000 minus 15,000? 86,000 will be the taxable perquisite. Now, case number C. What is case number C? Car is used for both purpose, official as well as personal purpose, and the cubic capacity of the car is 1.7 liters. Hence, the car owned by the employer, maintenance and running charges paid by the employer. So it will be 2,400 plus driver is also there. Additional 900. Yes or no? Into 12. How much will be the figure? 39,600. Can you deduct 15,000 from this 39,600? No. Why? Because it is a statutory figure. From statutory figures, you are not supposed to deduct any recoveries from the employee. I hope it is clear. So this is how you compute the valuation of motor cars. So let's move on to the next perquisite valuation, that is valuation number 7. All right. So next perquisite, that is item number 7. That is benefit of domestic servants. We can write domestic servants. Domestic servants. So let's compute how to value domestic servants. How to consider the value of domestic servants. Listen. So in the case of domestic servants, can be split into two. This domestic servant valuation can be split into two. So let's understand, if servants are engaged by employee and salary paid by employer. Say the servants are engaged by the employee. What do you mean by engaged by the employee? Employee themselves directly appointed some domestic servants. For that, salary is paid by whom? Employer. Then, how to value perquisite? Department say it will be the salary paid by employer shall be perk in the hands of all employees. In the hands of all employees. Number 2, if the servant is engaged by employer and salary paid by employer, both the appointment and salary paid by the employer, then salary paid shall be taxable, shall be perquisite in the hands of specified employee alone. Specified employee alone. Now listen, there is a trick to understand whether it will be taxable in the hands of all employees or specified employees. Hope you remember the definition of specified employees. In this session itself, I have taught you what is specified employee, director employee, substantial interest case, or drawing more than 50,000 annual salary. Those employees are called as what? Specified employees. Listen, I'll give you one simple shortcut to study whether taxable in the hands of all employees or specified employees. Okay? Listen, I am the employer and you are the employee. In the story, you are the employee and I am the employer. I have appointed a servant. I have appointed a servant. Who am I? Employer. Who are you? My employees. I have appointed a servant and I'm giving that servant to you. I've given that particular servant to you. I'm telling you, you take it. All right. And you say, okay. You say, okay. And I'm paying the salary. For that, there is a taxable perquisite valuation only if you are a specified employee. If you yourself are appointing that particular domestic servant and you are asking me, sir, give me the salary of the domestic servant. So you are enforcing me to pay the salary of domestic servant. Irrespective of your status, it will be taxable in your hands. Are you all with me? So the story is very simple. If you yourself are filing a benefit and you are making me to pay the amount, it will be always taxable. If I am forcing you to use the benefit, it will be taxable only if you are a specified employee. Same in the case of motor car also. So let's go back to the motor car flowchart. Listen, in the motor car flowchart also, I've told you, I've referred about specified employee case. I have referred about specified employee case. Listen, there's a shortcut. I am the employer and you are the employee. I have a motor car and I've given it to you and I'm telling you to use it. Then it will be taxable perquisite only if you are a specified employee. Look at the first flowchart. Car owned by the employer. Then it will be taxable in the hands of specified employees. Specified employees. Specified employees. You can see specified employees everywhere. Specified employees. So car owned by me and I am giving it to you, just like the servant. I am appointing the servant, I am giving it to you. I am pressurizing you to use it. Then only it will be taxable in your hands only if you are a specified employee. Instead, car owned by yourself and you are telling me to pay the charges, it will be always taxable. Yes or no? Just like the domestic servant appointed by you and you are enforcing me, sir, please pay the salary, please met the running and maintenance charges. Likewise, it will be taxable in the hands of all employees. Look at the second flowchart. All employees. All employees. You can see that all employees everywhere. So, second flowchart was car owned by you. You have a car and you are requesting me to meet the maintenance charges. You appointed a domestic servant and you are pressurizing me to pay the salary. In that case, anyways, it will be taxable in your hands, whether you are a specified employee or not. If I am giving it to you, then it will be taxable only if you are a specified employee. Hope you got my point. So this is the shortcut. You don't have to study everything by heart. Use this concept, whether employer pressurizing employee. Yes, specified. Otherwise, all. I hope it is clear. Now from this valuation of domestic servant also, you can deduct what? Actual amount recovered from the employee can be always deductible. So actual amount recovered from the employee can be always deducted from both the alternatives. The restriction only there when they use statutory figures in motor car valuation. Apart from that, from all taxable purposes, you can always deduct the actual recovery from the employee. Now, moving on to the next valuation. So, we have completed domestic servant. So, moving on to the next valuation, that is gas, electricity, water supply. So, gas, electricity, water supply. Gas, electricity, water supply. This is element number 8, if I am not wrong. Element number 8, 8th perquisite. So let's understand how to value gas, electricity, water supply, etc. We can split this into two. We can split this into two. We can split this into two. If connections are in the name of employer, in the name of employer, in the name of employer and enjoyed by employee, then taxable if employee is specified employee. Taxable if employee is specified employee. Then point number 2, if connections are in the name of employee and employer pays money, then taxable in the hand of all employees. In the hands of all employees. Then taxable in the hands of all employees. Listen. So the gas, electricity, water supply, etc. If connections are in the name of employer and enjoyed by the employee, it is just like the motor car. I have a motor car given to you. I have a water supply or electricity supply or gas supply connection and I've given it to you and I am paying the amount. Then it will be taxable in your hands only if you are a specified employee. If you yourself taken a gas connection or a water connection or an electricity connection and I am making the payment, then it will be taxable in your hands irrespective of whether you are a specified employee or not. That means it will be taxable in your hands in all permutations and combinations. Are you all with me? Now, how to value the perquisite, friends? In the case of domestic servant, it was the salary. In the case of motor car, we studied how to value. How to value this? You tell me. How to value this perquisite? For the valuation, also can be split into two. For valuing that gas facility, electricity facility, gas connection facility, we can split this into two. If facility owned by employer, if facility owned by employer, what do you mean by owned by employer? I am a gas distributor. and I'm giving free gas to all of my employees. Or I'm an electricity generator and I'm giving free electricity to all my employees. Or I'm a water supply company and I'm giving free water to all my employees. Then also you are getting a benefit as. Yes or no? How to value the benefit? They say per unit manufacturing cost. Manufacturing cost should be the value of perquisite. What do you mean by per unit manufacturing cost? 1 unit of electricity, how much manufacturing cost I am incurring, that will be the taxable value of perquisite in your hands. Are you all listening? For 1 unit, how much manufacturing cost? It is not the selling tariff. With me, in the selling tariff, I will charge my margin also. I am the electricity generator. The manufacturing cost per unit only will be your taxable value of perquisite, not the margin. I don't have to consider the margin. So, in other cases, what do you mean by other cases? Supply from outside. I am giving a payment, then actual payment made. Then actual payment made. What do you mean by actual payment made? Say, for example, from an outside gas station, I am giving you free gas. I have to make the payment to the gas station. Yes or no? The actual payment made by me to the gas station will be the value of perquisite in your hands. From both of this, you can deduct dash. You tell me. You can deduct actual recovery, if any, from the employee can be always deducted. I hope it is also clear. These are easy ones. These are actually very easy ones. I hope you are getting my point. All right. So let's start with the 9th perquisite valuation. That is valuation of free or concessional educational facilities. So listen, valuation of free or not fee, it's free, okay? Free or concessional educational facilities. Educational facilities. What do you mean by valuation of free or concessional educational facilities? Say, for example, employee or his member of household has been provided with free educational facility in either school owned by the employer or in some outside school. Then also the school fees is the benefit received by the employee. Say, for example, all the employees' children's educational expenses are met by the employer, or it has been sponsored by the employer. He's getting a personal benefit. What is a personal benefit? The employee need not spend anything for the educational expenditure of his child and member of household. Yes or no? So how to value that? That's what we are about to discuss. So listen, let's understand how to value that. So we can split that basically into two. We can split that into two basically. If educational facility is provided in a school owned by employer, then what will happen? Then perquisite in the hands of specified employees only. Hope you remember, just like the motor car case. Employer have a school. Employer told the employee that send your children and other member of your household in my school. Then it will be a taxable perquisite only if the employee is dash. What? Specified employee. Now, in other case, taxable in the hands of all employees. What do you mean by in other case? What do you mean by the other case? Say, for example, in a separate third party owned school, if the employee is, employee's children or member of household are actually studying and the entire cost is reimbursed by the employer, then it will be taxable perquisite in the hands of all employees. Now listen, there are a few more things. How to value the perquisite? Are you all listening? How to value the perquisite? So valuation, we can write valuation. Valuation of this facility. So if school If school owned by employer, if school owned by employer, then value of perquisite shall be cost of education in similar institution. Cost of education in similar institution will be the value of perquisite. What do you mean by cost of education in similar institution? Say for example, an institution which have that much facilities, that much reputation. How much is the normal? We can say the fair value of the school fees. The fair market value of the school fees will be the value of perquisite. For that, there is a benefit also. Under that, you can write a note. This is very important. Under that, you can write a note. So, if cost of education of employee's child, if cost of education of employee's children, employee's children does not exceed less than or equal to 1,000 rupees per child, 1,000 rupees per child, 1,000 rupees per child, then not taxable, not taxable, not taxable, otherwise fully taxable, otherwise fully taxable. So friends, what do you mean by this? See, listen, this is very important. This note is very, very, very important. So listen friends, say the school is owned by the employer and employees' children are actually studying in that particular school. School is owned by whom? Employer. Employees' children are studying in that particular school. Then per child cost per month, 1,000 rupees per child per month, okay? Per child cost per month, if it is less than or equal to 1,000, then they say don't value any perquisite. This benefit will be given only to the children. That too, if the school is maintained or owned by the employer. If employee's brother is studying, then no such 1,000 benefit. Are you all with me? If the per month cost is less than 1,000, don't value any perquisite. Otherwise, you need to value the perquisite. Now, let me ask you one question. What if the per month cost is 1,500 for the child? You can take two views are there. View number one, it say fully taxable. What is fully taxable? Once the 1,000 threshold exceeds, view number one say fully taxable. There is one more view. Only the excess is taxable. Normally, institute gives alternate answers for these kinds of adjustments. So you can stick on to any of the view. Are you all with me? So there are alternate views for this because the wordings of Income Tax Act is not that clear. It is not that clear. Only for the purpose of one view I've written, not taxable, otherwise fully taxable. Actually, there are two views. In most of the answers, they give alternative views. That means this can also be solved like this. They always give the alternative answers. So it's up to you to take, you can take either of the views. All right. Either excess taxable or fully taxable. But the one point you have to consider is this 1,000 rupees per child benefit is only applicable where the school is owned by the employer and this is available only for your child, not for your brother and sister. If your brother is studying and the per month cost is 900, fully taxable. You will not get the benefit of 1,000. The 1,000 rupees benefit will be given only if your child is studying. And here there is no limitation for the number of child also. There is no limitation for the number of child as well. So this is what I can say in relation to educational facilities. And in other cases we can write. You tell me what is the other cases? What is the other case? School is not owned by the employer. That means in an outside school, your children, brother, sister, everyone is studying. Then how to value the perquisite? You tell me. There is no requirement of an equation. You tell me how to value the actual cost. Actual cost paid by employer. Actual cost paid by the employer will be the taxable value of perquisite. Now friends, one more thing you have to consider. Listen. It is the actual cost. Here, say for example, your child is studying. Are you all with me? Your child is studying in a third party school and the per month cost is less than 1,000. Fully taxable. If school is owned by the employer and your children are studying in that particular school and the per month cost is less than or equal to 1,000 per child only, you will get the benefit. Otherwise, fully taxable. You with me? If the school is a third party school and your children is studying, even if the per month cost is less than 1,000, you will not get the benefit of exemption. It is fully taxable. The benefit of 1,000 you will get only when the school is owned by the employer himself. In other cases, you will not get the benefit of 1,000. I hope it is clear. Now, let's move on to the next perquisite valuation. I think it is the 9th one. Yes or no? 10th one. So, let's move on to the next perquisite valuation, that is free or concessional tickets. Concessional tickets. So let's understand what is this free or concessional tickets. Listen. So free or concessional tickets, we can split this into two. Quickly write with me. So if employer engaged in business of transportation, then value of perquisite shall be amount charged from public for such facility. What do you mean by this? Say for example, I am in the business of a transportation, you are my employees and I am giving free tickets to you. Say for example, I have a tourist bus. It's a stage carriage. Normally it travels from say Kochi to Chennai. And for you and for your family members, free travel. You and your family members at any time can visit and conduct a free travel. So you are getting a personal benefit. Yes or no? Because if you are opting for an outside traveler, you should have to pay the ticket cost. So you are getting a benefit. How to value the benefit? They say the value of perquisite shall be amounts charged from public for such facility. How much is the ticket cost for a normal person when he conducts a journey from Kochi to Chennai? The ticket cost will be the taxable value of perquisite in your hands, irrespective of whether you are a specified employee or not. Now, in other case means what, friends? Say for example, I am some kind of manufacturer and I am sponsoring your free tickets. You can perform a journey from Kochi to Chennai. If it is like that, then actual cost to the employer. Actual cost to the employer shall be the value of taxable perquisite subjected to LTC under section 10 subsection 5. What is subjected to LTC under 10 subsection 5? Hope you remember the leave travel concession which we have discussed yesterday. If it is a leave travel, then the transportation cost is exempted in the hands of employees. So you should always consider the leave travel concession in such case if it is a journey, if it's a tour, and that number of tour, it's in a block of 4 years, you can perform 2 journeys. In such case, it is exempted. In other case only, it will be taxable. Are you all with me? All right. Now, there is a note. If you are a railway or airline employee, then perquisite is not taxable. What do you mean by railway and airline employee? Say for example, you are my pilot or flight stewards or air hostesses and you are getting free tickets. You and family members can travel in my airline at free of cost. Don't value any perquisites. You are an employee of railway. You are a railway sector employee. You are getting free train tickets or your member of family members are getting free train tickets. No perquisite valuation. For railway and airline employees, this perquisite has been excluded. For all other employees, definitely you have to value the perquisite accordingly. I hope it is clear. And from this also you can deduct what? Any amount recovered from the employee. That always you can deduct from all the perquisite valuation except that motor car statutory figure usage. Except that scenario, you can always deduct actual recoveries from the employee. I hope you are with me. So this is what fees, free or concessional ticket valuation is all about. These are simple items. These are simple items. Moving on. Next is important item. Interest-free or concessional loan. Interest-free or concessional loan. What is interest-free or concessional loan, friends? First of all, tell me, what is interest-free or concessional loan? Say, for example, I am giving you a loan. All right, I am your employer and I am giving you a loan. You don't have to pay me any interest. You don't have to pay me any interest, but you have to prepay the principal. Interest-free. You are getting a benefit or not? Are you getting a benefit or not? Of course, you're getting a benefit, because if you're taken a loan from an outside bank, they would have definitely charged interest from you. Yes or no? So that interest is your benefit, because being my employee and not charging any interest from you. So that interest is your benefit received. That is free interest. What is concessional interest? Say the standard lending rate is 10%. I'm only charging 6% from you. You are getting a benefit of 4%. So both the cases, how to value the perquisite. So what department say? If interest charged by employer is less than SBI lending rate, less than SBI lending rate, less than SBI lending rate, then difference amount, difference of interest on outstanding balance shall be the perquisite. Say for example, 1 lakh rupees is the outstanding loan amount. SBI normally charges 10%. Employer charged only 6%. So how much is the benefit? 4% on this outstanding loan amount shall be the benefit received by the employee. Are you all with me? This will be taxable whether you are a specified employee or not. Here and all, there is no specified employee, normal employee. For every employee, the benefit received will be fully taxable. Now there is a note. In the following cases, there is no perquisite valuation. In the following scenarios which I am about to discuss, there is no perquisite valuation required. So let's understand which all are the scenarios. Please listen. So number one, if loan is for prescribed medical treatment, or amount of loan in aggregate is less than or equal to 20,000. In both the scenarios, no perk valuation. So listen friends, what they are saying is, the point is very simple. If the loan is taken by the employee for the treatment of some prescribed diseases, say for example, the employee is diagnosed with cancer or tumor. For that, he requires some chemo treatment or some surgery expenses are there. For that, employer has given a loan to the employee without any interest. It is cruel to charge perquisite taxation from him. So department say no taxation. If the loan is taken for prescribed diseases, okay, it is not for all diseases. Income tax department has listed certain diseases. So you don't have to study which all other diseases, but only understand there are certain prescribed diseases. If the loan is taken for those prescribed diseases, then there is no interest-free perquisite valuation. or if the loan amount is less than or equal to 20,000. These are alternates. For any purpose, you have taken a loan, but the loan amount is 20,000 or less. Very small amount, right? So for that, there is no perk valuation for the interest free or interest difference. Are you all with me? So in these two scenarios, there is no perquisite valuation required. That's what the department says. So the point I was saying is, in these two scenarios, you don't have to charge any perquisite. All other scenarios, you have to value perquisites. That's it. I hope this much is clear. Moving on to the next valuation. What is the number? Number 10, right? Or 11? Number 11. So let's consider the next perquisite item, that is traveling, touring and accommodation. Traveling, touring and accommodation. Next perquisite. Say for example, listen. So the point is, say you are on a travel or a tour. All right, you are on a travel or tour, and say it is an official travel where employee performed official travel. Official travel. Then, is there any perquisite taxable in the hands of employee? Okay, 12. No problem. Number does not have any relevance, but still, if the employee have performed an official travel and all the cost is reimbursed by the employer, tell me whether there is any perquisite element taxable in the hands of employee. The answer is no. Why? Array, is this for the official purpose? I've conducted a travel. The employer has to give me the amount. So no, I don't have to spend money from my pocket for the official purposes. I'm not getting any personal benefit here. So no perk required. No perquisite required. There are a few other points that you have to consider. That is, number one, say it is a personal purpose. You have traveled a personal tour. A personal tour. The employer has given you all the accommodation and other things and all. Are you all listening? Then how to value the perquisite? If it is a personal tour, not an official tour, if it is a personal tour and employer has given all the traveling cost, then food, accommodation, everything, then how to charge the value? So let's understand how to charge the value. For that, there is a dedicated table that we have prepared. So listen, where such facility is maintained by the employer and it is not available uniformly to all employee, and you have performed a personal tour. You have performed a personal tour. You have performed, say for example, I am an employee of Mahindra Holidays. Mahindra Holiday, they themselves have a lot of resorts all over India. What I can do is I can travel to any of the property of Mahindra's Holiday and I can stay over there. Are you all with me? So the tour is performed in a property which is owned by the employer himself. How to value the perquisite? Department say the notional cost of such facility. What do you mean by notional cost of such facility? If an outsider have enjoyed that particular resort, how much would have been the value of perquisite? The same will be the taxable value of perquisite in the hands of me also. Are you all listening? This is also subjected to 10 subsection 5. What do you mean by this is subjected to 10 subsection 5? For the traveling cost in 2 journeys in a block of 4 years, I can claim exemption. But not for accommodation and for other facility. Traveling cost alone. Tour means always consider personal tour. Means 10 subsection 5 will come. Are you all with me? That's why I've said this is also subjected to 10 subsection 5. If you study in this way, then however they have complicated the scenario, you will be easily able to track it and write the right answers. Are you all with me? So rather than sticking on to the syllabus, you should be able to think in all permutations and combinations. You should be able to think or value perquisites in all permutations and combinations. That's why we are considering all the permutations and combinations. Now, next one. Where employee is on an official tour. So what was the first point? Listen, what was the first point? Let me repeat it again. What was the first point? You have conducted a personal tour and the tour is to a location or a property which is owned by the employer himself. Subjected to 10 subsection 5, how to value the perquisite? Notional cost. What is notional cost? If the same tour has been performed by an outsider, what would have been the cost? The same will be the taxable value of perquisite in your hands. Are you getting it? Now, let's move on to the next case where the employee is on an official tour and the expenses are incurred in respect of any member on his household accompanying him. Super. Say for example, you have performed an official tour. All the expenses are reimbursed by your employer. No perquisite. Yes or no? There is no need of any perquisite. But you took your wife also. Then what department say? The amount of expenditure so incurred for the accompanying member of your household will be the taxable perquisite. Your journey, not perquisite. But why should you take your wife for official journey? That means that cost for that accompanying member, that means that wife's traveling cost, etc., have to be a taxable perquisite. Are you all listening? So you are going for an official tour, that is okay, but you are accompanying, you are taking your household members along with that. Then the expenses for the household members will be definitely a taxable perquisite because your visit is an official visit. That is anyways not at all taxable perquisite. Next one, where any official tour is extended as a vacation. Official tour is extended as what? Vacation. What do you mean by that? 3 days official tour was there. All right. You came back after 6 days. Or for say 3 days, 5 days. 3 days was the official tour. You came back only after 5 days. There is an extra 2 days. That cost will be definitely taxable perquisite. So the value will be limited to the expenses incurred in relation to such extended period of stay or vacation. The official purpose journey was only for 3. You came back after 5. So the 2 days extended cost will be taxable perquisite in your hands. Are you with me? In any other case, amount incurred by the employer. In any other case means not an official purpose, some other tour purpose, the actual amount incurred by the employer will be the taxable perquisite and it is completely subjected to 10 subsection 5, that is leave travel concession. In a 4 calendar year block, you can perform up to 2 journey and the traveling cost you can claim as an exemption in accordance with 10 subsection 5. Always you have to consider that also while valuing this particular perquisite. That's what the department say. From all the above value, department can always deduct what? Actual recovery from the hands of employees. From all the perquisite value, department can always deduct actual recovery from the employee. What is actual recovery? The amount actually paid by the employee can always be deducted from the perquisite valuation. That's what they say. I hope it is also clear. So moving on with the next point, friends. Free or concessional food and non-alcoholic beverages. Say your employer is giving you free or concessional food as well as non-alcoholic beverages. What is non-alcoholic beverages? Lime juice, not beer. Okay, lime juice. You will not get beer and all. If you are getting beer, fully taxable. If you are getting lime juice, then it's okay. Tea, coffee, lime juice, fine, no problem. But beer, then other things, definitely taxable. So let's understand how to value the perquisite. So please listen. Tea, snacks and other non-alcoholic beverages in the form of light refreshment provided during office hours, not taxable. What do you mean by tea, snacks and other non-alcoholic beverages in the form of light refreshment? In between morning tea, then evening tea, small puffs, small, vada, dal vada, etc. It's okay. We are not taxing you. 5-6 chapati, 1 chicken fry, maybe light for you, but not light for department. Okay. You may feel it as very light, but it is not light for department. Only light refreshments are excluded from the ambit of perquisite valuation. Now, next is free meals provided during office hours in a remote area or offshore installation also not taxable. What do you mean by free meals? It is not light refreshment. Say the employer is providing free meals at noon. Absolutely free. You can have the free meals. But you are working in a remote area. What do you mean by remote area? In some rural area. Your main company is in Chennai, but the company have sent you to Ooty. Ooty and Chennai, I think it will be anyways more than 100 kilometers. More than 100, 500 kilometers, more than 100. Okay, fine. 500 kilometers. So it's an offshore, it's like a remote area. So you are actually working for your company in Ooty. In Ooty, the company provides you free meals. Absolutely no problem. Then offshore installation. What is offshore installation? Onshore means in India. Offshore means outside India. So you are working for the company outside, overseas. Then the company is providing you free meals. Not light refreshment, free full course meal. No problem, not at all taxable perquisite. Now, free meals provided by the employer during office hours. For a normal employee, if the company provide free meals, then at office or business premises or through paid vouchers which are not transferable and usable only at eating joints. How can they give free meals? Either an in-house canteen. What do you mean by in-house canteen? The employer himself have a canteen facility and he gives free meals. Or the employer gives vouchers. What is voucher? They will give you voucher, you can redeem that voucher at a restaurant and you can have free food for the value of voucher you have. So in that cases, department say this is important. What department says is expenditure on free meals in excess of 50 per meal shall be taxable perquisite to the extent of excess amount in the hands of all employees. That simply means if the per meal value is more than 50 rupees, excess will be the taxable perquisite. I'll give you one example. Listen, say for example, I am your employer and you all are my employees and I'm giving you 75 rupees voucher every day. I'm giving you 75 rupees voucher every day. You can show these vouchers in the nearby restaurants and you can have food for 75 rupees. Are you with me? You are working in my main city, not offshore and not remote. You are working in the main city. Then what happens is up to 50 rupees, department will not consider it as perquisite. How much is the excess value over and above 50? 25 rupees per day. So I'm giving you 300 vouchers in a year. So 25 rupees per day into 300 vouchers. How much will be the total value of perquisite? 25 into 300. 7,500 will be the taxable value of perquisite in such cases. So if a normal employee is getting free meals in a day, either through a paid vouchers or through in-house canteen, and the value of meals, if it is more than 50 rupees, excess will be the taxable perquisite. If exactly 50 or less than 50, not at all perquisite. If it is over than more than 50, excess only will be taxed. I hope it is clear. If I am giving you 120 rupees voucher every day, then how much will be the value? 70 rupees per voucher will be the taxable perquisite in your hands. But the point is, if you are working in a remote area or an offshore installation, then you don't need to check the value. Always fully exempted from the valuation of perquisites. In any other case, actual expenditure incurred by the employer as reduced by the amount charged from the employee. So in all cases, if there is any amount charged from the employee, you can always deduct the value. So this is in relation to free or concessional food or non-alcoholic beverages. And out of this, this is very, very important. This point is very, very important. They have tested this point many times. So let's move on with the next perquisite valuation, that is item number 13 maybe. Yes or no? Item number 13. So that is value of gift, voucher or taken in lieu of such gift. This is also important. Value of gift, voucher, etc. taken in lieu of such gift. So we can write value of gift. We can write it as value of gift. We can split this into two. We can split this value of gift into two. So let's understand how to value this value of gift. What do you mean by value of gift given by the employer to the employee? I have attended your son's birthday. I'm your employer and I have attended your son's birthday and I've given you a TV. All right, having a value of 1 lakh rupees. Or I've given you 1 lakh rupees as a money gift. So in such cases, how to value the perquisite in your hands? So what you can do is, you can split this into two. So the first one is gift, and in bracket write other than money. other than money. What do you mean by gift other than money? That means in kind. Given you a TV having a value of rupees 1 lakh. Then what we can say, up to 5,000 rupees, not perquisite, not taxable. Excess shall be taxable. Shall be taxable. Say for example, I am giving you 1 lakh rupees TV, then 95,000 rupees will be your taxable perquisite. 5,000 rupees you can claim it as a exemption. You don't have to pay any taxes for value of gift which is up to 5,000 rupees. Now listen, here also there are two views. View number 1 say, if the value of gift exceeds 5,000, entire value is taxable. View number 2 says, if the value exceeds 5,000, only excess is taxable. You can write anything, just like the 1,000 in that children case. Same here also, if the value exceeds 5,000, then according to your opinion, you can write either only the excess taxable or the full taxable. Because the institute always give alternate answers. You can check with the past exam question papers, they always give alternate answer for such scenarios. Now, the second word is money gift. Money gift, fully taxable. Fully taxable. What do you mean by money gift fully taxable? If I have given you rupees 1 lakh as gift, then you will not get the benefit of 5,000. If money has been given as gift, then the entire money will be taxable in your hands. If gift is other than money, just like kind gift, then up to 5,000 you can claim exemption. In other cases, fully taxable. So this is how you have to value the gift. Now, next point is credit card expenses. That is item number 14. Credit card expenses. Item number 14. So let's understand how to value credit card expenses. So we can split this into two. This is also very easy. We can split this into two. Official purpose. Official purpose. If the credit card expense is for official purpose, not taxable. If the credit card expense is for personal purpose, then fully taxable. It is as simple as that. What do you mean by that? Say you have a credit card given by your employer and you are spending money and the employer is paying the credit card bill. If you are spending that money for official purpose, not perquisite. If you are spending that money for personal purpose, definitely the entire money will be what? Perquisite. That's it. We don't have to consider anything. Now, there is one more thing here. If the employee is giving anything back to the employer, that means if there is actual recovery from the hands of employee, that you can always deduct from the value of taxable perquisite. Are you all listening? If you are deducting something or collecting something from your employees, then that amount you can definitely deduct from the taxable value of perquisites. Then item number 15. That is club expenditure. Club expenditure. Then club expenditure, we can split this into 1, 2, 4. We can split this into 4. We can split this into 4. Now, listen. Club expenditure, if official purpose, not perquisite. What do you mean by official purpose? Club expenditure, that too for official purpose. What do you mean by that? Say for example, you are my employees, you are in sales. So what I am doing is, I have taken a corporate membership or I have taken a membership in the Lions Club or in some other Rotary Club or something in Chennai. And I'm sending you to that particular club. For what? What will be my purpose? You have to find clients. You have to attend the club functions and you have to meet big shots over there. Because I know that there are a lot of big shots over there. So I'm sending you to the club. It's mandatory. Or you have to join the DNI. There are things called BNI. Alright. It's another type of professional club. So you can join all these clubs and you can find out the customers from there. So I'm sponsoring your entire club expenditure. So for you, that club attendance and the club membership is for the official purpose. In such cases, not a taxable perquisite. Are you all with me? If the club membership expenses and other expenses is for the official purpose, then there is no perquisite valuation. Now, if it is a health club, if it is a health or sports club, if it is a health or sports club and it is available uniformly for all employees. If it is available and it is available uniformly for all employees. What do you mean by that? Say for example, I am an IT company. I'm an IT company. You all are my employees. And in my top floor, there is a gym. There is a gym and there are a lot of dumbbells and other machines and all. So every day, all my employees can freely go there and take the dumbbells. All right. And you can what? You can increase your muscles or you can maintain your body shape. It's free of cost. So you are getting a benefit. You don't have to spend money for the outside gym. Yes or no? Normally we used to go to gym. We pay money and we don't go. We pay money. That's of course we'll do. But we'll never go. 1 or 2 days we'll go. Third day, lost interest. Aye, gym. Next day pola. You keep on postponing your gym presence, right? So what they say is, if the employer himself is maintaining a sports club or a health club or any other type of club and it is uniformly available for all employees, no perquisite valuation. No perk valuation is required. Now, next one. Employer obtained corporate membership of club, not perquisite. What do you mean by employer obtained corporate membership of a club? Say for example, listen, there is a concept called corporate membership, especially in Bangalore and all. You can see this. I think in Chennai also we have this. See for example, the IT company employees, to make them cool, they will be frustrated, it is like due to the continuous work pressure and all, they will be a little bit frustrated. So it is the responsibility of the employer to make them cool. Then only there will be more productivity from the employees. Yes or no? So what the companies do is like, the company will buy corporate membership. That means say there is a nearby pub or a club. All my employees can freely enter that particular club. I have obtained a corporate membership. That means I have to pay a lump sum to that particular club for the tie-up. All my employees with an employee card can freely go there. It is only the entry fees. There is no entry fees for my employee. You can dance, you can have food, you have to pay the bill for the food. Alright, only the membership fee is free. You don't have to pay anything for the membership fee and to attend the parties and all. If you had some food and all, you have to pay the amount. So, for getting that corporate membership, I have to expend something. Say I am the employer and you are my employee. To get that corporate membership, I have to pay a lump sum amount to the club. Yes or no? That lump sum amount's proportion is a taxable perquisite. It should be a benefit in your hands. Say for example, I am paying 1 lakh rupees every year and I have 1000 employees in my company. How much is 1 lakh divided by 1000? 100 rupees. So it simply means I am spending 100 rupees per my employee for their free entry in the club. Yes or no? You are getting a personal benefit, but don't value any perquisite. That's what the department say. For taking corporate membership, if the employer expends anything, don't charge any perquisite value in the hands of employees. It is absolutely not accessible. But if you have some food or other drinks from the club, and if I have reimbursed it, that will be definitely what? Taxable perquisite. Only for the corporate membership, you don't have to value perquisite. For actual expenses reimbursement, definitely I have to value what? Perquisite. Are you all with me? Now, moving on. In any other case, actual expense will be the value of perquisite. In any other case, I can definitely say the actual expenses will be the value of perquisite. Now from this also, you can deduct dash. You tell me. Any recovery from the employee can be definitely deducted from the value of perquisite. I hope it is clear. Now friends, moving on to the 16th perquisite, that is use of movable assets. Use of movable assets. This is also an important one. That means use of movable assets. So please listen. So let's understand how to value this thing, use of movable assets. So what department say is, say for example, if the employer is giving some assets to the employee, it's not given forever. It is only for the purpose of usage. Are you all with me? Say the employer is buying a laptop or buying a fridge or buying a washing machine and it has been given to the employee. He can use it. Alright, once he quit the job or once he resigns, he have to give it back to the employer. So usage is what we are about to discuss. Usage of movable assets. So what to do with that? In the case of laptop or computers, don't value any perquisite. Whether it is used for personal or official. Whether you are using it for personal or official. Say for example, employer bought a laptop and give it to the employee. Employee is using that laptop for official as well as personal. No problem, don't value any perquisite. For computers and laptop, no perquisite valuation. We don't have to value any perquisite. Now, for movable assets other than laptop and computers and assets already specified. Alright, listen. For movable assets other than laptop and computer and assets already specified. What do you mean by assets already specified? Motor car. Motor car is also a movable asset. Yes or no? That has been given to the employee by the employer for the purpose of usage. That we have already valued. So for other assets like washing machine, fridge, TV, etc., if it is given by the employer to the employee, then how to value the perquisite? 10% per annum of the actual cost of the asset or amount of rent or charge paid or payable by the employer, as the case may be. We have already discussed this as a part of that furnished accommodation. Yes or no? Actually, these are two perquisites, but I have integrated it under rent-free accommodation itself, because most probably they will ask questions by mixing it with rent-free accommodation. Are you all with me? So I have integrated this point already with the rent-free accommodation, but only for the clarity purpose I have told you. So if the employer is giving any assets other than motor car and laptop and computers, then how to value the assets? If the asset is owned by the employer, take the original cost and 10% per annum will be the value of taxable perquisite in the hands of employee. If the asset is hired or rented by the employer, actual rental charges paid by the employer shall be the taxable value of perquisite. From this, always you can deduct dash. Any actual amount recovered from the employee can be deducted. I hope it is also clear. Next item, that is item number 17, which is very, very important again. Transfer of movable assets. What do you mean by transfer of movable assets, friends? Transfer of movable assets. What do you mean by that? I am transferring motor car in your name forever, for free. Or I am giving you a TV or a fridge forever. You don't have to give it back to me. Or I am giving you a laptop or a computer forever. You don't have to give it back to me. Are you all with me? Then how to value that? So the last point which we have discussed, only the usage. Right now I am giving you the ownership. If I am giving you the ownership, then how to value the perquisite? That's what we are about to discuss. So please listen. This is very, very important. So the first thing that we have to value is computer and electronic items. Say for example, I am giving you a laptop or a computer or a desktop for free. Then how to value the perquisite? So the department A says is you take the actual cost first. What do you mean by actual cost? The original purchase cost. Then deduct depreciation at 50% for every completed year under WDV method. Say I am using that particular laptop for 1 or 2 years. On third year I am giving it to you. On third year only I am giving it to you. For every year of usage I can deduct 50%. And then on the remaining value, if any amount recovered from the employee have to be deducted. The rest will be the value of perquisite. So please listen, friends. Please listen how to value this. Listen, this is important. So what they are saying is, if computer or electronic items is given by the employer to the employee, how to compute the value? Take the actual cost, original purchase price. Say for example, the employer used that particular laptop or computer for 2-3 years. For every year, 50% depreciation you deduct. On the remaining value, if any amount recovered from the employee also have to be deducted. The rest will be the value of perquisite. I'll give you one example. Listen. Say for example, I bought a laptop worth 1 lakh rupees. My employer bought a laptop worth 1 lakh rupees and it is given to me, being employee. I paid 10,000 rupees. I paid 10,000 rupees to the employer. Are you all with me? This is not for usage. If the laptop is given only for the purpose of usage, no perquisite valuation. This is the permanent transfer. The ownership has been transferred by my employer in the name of me. So let's see how to value the perquisite. How to value? The employer used, listen, the employer used that particular laptop for 1 year. Second year, he transferred that laptop in my name. He used that particular laptop for 1 year. Second year, he transferred that laptop in my name. So you take the actual cost. How much is the actual cost? 1 lakh. 1 year, the employer used it. So I can deduct 50% as depreciation. So 50% means 50,000. Say employer used it for 2 years. Employer used it for how many years? 2 years. Only on third year he transferred it to me. Assume only on third year he transferred it to me. Or depreciation have to be deducted on the basis of WDV. That's what they say. WDV means how much is the remaining value? 50,000. Year 1 50%. Year 2 50% on this 50,000. On that WDV value, written down value, I have to deduct depreciation for every year. So 50% on 50,000 it will be 25,000. So the remaining value will be 25,000 and I have paid him 10,000. Yes or no? So I can deduct 10,000 from this 25,000 and the remaining 15,000 will be my taxable value of perquisite. This is how you have to compute. Are you all listening? So how to compute if laptop or other electronic items have been transferred by my employer in my name? You take the actual cost. For every year on WDV basis, I can deduct a depreciation of 50%. On the remaining value, if there is any recovered amount from the employee, I can deduct the rest of the value, if any, will be the taxable perquisite in the hands of employee. Are you all listening? Are you all listening? Great. Now moving on, friends, there is one more thing. I've told you computer and electronic items. What is this electronic items? Electronic items which are accessories of computers like printers, scanners, UPS, etc. TV, washing machine, fridge, AC are actually electronic items, but that will not come under this first ambit. So they have given an explanation. Electronic gadgets include computer, digital diary, printer, but exclude washing machines, microwave ovens, mixers, hot planes, ovens, etc. These items will come under the other asset category. Fridge, washing machine, TV, etc. If it is permanently transferred, don't treat it as an electronic item. Here, computer and electronic items, what department meant is computer and similar electronic items like printer, scanner, UPS, etc. etc. Are you with me? In the case of washing machine, fridge, etc., you have to consider it as what? Other assets. Now, let's understand the case of motor car. Say, for example, if motor car is given by the employer to the employee, motor car ownership has been transferred from the employer to the employee. How to value perquisite? Listen, don't confuse that. Motor car we have already discussed. Then why again motor car? That was usage. This is permanent transfer of ownership. Yes or no? So how to compute it? You take the actual cost. Then deduct depreciation at 20% for every completed year under WDV basis. The only difference with computer is, in the computer case it was 50% depreciation. In the motor car case it is 20% depreciation for every year of usage. And from the balance amount, deduct any recovery from the employee. The rest will be the taxable value of perquisite if motor car has been transferred permanently from the employer to the employee. I hope you guys are listening. So listen friends, it is simple. If motor car has been transferred by the employer to the employee, how to compute the perquisite value? Take actual cost, deduct 20% depreciation every year on WDV basis for every year of usage. From the rest, deduct any amount recovered from the employee. The rest, if any, will be the taxable value of perquisite. Now, in the case of other assets means any other asset, you compute the actual cost. Then deduct depreciation at 10%. Listen, deduct depreciation at 10% for every completed year under SLM. What is SLM? Straight line method basis. What is the speciality of straight line method basis? The amount of depreciation will be constant throughout the year. The amount of depreciation will be constant throughout the year. Less amount recovered from the employee, the remaining will be the taxable value of perquisite. I'll give you one example for that also. Listen. Say, the employer, my employer transferred a TV having a value of 1 lakh rupees. TV having a value of 1 lakh rupees in my name. He used it for 2 years. He used it for 2 years. This is the third year. This is the third year. And I've paid him. Rupees 10,000. And I've paid him rupees 10,000 on the third year. How to value perquisite? This is given for ever, not usage. This is given for ever case. So how to value the perquisite, friends? You take the actual cost. How much is the actual cost? How much is the actual cost of the TV? 1 lakh rupees. Less depreciation for every year of usage. 2 years have employer used. Yes or no? So for every year, how much is the percentage? 10% for every year on SLM. So year 1, 10% on 1 lakh will be 10,000. Yes or no? Year 2 also the same one, 10,000. That is SLM. Whatever is the amount of depreciation, that will be constant throughout the life of the asset. So that means after deducting these two, how much will be the remaining value? 80,000. From that I have paid already 10,000. The remaining 70,000 will be the taxable perquisite. That means after 10 years there is no value for the asset. Fridge and all after 10 years is scrap. Yes or no? You are giving a fridge after 10 years of usage. That is scrap. Don't value any perquisite. Okay. Normally it is like totally disgusting. If I'm giving a TV or a fridge where I have used it for 10 years and after that I'm giving to you, no employer will give that. If they are giving, then income tax department has no problem. It is scrap only. So we don't value any perquisite. 10 years itself is very high. 10 years itself is very high. So that's how the valuation of movable asset if the ownership has been transferred. So friends, listen, let's sum it up. It's very easy. In the case of laptop and computer and similar electronic items, how to value? Actual cost minus 50% depreciation for every completed year. Then from the remaining deduct the amount of recovery. The rest will be the taxable perquisite. In the case of motor car, take the actual cost, deduct 20% WDV basis for every completed year. Then from the remaining value, deduct actual recovery amount. The rest will be the taxable value of perquisite in the hands of employee. And in the case of other assets, then how to value? Take the actual cost, deduct 10% SLM basis for every year of usage. Then the remaining value, from the remaining value, deduct any recovered amount from the employee. The rest will be the taxable value of perquisite in the hands of employees. I hope this much is clear. Let's move on. So the next is valuation of sweat equity shares or specified security. So we will write it as item number, I think item number 17 or 16. So next item, whatever the number is, next item, we can write it as valuation of 18. Okay, valuation of sweat equity shares. Sweat equity shares or securities. What do you mean by sweat equity shares, friends? Sweat equity shares. What do you mean by sweat equity shares? Shares given by the employer to the skilled employees to retain them back in the company. Say for example, Google will definitely have paid sweat equity, have given sweat equity shares to the Sundar Pichai. Why? Because they want Sundar Pichai to be a part of the Google. Sundar Pichai being the CEO of Google, at times he may think that, why should I work hard for Google? Google is only paying me fixed salary. So Google wants Sundar Pichai to be back in Google itself. So to make that sense of ownership, Google will give either free shares or shares at a very low cost to Sundar Pichai. And those shares are called as what? Sweat equity shares for your hard work. We know that we can make more profit. So we will give you shares for your work, for your sweat. That is called as what? Sweat equity shares. You have to spend your sweat. We'll give you shares for free. It is a win-win. Win for the employee, win for the employer. What is a win for employee? I am getting free shares. I'll get a portion of the profit of the company if I perform well. What is a win for the company? The company will get the skill and expertise of that particular person. If that person remains in the company, then what will happen? More profits in future. Are you with me? So the sweat equity shares is actually a win-win agreement. Now listen, if you have received some sweat equity shares, how to value the perquisite? If you are an employee and you have received some sweat equity shares or any other sweat equity securities, how to value the perquisite? Under that we can write, if shares are listed on recognized stock exchanges. If shares are listed on recognized stock exchanges, how to value the perquisite? It's a fair market value in brackets, right? Fair market value in brackets, right? Average of opening and closing value. Opening and closing value. Average of opening and closing value. Average of opening and closing value of such share. Okay, bracket close. Okay, you have to close the brackets here. Opening of average of opening and closing value, bracket close. Fair market value of such share. Fair market value of such share on such date. On such date. So listen, friends. Say for example, Tata Motors. It's a listed company in India. Tata Motors is giving sweat equity shares to its employees. It is given to CEO of the company. You are the CEO of Tata Motors. I am Tata Motors, and today I've given you what? Sweat equity shares. Are you all listening? Today I have given you what? Sweat equity shares. Now listen. If today I have given you sweat equity shares, Tata Motors being a listed company, how to value the sweat equity shares? What department says is, what exactly is today's opening and closing value? You have to find it out. Today's opening and closing value means what? Every day this listed shares have an opening and closing value. That is the opening value, opening trading value, and closing trading value. You take the average. That average is the fair market value. That fair market value shall be considered as for the purpose of valuing sweat equity shares. Say I have given you 100 shares and the FMV is 1000 rupees. Then how much will be the taxable value of perquisite? 1 lakh rupees. Minus amount recovered, if any. Are you all with me? So the point is very simple. If listed shares has been given as what? If the listed shares has been given as sweat equity shares, then you take the opening and closing value of the date of, as on the date of, and date on which the share have been provided to the employee. That means such date. As on that particular date. Now, so how to find out the FMV? You take the average of opening and closing. That's it. Now there is a problem. One share, say for example, Tata Motors shares has been listed in both NSE and BSE. Alright, both have different values. Both have different trading values. Which one to take? Say for example, Tata Motors shares has been, today I have given you some sweat equity shares. Today, Tata Motors shares have been traded in both NSE and BSE. And that too at different values. Because depends upon the stock exchange, value also changes. Which FMV I have to consider? Department say, if the particular shares have been traded in more than one recognized stock exchange, I have to find out the highest volume of transaction. I have to find out that recognized stock exchange where highest volume of shares have been transacted. Say for example, today more number of shares has been traded in NSE. Then I have to go take the value of NSE. I can ignore BSE. Are you with me? So if a particular share have been traded in more than one recognized stock exchange on the specified date, then what I need to do is I need to find out the recognized stock exchange where more number of volume have happened on that particular day. On that stock exchange, I need to take the opening as well as closing value as the FMV. I hope you are able to follow. Now, moving on. What if there is no trading? Today says a public holiday. Today there is no trading. Today it's a public holiday and say there is no trading in recognized stock exchange. And today I have given you swearing shares. Then what to do? Last traded date. Say for example, yesterday, Sunday. Day before yesterday, Saturday. So the last traded date is Friday. In such case, I have to find out the value of last traded date. Are you all with me? If on that particular date there is no trading happening in the recognized stock exchange, go find the last trading day's FMV. That will be considered as the what? That will be considered as the FMV for the purpose of valuing perquisite. Now, in the case of unlisted shares, FMV determined by merchant banker on either date of exercising the option or any earlier date which is not more than 180 days. 180 days from date of exercising such option. What do you mean by this? It looks very complicated, but it is actually very simple. Say for example, if it is an unlisted share, then the fair market value have to be certified by a merchant banker. Merchant banker is a registered valuer who values the share value. Are you all with me? In the case of unlisted shares, we cannot simply blindly find out the FMV of a particular share. So that we need to appoint a merchant banker for valuing the share. That is number one. And the merchant banker have to value as either on the date of exercising the option. What do you mean by date of exercising the option? So today I have given you what? Today I have given you sweating shares. Today's report by the merchant banker, whatever is the FMV determined by the merchant banker, I can use it for the perquisite valuation. But it is not an easy task. I cannot all of a sudden appoint a merchant banker and tell him within 1 hour you need to value this company share and all. It is not practical. So what department say? If I am not able to present today's merchant banker's report, what I can do? I can find out the value on an earlier date which shall not exceed more than 180 days. That means past 180 days, say past 100 days before, merchant banker has valued the value. That valuation date shall not be beyond 180 days. What is this 180 days? Within that valuation have to be happen within the last 180 days. That's it. Say there is a valuation before 1 year. Can I consider that value? No. It should be within the last 180 days. Are you all with me? Say last year, last 365 days before, there was a merchant banker's valuation report. Can I use it for perquisite valuation? No. That valuation have to be happened before 180 days. Preceding 180 days. That's what they say. And from here also, any amount recovered from the employee can be definitely deducted. If you have recovered anything from the employee, you can definitely deduct it. So by this, I can say the perquisite valuation is completely over. We have discussed all the perquisite valuation in all the permutation and combination. I hope you got my point. All right, friends. So, as I've told you, we have completed the Everest, that is perquisites. Now, let's discuss the deductions in salaries. That is very simple topic. So, we can write deductions from salaries. Deductions from salaries. Deduction from salary. There are actually 3 deductions. We have to study 3 deductions. That's it. So, number 1, it is standard deduction. Standard deduction. How much is standard deduction? Either actual salary or rupees 50,000, whichever is lower. So either your actual taxable salary or rupees 50,000, whichever is lower, shall be the standard deduction. Irrespective of your actual expenditure, you can claim the standard deduction. So the word standard deduction, the meaning is whether you have actual expenses or not, you can claim always 50,000 rupees maximum as a standard deduction. If your actual salary is lesser than that, then the actual salary will be your standard deduction. Now, moving on to the second point is deduction for entertainment allowance. Deduction for entertainment allowance. Say only for government employees. Only for government employees. Government employees simply means both state as well as central government employees. Alright. So when they simply say the government employees, then both the state government as well as central government employees will come. Now, this can be claimed as a deduction only for state government as well as central government employees, and the deduction shall be least of the following. Least of following shall be the deduction. So, number 1, either 20% of basic salary. 20% of basic salary, or we can say 1/5 of basic salary. Both are right. 20% is 1/5. Either 1/5 or 20% of basic salary, or rupees 5,000. Rupees 5,000 or actual entertainment allowance. Actual entertainment allowance. So, whichever is lower shall be your deduction under section 16. So, I forgot to tell you one thing. Deductions from salary is under section 16 of income tax. And standard deduction is 1A. Then deduction for entertainment allowance is 2. And the third item is 3. That is deduction for professional taxes paid. Deduction for professional taxes paid. Deduction for professional taxes paid. So listen friends. So 2 deductions we have completed. Number 1, standard deduction. There is nothing. You take 50,000. If your actual salary is less than 50, then actual salary. Then second one, entertainment allowance. What is for entertainment allowance? Only for government employees you can claim entertainment allowance as a deduction. That is for movies, maybe for other entertainment, etc. You are getting an allowance monthly. If you are a government employee, you can claim a deduction. How much is the deduction, friends? Either rupees 5,000 or 1/5 of your basic salary. For basic salary, we don't require any definition. Basic salary, that's it. Or actual entertainment allowance receipt, whichever is lower shall be the deduction. And if you have paid any professional taxes, then that also you can claim it as a deduction. According to the Constitution of India, every employee have to pay professional taxes. That amount you can claim it as a deduction from your taxable salary. Now, there is one more thing. Listen, say your employer is paying professional taxes on your behalf. Say for example, you need to pay 2,000 rupees as professional tax. Your employer is paying that. Then that have to be treated as a taxable perquisite. If it should have to be paid from your pocket, you means employee's pocket. If your employer is paying that, then that have to be treated as what? That have to be treated as a taxable perquisite in the hands of employee. Thereafter, from the taxable salary, you can claim a deduction of rupees 2,000. Say for example, my salary is 1 lakh. And I'm supposed to pay 2,000 as professional taxes, and that is paid by my employer. Then while computing salary, I'm supposed to take 1,02,000 as my salary. How it become 1,02,000? Because this 2,000 is paid by my employer. Are you all with me? If my employer is sponsoring that professional tax, then that amount will be taxable salary in my hands. Now listen. From this, I can claim both standard deduction as well as 2,000 as professional taxes paid. That simply means if my employer is paying the professional tax, I have to add it as a part of salary. Thereafter, I can deduct it. Are you all listening? I have to add it as my salary. Thereafter, I have to deduct it. That's what I've written here. Are you all with me? So, if my employer is paying that professional taxes on my behalf, then I have to treat that amount as a perquisite in my hands. Thereafter, from the deduction, I can claim it as a deduction. So, these are the three deductions from the head salary. Which are the three deductions? Number 1, standard deduction. Number 2, entertainment allowance. Number 3, professional taxes paid. Done. Now, we have another concept that is called as relief. That is the only pending thing we have. Alright friends, so let's understand what exactly is a relief. So, a relief under section 89. So, let's understand what exactly is a relief under section 89. This is basically for arrears of salary. Arrears of salary or advance of salary. Arrears of salary or advance of salary. What do you mean by arrears of salary? Not due, because as I've told you in section 15, salary is taxable on either due or receipt, whichever is earlier. Once it becomes due, it will become taxable salary. There won't be any arrear, but there can be another possibility. I'll tell you a possibility of an arrear. Are you all listening? This relief is not an important concept. Not an important concept, but still I'll take it by giving you an example also. Listen, say for example, I'll give you an example for this arrear. Say for example, JK and my employer. I am the employee. JK and employer have a dispute. Say in 2021-22, my salary in a year was 10 lakh. My salary was how much? 10 lakh. Alright. I argued to my employer that I need a salary of how much? I argued to my employee that I need a salary of additional 2 lakh. I argued to my employee that I need a salary of additional how much? 2 lakh. So, I argued with my employer that I want how much? 2 lakh rupees additional salary for 2021. There was a dispute. Are you all listening? So, the year ended because employer was not agreeing. The year ended. I filed a complaint with the pay commission by the central government, by the state government. I filed a complaint with the pay commission or the labor court, wherever it is. So, in 2022-23, that labor commission approved my contention. That the labor commission told employer to pay 2 lakh additional. 2 lakh additional for the year 2021-22. Are you with me? Right now it is 22-23. The labor commission said to the employer that pay additional 2 lakh for the last year. Are you all with me? So we can say that 2 lakh is not due last year. The 2 lakh due this year. Why? Because only after that court order, I'll get that additional 2 lakh. Yes or no? This 2 lakh is said to be the arrears of salary. It is not due last year, but it is on account of last year. It is due only this year. Why? Because the labor court told my employer to give that additional 2 lakh this year. Are you all with me? Right now, I'm not talking about the arrear. It's not talking about relief. I'm talking about the arrear. Now, let's compute the relief. Now, listen. From 22-23 onwards, my salary is 12 lakh. Because the labor court told my employer to pay additional 2 from last year onwards. And I will get an additional 2 lakh for the last year. Yes or no? I will get an additional 2 lakh for the last year. Why? Because last year I only got 10 lakh. Labor code told pay additional 2 lakh for the last year. That means from this year onwards my salary is 12 lakh. So this year I will get 12 lakh this year salary as well as last year pending 2 lakh. So how much will be my total salary this year? 14 lakh. Say this is after standard deduction and all. This is after all permutation, combination, computation, deduction, exemption, standard deduction, everything computed. My net salary is 14 lakh. Are you all with me? So tell me, how much will be the basic tax liability on this 14 lakh applying old slab rates? If I apply old slab rate, how much will be my basic tax liability? I am an individual having an age of 40 years. Tell me. I've taught you the basic tax 2 lakh. So let's check up to 2.50 lakh. How much is my liability? So up to 2,50,000 nil. Then from 2.50 to 5 lakh, it is 12,500. Then 5 lakh to 10 lakh, it is 1 lakh. Then 10 lakh above, it is how much? 14 into 30%. 1 lakh 20,000. So my total basic tax liability, how much will be my total basic tax liability? 2 lakh 32,500. How much will be my cess at 14%? Sorry, cess at 4%. Cess 4% on the basic tax. 4% on 232,500. How much is the cess? 9,300. Adding everything together, how much is my tax liability? 2,41,800 is my tax liability. 241,800 is my tax liability. This is my current year tax liability. Yes or no? Are you all with me? No, there is a problem. If this year I received 14 lakh, that 2 lakh out of that 14 is on account of past year. Yes or no? If I would have received that 2 lakh on last year, what would have been my tax liability last year? If I have received that additional 2 lakh last year, what would have been my tax liability last year? Let's compute. Say, listen, in the year 2021-22, my actual taxable salary was 10 lakh because I don't know whether I get that additional 2 lakh or not. In the last year, according to the information I have, my taxable salary was 10 lakh. Are you all with me? Why it is 10 lakh? Because I don't know whether I will receive that additional 2 lakh or not. So on 10 lakh, how much will be my tax liability? 1 lakh 12,500 is the basic tax liability plus 4% cess. It will be 1 lakh 17,000. Yes or no? So last year I have paid 1 lakh 17,000. This is already paid. This is the last year return figure. It's already paid. Now friends, listen. If I would have received that additional 2 lakh last year itself, what would have been my tax liability? If I would have received that additional 2 lakh in the last year itself, what would have been my tax liability? So let's see. In 2021-22, if I would have received that 2 lakh, that means my taxable salary would have become how much? 12 lakh. Yes or no? My taxable salary would have become 12 lakh. And how much is the basic tax liability on 12 lakh? 172,500 plus cess. Basic plus 4% cess. What would have been my tax liability? 179,400 would have been my tax liability. Yes or no? If I would have received that 2 lakh last year itself, my tax liability would have been 179,400. Yes or no? If I would have received that 2 lakh last year and I have paid the taxes for that entire 12 lakh last year, what would have been my tax liability this year? What would have been my tax liability this year? That means tax liability for 12 lakh. This year actually I'm supposed to pay taxes for 14 lakh. If I would have received that 2 lakh last year, this year income will become 12 lakh. Last year income also will become 12 lakh. Yes or no? So this year, so in 2022-23, my tax liability would have become 179,400 itself, because it is the same 12 lakh. Yes or no? But I am supposed to pay an amount of 241,800 this year. Why? Because everything received, that entire 14 lakh received this year. Yes or no? Now listen, be very careful. Now listen. After completing this, I'll summarize the concept again. Okay, so don't worry. So listen. Say last year, what is the actual tax paid by me? Last year, 21-22, I have already paid 1,70,000. What is the additional tax liability if I would have received that extra 2 last year itself? What is the additional tax liability if I would have received that 2 lakh last year itself? That means 179,400 minus 1,17,000. How much will be the additional tax liability? 62,400. Now, I've received that entire 14 this year. Yes or no? If I would have received that 2 lakh last year itself, there can be a reduction in tax liability this year. If I would have received the 2 lakh last year itself, there can be a reduction in tax liability this year, because the 12 lakh will go to the past year. So how much is the reduction of tax liability this year? How much would have been the reduction of tax liability? That is 241,800 minus 179,400. How much is the reduction of tax liability? Same figure. Oh, then we have to change the figures. 62,400. I think we have to change the figures. Exactly 62,400 coming. I think the figures are exactly matching, right? So then we'll do one thing. We'll change the figures. Let's change the figures, friends. So here, no, let's not change the figures. So listen, here there is no point of relief. Here there is no requirement of relief. Why? Why there is no requirement of relief? Because the difference between whether the 2 lakh received last year or this year, the difference of tax is the same. Yes or no? So there is no relief. Now let's take another example to understand the relief. This is accidentally become the same. Accidentally it becomes same. I'm supposed to give you a different figure, but accidentally, coincidentally become the same. So we'll take another figure. So listen. Say, listen. Example 2. I will take it as example 2. Are you all listening? Example 2. So let's see actual figures. Actual figures. Last year, salary was say 8 lakh. Last year's salary was how much? 8 lakh. Arrear was 4 lakh. Arrear was 4 lakh. Arrear was how much? 4 lakh. This arrear I got this year. This arrear amount I got this year. So last year means 2021-22. And in 2022-23, current year salary is say 12 lakhs. I'll take another exorbitant figure, 14 lakhs plus 4 lakhs as an arrear I got. 4 lakhs arrear I got. 4 lakhs this arrear I got in this year, current year, 2022-23. So my total salary become 18 lakhs. Are you all with me? Now listen. Now listen. According to the latest information, or according to the information, what is the last year's total income? 8 lakhs, and there is a 4 lakh arrear pending. That I don't know whether I accrue it or not in last year. Because this year only the labor commissioner told my employer to pay the additional 4. Are you all listening? So what is the tax liability I have actually paid last year? How much is the tax liability that I've already paid last year? On 8 lakh, how much is the tax liability including cess? tax liability including cess. 75,400. I hope it is including cess. Yes or no? Alright. So this is the figure that I've paid last year on my 8 lakh. Now, how much is the tax payable? Tax payable in 22-23 due to this 18 lakh. How much is the tax payable in 22-23? How much is the tax payable in 22-23 for this 18 lakh? Three lakh 39,300 including cess, right? Okay. This is old slab rate only, so I am not expanding the taxation. We have already studied this in a basic concepts. Now, this year my tax liability is 339,300. Now, let's think about an imaginary situation. Now we are about to think an imaginary situation. Now listen friends, listen here. This 4 lakh, due to this 4 lakh, this year's income become 18. Yes or no? Due to this 4 lakh, this year's income become 18. This 4 lakh was supposed to be received last year. 3 lakh? 3,66,600. You should know how to calculate basic tax liability, okay? Without knowing that, you won't be able to at least get 40. Basic tax liability is like ABCD. You are in the 10th class and you don't know how to compute the basic tax liability. It is dangerous. Alright, I hope you got. Alright, now 366,600 is the point. Now listen friends. Say, the point is this 4 lakh, I am supposed to receive this 4 lakh in 21-22. But it is actually received in 22-23. Are you all listening? I am supposed to receive that 4 lakh in 21-22, but I actually received in 22-23. Now I'm thinking about an imaginary scenario. If I would have received that 4 lakh in last year, my last year income will become 12 lakh. And my current year income will become 14 lakh. Yes or no? If I would have received that 4 lakh last year, my last year income will become 8 plus 4, 12 lakh. This year income will become 18 minus 4, 14 lakh. Yes or no? Yes or no? Now listen, if that is the case, my 2021-22's total income will become 12 lakhs. Then tell me how much is the tax liability coming? Tax liability I would have paid. How much it will become? 179,400 including cess. It is right or not? Okay. 179,400 is the amount including cess. Now, what would have been my tax liability in 22-23? In 22-23, what would have been my tax liability? On total income of 14. How it become 14? That current year 22-23's income is 18. Now we are thinking about an imaginary scenario. What is the imaginary scenario? If that 4 lakh arrear, if it would have been taxed last year, then last year income will become 8 plus 4, 12. This year income will become 18 minus 4, 14. Yes or no? Now, in 2022-23, my total income would have been 14. And how much is the tax liability I would have suffered? 2,41,800. This is true only, right? Right only, including cess. Now listen. This arrear happened not on account of my default. I argued to my employer, I need that additional 4 lakh last year itself. But my employer didn't agree. So I am forced to go to the labor court. And the labor court given me a positive order. Are you all with me? So listen, if I would have received this, additional 4 lakh last year, the tax liability would have been 179,400. What is the actual tax paid by me last year? What is the actual tax paid by me last year? 75,400 is the actual tax paid by me last year, because my income was only 8 lakh. If that 4 lakh received in last year itself, I would have paid how much? 179,400. That's what it become 12, and I would have paid 179,400. So how much will be my last year's additional tax liability? Last year's additional tax liability, if I would have received that amount in last year itself, 179,400 minus 75,400. 1 lakh? 1,04,000? Exactly 1,04,000. Yes or no? If I would have received that 4 lakh last year, I would have paid an additional 1,04,000. Yes or no? Now, what is the reality? That 4 lakh received this year, and my tax liability is around, this year's tax liability is 366,600. Yes or no? If I would have received that 4 lakh last year, my this year income will get reduced to 14, and my tax liability also will get reduced. Yes or no? So what will be the reduction in tax liability? What will be the reduction in tax liability? How do you find out that? 366,600 minus 241,800. How much will be my reduction in tax liability? 1,24,800. Now listen, if I would have received, now let's compare everything. Listen. Those who didn't get the concept, I think most of you got the concept right now, but still, if you didn't get the concept, listen. We will think about reality and imaginary. We'll call it as reality versus imaginary. There is actually theory for relief, but I don't want you to by heart the theory. I'm talking about the concept. What is the real concept? Just like in margin relief, just like that, what is the real concept behind the relief? That's what I'm trying to explain. So please cop up with me. So we'll draw a table. Particulars, reality and imaginary. In 21-22, what is my original total income? 8 lakh. How much is my tax liability I've already paid? 75,400. Yes or no? Yes or no? Now, imaginary scenario, what would have my tax liability if I've received that 4 lakh last year itself? My total income would have been 12 lakh. And my tax liability would have been how much? 179,400. This is about last year. 179,400. Now again, in the case of 2020-23, what is the reality? My income is 18 lakh. And what is the tax liability on 18 lakh? 3,66,600. Yes or no? 3,66,600. Now, what is imaginary? If I would have received that 4 lakh last year, then my this year income will be 14 only. Yes or no? And how much would have been my this year tax liability? That is 241,800. Now you tell me, due to this dispute, I am suffering an additional tax liability this year. Because if I would have received that additional 4 lakh in last year, my tax liability will increase from 75 to 79. Yes or no? How much is that increase that we have computed here? How much is that increase? 1,04,000 rupees. Yes or no? 1,04,000 rupees. But what happened? Since it is received in 22-23, my tax liability is 366,600. I would have paid only 241,800 if it would have received last year itself. Yes or no? So what would have been the reduction? That is 124,800. So this is the reduction, reduce the tax liability. So how much is the relief? This difference is the relief. That is 124,800 minus 1,4 is the relief. How much is the figure? 124,800 minus 1,04,000. 20,800 is the relief figure. Why 20,800? Listen friends, see, if I would have received that 4 lakh last year, anyways I'm supposed to pay an additional tax liability of 1,04,000. That anyways I have to pay. Since that 4 lakh received this year, my tax liability will become 124,800. That means 20,800 additional liability incurred by me only due to that year difference. So that 20,800 I can claim as a relief under 89. Are you all with me? So this relief can come due to change in slab rates also. Maybe last year lower slab rate, lower tax liability. This year it is received and hence higher slab rate. That difference also I can claim it as relief. Are you all with me? So in the first example there was no relief. Why? Because there was no difference in tax liability. Accidentally we have took that same figures. So there was no difference in the tax liability in first example. It was exactly 62,400, 62,400. So no relief. But in second example what happened? There is a difference. Only due to that year change I am supposed to pay an additional 20,800. That amount I can claim it as relief under section 89. This is the concept of what? Relief. That's it. The theory in relation to salary head. Now let's solve some problems, especially the computation of perquisites. We have to solve some problems. So I want all of you to take page number 8. There is a question called question number 21. It's a fantastic question. Page number 8, question number 21. It contains all the elements which we have discussed under the head salaries. Not every adjustment, but there are a lot of things. Say for example, pension, leave encashment, then perquisite valuation, everything is there. So go through this question number 21 and just give me the answer. So friends, it's in page number 8, okay? Page number 8, question number 21. Alright friends, so listen. The question says Mr. X retired from the services of Messrs. Y Limited on 31st January 2023 after completing service of 30 years and 1 month. He had joined the company on 1/1/1993 at the age of 30 years and received the following on his retirement. So what they say, he has received certain amount at the time of his retirement. He received gratuity, leave encashment, then a car has been given, then pension have been commuted, then gift voucher given, then colleagues gifted him a TV. Following are the other particulars. He has drawn a basic salary of 20,000 and 50% Dearness Allowance per month for a period from 1st April to 31st January. Received a pension of 5,000 per month from 1st February 23 to 31st March 23 after commutation of pension. Compute his gross salary from the above for assessment year 23-24, assuming he has not opted for the provisions of 115 BAC. So what they are saying is, you are supposed to compute his taxable income from the head salary, gross salary before deductions. So let's compute his gross salary. So let's start with what? Basic salary. So computation of income under salary. So to start with the first item, it is basic salary. How much is the basic salary? It is 50,000 per month. Sorry, 20,000 per month. Listen, he retired on 31st January 2023. So he is in receipt of salary only for 10 months because February and March he have retired. So he will never get basic salary after retirement. Don't write 20 into 12. 20,000 rupees into 12 is not there. 20,000 rupees into 10 months. So basic salary is 20,000 rupees into 10 months. And how much will be the basic salary? It is 2 lakh. Now, how much is Dearness Allowance? The entire Dearness Allowance will be his taxable income. So 50% is the Dearness Allowance per month. So Dearness Allowance will be 1 lakh. 50% is the basic salary is the Dearness Allowance. So 1 lakh rupees is the Dearness Allowance. Then what they are saying is, he received a pension of 5,000 per month for February and March after commutation. Uncommuted pension is fully taxable. Only commuted pension you can claim an exemption. Yes or no? So uncommuted pension. uncommuted pension is fully taxable. How many months he got uncommuted pension? 2 months. So that is 5,000 per month. 5,000 into 2, that will be 10,000 rupees. Now let's go back to the first adjustment, that is gratuity they are saying. So we'll write gratuity. How much is the gratuity he received at the time of retirement? It is 6 lakhs. But he is eligible for an exemption for gratuity. Hope you remember, we have studied the exemption for computation of gratuity since he is a private sector employee, because they clearly says that he is an employee of Messrs. Y Limited, not government employee, private limited company employee or non-governmental employee, and he is covered under Payment of Gratuity Act. So how do you compute the limits, friends? How do you compute the limits for claiming exemption for gratuity? There are 3 limits. Hope you remember. Number 1, statutory figure rupees 20 lakh. And let's compute the exemption. So exemption under section 10 subsection 10, 3 limits are there. The first limit is a statutory limit, that is 20 lakh rupees. Second one, they say actual gratuity received. So first one, statutory limit. Second one, actual gratuity. How much is actual gratuity? They say 6 lakhs. And third limit, since he is covered under Payment of Gratuity Act, third limit is 15 by 26 into last drawn salary. Here, last drawn salary means simply basic plus DA. Basic salary is 20,000, DA is 10,000. So basic plus DA will be 30,000. That will be the last drawn salary into completed year of service or part thereof in excess of 6 months. That's what we have learned under 10 subsection 10. So how many completed year of service he have, friends? The question says he have he joined here at the age of 30 years and received the following statements. Now listen. So he completed 30 years and 1 month. 30 years and 1 month means you have to take only 30. Part thereof in excess of 6 has to be counted as an extra year. Part thereof in excess of 6 have to be counted as a separate year. Otherwise, you should only take 30 years extra. So 30 years is a service. So tell me, how much will be the third limit? Just help me with the computation. 5,19,231. 519,231. So whichever is lower means 519,231 will be the lower figure. 519,231 is the lower figure, and yeah, that you can claim as an exemption. And how much is the taxable gratuity? 80,769. That is a taxable gratuity. I hope it is clear. You can write the working note like this. Don't go for a separate page working note and all. It is better to write working note like this itself, because the valuer also will prefer this, so that he can check everything in one page. I mean, if you want, you can write working note number 1 and you can write working note separately. It's completely your choice, but I always recommend this method. Now listen, moving on to the second item. What is the second item? Leave encashment. So let's deal with leave encashment. Leave encashment. How much is the amount received as leave encashment? That is 3,30,000 is the amount received for leave encashment. And listen, friends, for leave encashment also we can claim what? We can claim an exemption. Hope you remember, which is under section 1010AA of income tax. So exemption under section 1010AA. There are 4 limits for 1010AA. Hope you remember. Which all are the limits? Number 1, statutory limit of 3 lakh. Statutory limit of rupees 3 lakh. What is the second limit? Actual leave encashment received. So actual amount. How much is the actual amount? 3,30,000. How much is the third limit? Last 10 months salary. Salary here means standard salary. For standard salary means basic salary plus DA forms part of retirement benefit plus commission if it is expressed as fixed percentage of total turnover. But there is a problem. They only say DA. They are not saying whether it is form part of retirement benefit. They are not saying it does not form part of retirement benefit. So what to do? Assumption. Assumption. You can assume that it is form part of retirement benefit, or you can assume otherwise also. It does not form part of retirement benefit. Which one you want? According to your wish, you can take. I am assuming that it does not form part of retirement benefit. It's up to you. If you want to assume otherwise also, it is fine. But you have to write your assumption. So I am assuming that DA does not form part of retirement benefit. So if I am assuming like that, then how much is the third limit? 10 months basic salary itself. Are you all with me? Because standard salary means basic plus DA plus commission. Here there is no commission. I'm assuming that DA does not form part of retirement benefit. So standard salary here only because will become basic salary. So 10 months standard salary will be how much? 2 lakh. Yes or no? And how much is the third limit? Cash equivalent of leave. How do you convert that? Based on the fact that every year leave entitlement shall not go beyond 30 days. In the question itself, they say, according to the company policy, 1 year and an employee can take 30 days leave for each completed year of service. It has been given in the question itself. So what to do? Leave encashment of 330 days leave balance in his account. How many days credit balance in his account? 330 days. That is based on 30 days per leave. So you don't need to recompute the leave credit. You don't need to recompute the leave credit. You can continue with that. So 330 divided by 30 into standard salary. Yes or no? And how much is the standard salary? That standard salary, that means past 10 months average standard salary. Hope you remember, we have done a question similar to this. Past 10 months average salary. That is the same amount, 20,000. And how much will be that figure coming? 2,20,000 maybe. Yes or no? So 2,20,000 is the fourth limit. So you tell me which is the lower limit. Obviously 2 lakh. So you can claim 2 lakh as an exemption and the remaining 1,30,000 will be taxable. The remaining 1,30,000 will be taxable for as a leave encashment. I hope it is also clear. Now moving on to the next adjustment, it is as per the scheme of the company, he was offered a car which was purchased on 30th January 2020 by the company, and the company has recovered 2 lakh from him for the car. The company depreciates the vehicle at 15% on SLM. So you tell me, it is usage or transfer of ownership? It is purely transfer of ownership. That's why he have recovered around 2 lakh from him. Yes or no? So let's compute the perquisite value. So perquisite value for transfer of ownership of car. So how do you compute that? So what is the purchase value of the car? How much is the actual cost of the car? That is 5 lakhs. The company purchased the car on which year, friends? The company purchased the car on 30th January 2020. His retirement date is 23. So 20, 21, 22, 23. 3 years it is. Yes or no? So we can remove 3 years depreciation as well from the value of car. Are you all listening? So first depreciation at 20% on 31st March 21. How much will be 20% on 5 lakh? 1 lakh, and the remaining value will be 4 lakh. Based on WDV value only, you are supposed to remove the amount of depreciation. So for the second year at 20% again on 31st March 2022. In the question they say 15% SLM. They will tell all these things. Are you all with me? But you are not supposed to depreciate at 15% SLM. I've taught you, if the asset is car, then 20% WDV. Are you all listening? In the question they have written the company depreciates the car at 15% SLM. Doesn't matter. The valuation rule is say WDV that to 20% if the asset is car. So depreciation at 20% on 31st March 2022. How much will be the depreciation for on 4 lakh? 80,000. So WDV 3 lakh 20. Again depreciation at 20% on 31st March 23. 64,000. How much is the remaining value? 2,56,000. Now there is a recovery. How much is the recovery from employee? Recovery from employee is 2 lakhs. So you tell me how much will be the taxable perquisite? 56,000 is the taxable value of perquisite for a transfer of car. I hope it is Clear. Moving on to the next adjustment. An amount of 3 lakh was as commutation of pension for 2/3 of his pension commutation. So commuted pension is there. So let's compute that. Commuted pension. Commuted pension amount is 3 lakh. Now listen, he is covered under payment of gratuity because they say it gratuity, he is in receipt of gratuity. So how to claim the exemption? Hope you remember. If he is in receipt of gratuity, then how to claim? 1/3 of amount which he would have received had he commuted his entire pension. Yes or no? 1/3 of the amount that he would have received had he commuted the entire pension. He commuted 2/3 and received 3 lakh. Yes or no? So had he commuted the entire pension, how much amount he would have received? Let's see. So the exemption for pension is under section 1010A. So exemption under section 1010A. If commuted 2/3 and received 3 lakh, that means into 3/2 he will get the 100% commuted amount. Yes or no? He commuted 2/3 and received 3 lakh. If he commuted entire pension, how much would have been his receipt? Tell me, how much will be this figure? 4,50,000. Had he commuted his entire pension, he would have received 4,50,000 into 1/3. How much is 1/3 on 4,50,000? 1,50,000. That is his exemption. Taxable is 1,50,000 also. It is same. Taxable also will be 1,50,000 because 3 lakh is the total amount. 1,50,000 is the exemption and the remaining will be 1,50,000. Now, so that is the commuted pension adjustment. Now, what are the remaining thing? They say next as the company presented him a gift voucher worth 6,000 on his retirement. Company given gift worth 6,000. That means it's not money gift. It is other than money. Otherwise, they would have said money. Gift voucher it is. So what you can do, up to 5,000, you can claim an exemption. Or you can go for the other view also. Full 6,000 is taxable since it exceeds 5,000. But you have to write like that. You can take any school of law, school of thought, and both are fine. So what I'm sticking on is gift from employer. You can write anything. So 6,000 minus 5,000, 1,000 is the taxable amount. You can write full 6,000 since it exceeds 5,000 up to you. Both views are acceptable. But you have to write it as a note. Alright. Now, what about the next one? His colleagues also gifted him a television worth 50,000 from their own contribution. His colleagues also gifted him a television of worth 50,000. Not taxable. Under IFOS also it is not taxable. Why? Because television is not a property. We will discuss that when we discuss IFOS. It is not at all taxable under 56 subsection 2 clause 10 because they say if any person gives movable property as a gift, then the movable property's value will be taxable under 56 subsection 2 clause 10. Under the definition of movable property, TV is not there. That we will discuss under IFOS. For the time being, don't worry. Anyways, the question is to compute gross salary. Anyways, it is not taxable under the head salary. So just leave it. We will discuss it later when we discuss IFOS. So, gift from friends. Not applicable. I think it is over. Right? So, can you just help me in total? How much is the total amount of gross salary? How much is the gross salary coming, friends? So the total figure coming is 7,27,769. Again, this answer depends upon your assumptions. If you are assuming that DA forms part of retirement benefit, then you will get around 6,27,769. Depends upon the assumption that you take. The assumption which we have taken and we solved in this way, then the answer will be 727,769. I hope it is clear for you. So now let's solve one more problem in relation to this. So please take your question sheet and go to question number 25. It's in page number 9. Page number 9. Question number 25. Take it and solve it. All right, friends. So let's go through that question and solve the answer together. It's an easy question only. So what they are saying is, Mr. Goyal receives the following emoluments during the previous year ending 31st March 2023. So let's compute his salary head income, basic pay, DA, commission, entertainment allowance, medical expenses reimbursed, professional tax paid. Mr. Goyal contributes 5,000 towards recognized provident fund. He has no other income. Determine the income from the head salary for assessment year 23-24 if Mr. Goyal is a state government employee. So for computation of salary, the first figure we require is basic salary. How much is his basic salary? 40,000. They simply say 40,000. That means it is for the year. Are you with me? They simply say, because see, Mr. Goyal received the following emoluments during the PY 31st March 2023. It is yearly information given in the question. So they haven't mentioned it is per month. That simply means it is yearly always. So Dearness Allowance. How much is DA? 15,000. Then commission 10,000. Then entertainment allowance. How much is the amount? 4,000. That is fully taxable, but you can claim a deduction. Deduction should be claimed from the gross salary. While computing gross salary, you have to add that 4,000 entertainment allowance with the salary income. Then medical expenses reimbursed. What to do with that? If the medical expenses incurred on employer-owned hospital, not taxable. If the medical expenses is for prescribed diseases, not taxable. Then government-approved hospitals, not taxable. Like local authority hospitals, etc., not taxable. They haven't mentioned anything. So it is some other medical expenses. So 25,000 is fully taxable. No, for this, they are simply saying some medical expenses. So you don't have to write a note, but if you write a note, it will be good. If you didn't write a note also, there is no problem. Now, professional tax paid. So professional tax paid, they say 2,000 is the amount. 1,000 was paid by the employer. So what to do with that? 1,000 have to be treated as your taxable perquisite. Thereafter 2,000 you can claim it as a deduction. So professional tax by employer. The amount is 1,000. Then there is nothing more. So tell me how much is the total of this? Total of this. Under that there is one more thing. Mr. Goyal contributes 5,000 towards recognized provident fund. That means employee contribution. Then what to do with that? That is deductible under 80C. Since they are asking only us to compute the gross total, compute the income from the head salary, we don't have to do any adjustment. So tell me how much is the gross salary? 95,000. From that you can claim what standard deduction first? That is 50,000. Then for entertainment allowance, since he is a government employee, you can claim entertainment allowance deduction. So how much is the deduction? So entertainment allowance either 1/5 of basic salary or 20% of basic salary. That means how much? 8,000. Or actual entertainment allowance received. How much is the entertainment allowance received? 4,000. Or rupees 5,000. Whichever is lower. So which is lower? 4,000. Then finally professional tax paid. How much is the amount? 2,000. So after these three deduction, how much is the taxable income from the head salary? Taxable salary should be 39,000. That should be the final answer with the limited adjustments in the question. I hope it is also clear. So by that we can say we have solved the problems in relation to PQ, perquisites, then deductions and other commutations. We have solved limited number of questions from the head salary. I hope till now it is super clear. So we can say that salary head is officially over.
To purchase recorded lectures and textbooks, visit our website www.cajoscurian.com.